why it matters and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. You're watching live from the NDTV Profit headquarters in Mumbai. This is India Market Open.
Good morning and welcome to India Market Open with me, Neeraj Shah and Hiral Dadia. And it is a day, viewers, which is packed with news flow. And news flow which at the margin is positive for the markets. But just look at the news flow on the AI side, aside of course, what's happening on the global markets per se, Hiral. But NVIDIA's numbers, Samsung reaching a deal with its union.
Just before the strike.
SpaceX filing for its IPO, so not exactly AI, but global behemoths, I mean, right? And the news flow around
OpenAI.
And OpenAI, plus Trump comments, plus oil prices, plus results to tackle with. It's a packed morning.
Is it a terrific Thursday?
Terrific Thursday. That's a good way to put it.
Do you think it's a terrific Thursday?
These days we are so tuned to being cagey about things both on the upside and the downside that you would say, let's take it a day at a time. Today may be a terrific Thursday. Will it translate into a fantastic Friday? Remains to be seen.
Absolutely. Or is it going to be the Friday the 13th kind of a moment again? Either ways, we don't know. But, it seems from implied open rates as well that bulls probably are hoping for something positive. How sustainable is that going to be is anyone's guess. If you see implied open, 125 points up move is what you're seeing. But in terms of global, cues that we're picking up so far, first up, if you have to look at Trump commentary, that is becoming interesting because they've said that final stages is what you're looking at in terms of where the Iran deal goes, and because of which you've seen that Brent has actually fallen quite sharply. If you see in terms of what's happening to crude, it's nearly slipped 6% in terms of overnight trade. So that is one of the positive cues that we have been tracking as well. US bond yields, that is interesting. They have actually come down by almost 10 basis points. So that is another positive indicator that we should be looking at overall. In terms of the risk-off sentiment, that has reduced as well in terms of where the Iran deal optimism goes. Before we talk about anything else, let's quickly listen in as well what Trump had to say in terms of the nuclear aspect when you're talking about Iran.
We will not let Iran have a nuclear weapon. That's all. It's very simple. We will not let that happen. And we have great support. You wouldn't know that by reading the fake news, but we have great support. People don't want them to have a nuclear weapon, and they will not have a nuclear weapon, and they want to make a deal so badly. We'll see what happens, but we hit them very hard, but we may have to hit them even harder, but maybe not. But we're not going to let Iran have a nuclear weapon and blow up the entire Middle East, Israel, the entire Middle East, and then come here for you.
Okay, so that's the ultimatum, no nuclear weapon. And they're saying that probably this could be the end of it as well. But let's see where it goes. Apart from that, you have Fed FOMC minutes that have come in. And what's interesting over there is that they are saying that rate increase that could be warranted this year. And majority have seen a hike likely. And this is if inflation persists going ahead. In fact, some have been concerned with the inflation expectations could actually de-anchor from here on. And vast of the majority at the Fed have said that the inflation could stay elevated for a longer period of time. In fact, inflation, war, both of these could actually mean a longer rate hold. What this would mean for the US and for emerging markets is the key question that we will take with our guest next. But apart from that, NVIDIA, strong numbers that have aided the AI rally globally. As Neeraj was mentioning, you have the SpaceX IPO that has been filed. OpenAI has been preparing to file an IPO. So lots happening there. Asian markets are up also after 5 consecutive sessions of fall. And your rising global yields have somewhere cooled off. So that is a positive as well. In terms of the gold trade, it's pretty much sideways in the back of the geopolitical development. So that impact you're seeing in terms of silver and gold as well. In terms of US markets, if we can just quickly pull those up in terms of how they ended, gains of nearly 1.5% in terms of Dow Jones, S&P 500 as well as NASDAQ. If you see in terms of what's happening on the future side as well, you're seeing a mild cut of 1/10 to 0.2% coming in on Dow Jones, S&P 500 and Nasdaq. But clearly we've ended higher. And if you look at the translation into Asian markets as well, if you pull that one on the screens, all of them, Nikkei is the one, Alex, to see 3.5% up move coming in there. And still that positivity of what? 0.3 to 0.4% coming in terms of Hang Seng and Shanghai. So there is that translation happening.
Yeah, but even Kospi, because of Samsung reaching that deal with the union, I think Korean stocks have gotten that bit of an additional fillip. So the mood is clearly very, very sanguine.
Absolutely. A positive move, Neeraj. And I think the question from here on is, should everyone look at bond deals with a positive view right now? Will that downtick that has happened today sustain, or again will we see that spike?
Well, maybe let's ask some of the experts who are going to join on the show today. Let's start off the show with William Lee, Chief Economist and Managing Director, Global Economic Advisors, joins us right now on the show. William, great having you. Thank you so much for taking the time out, and good morning to you. Well, are indeed bond yields proving to be the lead indicator of some action from various leaders? Because almost every second commentator has spoken about it. With yields being so high, there has to be some resolution. What bond yields the lead indicator?
Well, the interesting thing about bond yields is that the rise in bond yields reflects the rise in near to intermediate term inflation expectations and not real interest rates. The real interest rate, the inflation adjusted Treasury yield on, say, 5-year Treasury tips has really been rock solid at about a little bit over 1%. And I think that's a really indication that the markets themselves are not pricing in a real effective higher cost of capital going forward. And these inflation expectations are actually contained within a 5-year horizon. And if you look at inflation expectations beyond that, they've actually been very steady and much lower than they are for the initial 5 years. So the crux of all this is that inflation expectations remain well anchored. It's unlikely Fed policy will be needing to tighten, because the one thing that they do worry about, and why they would tighten, is because inflation expectations become de-anchored. There's no evidence of that. So I think all this talk about possible rate increases is a lot of malarkey and clickbait for people who just want to get attention. The minutes that were released at the FOMC today really had no news. We are hawkish elements on the FOMC are asserting themselves. They try to make the transition between Powell and the new chairman Warsh to be a smooth transition, in the sense that they want continuity in policy. They don't want the new chairman to come in and have an abrupt change in interest rate policy. And I think the hawkish sentiment of the FOMC reflects that kind of sentiment of wanting the new chair to behave in a way that is similar to what Chair Powell's been doing up till now.
Okay. William, good morning. This is Hiral on this side. You did mention with regards to, it seems that the minutes are saying it's a non-event, but when officials are saying that inflation and war could mean a longer rate hold, what is the indication that you're getting over here? I know, they are continuing to stay hawkish right now, but what is the need of the hour according to you versus the way Fed is planning to react?
Well, regardless of how the Fed reacts, the markets are not treating it as a very serious risk, in the sense that whatever hold period is until we see another rate cut, that holding period doesn't seem to be affecting what equity valuations are doing. So I personally expect that interest rates will not change until next year. And I think the next direction of change will be down, because as the price spike works its way through the economy, we'll see that the disinflationary momentum that comes from the AI and technological change, the huge productivity gains that we've had over the last 3 years, will be a disinflationary force that'll start to kick in and show up in the data later on toward the middle of next year. So I think if we wait through this phase, which Chair Powell has warned us about, that tariffs and energy shocks should work their way through within the next 3 to 6 months, then I think that's the kind of holding period that the FOMC itself is waiting for, to make sure that we don't have any surprises. Certainly the markets, as I mentioned earlier, market expectations are pricing for that kind of event.
Okay.
William, if the conflict were to end shortly, and nobody has an answer to that, to be honest, but let's work with the hypothesis that the yields force the hand, and some resolution comes in because both sides frankly want it, right? And crude prices come off, etc. Could we see a tilt of money start to flow towards the markets that are starved of it because of higher crude prices? Can that happen, or will the market still gravitate towards the AI and semiconductor-led players?
That's a great question, and I think what we've learned from the energy market supply chain problems and the COVID supply chain problems is that the world wants to have replicated and secure supply chains. I think that's the one thing that we know the world needs and the world wants. And I think the investment money, investment flows will be going into ensuring that we have safe and sound supply chains, whether it's replicating them or ensuring their security. And I think the best way to do that is to have the most productive economies possible, and that's also the AI trade. So my answer to you is money will be flowing to ensuring supply chains and their security and soundness, but I think the place where most of the money will be going will be making the economies as productive as possible to make use of whatever supply chains there are. And then I think the AI trade represents the best chance for getting those kind of productivity gains, not just in advanced economies like the United States, but also in emerging economies such as India.
Okay, William, continuing with the AI conversation, how are you seeing the structural AI impact from an economy perspective? Because there is a productivity paradox that is playing out over here. There is a deflationary force that everyone is talking about. The question is capex sustainability as well, and the impact it could have as an economy. How are you looking at that angle?
The one thing that we know about the productivity gains that we've seen so far is that they have not been because of AI. In the United States, for the last 3 years, productivity has been unusually high, and that's because of the technology that's been put in place, excluding AI. AI is just about coming online now, and I don't think we're going to see the benefits in the data for another year or so. I think going forward, we know that the infrastructure spending and the compute spending, the amount of money that the big giants of Google and Microsoft and Amazon are putting into building their infrastructure in order to generate the number of tokens that are needed for the AI revolution, that is something that will show up in productivity gains in the next 2 to 3 years. But if we don't put the investment in now, I think we're going to cede the leadership in the AI race to China. And I think Jensen Huang essentially has said exactly that. If we don't have a real competitive force in the West to offer an alternative to what China's offering, because China has all the ingredients in place. They have low energy costs, they have massive spending on AI infrastructure, and they have an enormous amount of data. In the United States, my real concern is that there's a pushback against AI because of the fear of losing jobs. And I think the political sentiment is one where we might find opposition toward the investments that companies are putting into AI. And that actually might be a drag on the ability of the West to compete with China.
Right. So this is going to be interesting to see how the AI play actually pans out with the impact. But yes, everyone is hoping that there could be some resolution. But thank you, William, so much for joining in. Always a pleasure to speak to you and understand the impact of everything that's happening around the world. But before we just quickly go to, look at what NVIDIA has done and the impact, let's just address Adani Power. They've just reported where they will be acquiring a 24% stake in Jaiprakash Power Ventures, and they will be acquiring the JP Associates stake in JP Power Ventures, and this is for around 2,994 odd crores. This acquisition is for 180 megawatt thermal power plant in Chirk for almost 1,200 odd crores. And this follows, the Adani's broader NCLT approved resolution plan for JL as well. So clearly, 24% stake of JPVL held by associates for 2,993 odd crores in an all-cash deal. That's what we're picking up with regards to Adani Power as we speak. But moving on. Neeraj, interesting data points coming in when it comes to NVIDIA. I mean, revenues, 85% year-on-year growth, 20% sequential growth, I mean, record data center revenue at $75 billion. You're talking about a guidance of $91 billion is what they've given for the second quarter. And this is, the street was expecting around $86 to $87 billion. So that number has also come in ahead of the guidance. And they've raised, excuse me, the dividend by 25 times to $0.25 per share. And a confidence signal is what they've given. They've announced an $80 billion additional share buyback program as well. The question is, what would this actually mean for Indian IT, right? Because everyone is waiting. There's usually a lag. The moment something like this happens, a quarter or two down, you will see that impact actually being baked into Indian IT companies. Clearly, from what we read is that the global AI spending cycle has not shown a sign of slowdown. So that is one of the positives that you should be looking at. Hyperscalers are spending aggressively, which is positive for Indian IT deal pipeline. And more cloud spends could lead to more migration and AI work that could come in for Indian IT companies. The large and mid-cap IT services will remain in focus on the back of this. And you have Anantaraj, E2E Network and Blue Cloud, because these are the infra beneficiaries as well on the back of this. So I think this is going to be an interesting one. Anything, Neeraj, that you've looked at in terms of NVIDIA which you liked?
Yeah, I mean, no, I mean, largely okay. It's just interesting that it's the fourth straight quarter, Hiral, wherein the stock is sliding post its earnings delivery. So that is one. I don't know if there is too much of this thing. I mean, we have very few direct AI plays, right, per se. So in some sense, I don't know if there is really excitement. But the one thing that you got to think of is that Jensen Huang himself has said that the demand has gone parabolic because agentic AI has arrived. It's here and now. And maybe that is the way to play in India. It's a small way to play in India, but maybe that is what is. In fact, speaking of Jensen Huang and what he says, he spoke about the robust demand seen during the quarter. Hear it from his own mouth as to what he had to say.
This was an extraordinary quarter. Demand has gone parabolic. The reason is simple. Agentic AI has arrived. AI can now do productive and valuable work. Tokens are now profitable, so model makers are in a race to produce more. In the AI era, compute capacity is revenue and profits. NVIDIA is the platform of this era. Of all the platforms in the world, NVIDIA Compute supports the richest diversity of demand. Let me highlight my top 5 things. First, NVIDIA is the only platform that runs every frontier AI model. With the addition of Anthropic to our existing partners, OpenAI, xAI, MetaMSL, Gemini, and many others, our share of frontier AI is growing.
AI is growing, and that's what is seen in the numbers as well. The impact on Indian IT is something that everyone should be embracing for in terms of today's day of trade. But overall, in terms of markets, you have indices which actually staged a sharp intraday rebound after touching an intraday low of 23,397 in the first hour of the trading session. In fact, we recovered nearly 250 points from lower levels and eventually managed to close above that 23,600 mark. There is buying interest which is emerging at lower levels, so which is a positive. However, crude oil prices is something that you should be seeing because there is that cooling off that has happened from higher levels. 5 to 6% is the kind of drawdown that you've seen there. In terms of the Indian rupee as well, that is a concerning area where the rupee has remained under pressure and continues to depreciate. Now, the question over here is, with the RBI that will be coming in terms of stabilizing the rupee, how will that work? Because they've announced a $5 billion dollar rupee swap on the 26th of May. In terms of Bank Nifty, they've witnessed a strong pullback, and this is after a gap down opening and closing near the day's highs. In fact, second time in the last 3 sessions where Bank Nifty has actually rebounded from the key support area. So there is that buying demand at lower levels in Bank Nifty as well. In terms of sectoral indices, you've witnessed a mixed trend. There has been buying interest largely seen in Nifty oil and gas, auto, real estate and banking, whereas media, IT and FMCG have emerged as laggards. Broader markets, again, they've ended on a positive note, wherein the mid-cap index gained around 0.5%, while the small cap closed marginally higher, probably I would say actually flat in terms of yesterday's session of trade. So interesting moves there. I think 2 highlights for me over here, Neeraj, for today's session is, 1, will the rally be led by Indian IT companies? And 2, the way Kush has been mentioning, the buying interest in Bank Nifty, I think at lower levels that has started to emerge.
Yeah, I mean, you could argue that today all of that seems prophetic, right? Because the gap up is certain today. I mean, we will see a gap up. The rest, though, for today and tomorrow would depend on global momentum. And you have to admit that that is what will either carry the markets higher or bring the markets lower. So watch out for what Europe does today. Because the US futures, as we said, are actually very, very flattish. So it will be interesting. But crude has come off, and therefore there is that optimism for Indian markets for sure. I think most participants would view this as a relief rally without heavy buying unless crude sustains lower. These days we've seen that cool off followed by a rapid climb up again, and I think the markets would be wary this time around. But if crude stays lower, then that's the big relief, the big up that we would want. Keep in mind, the Nifty is no longer at 24,500. The Nifty is circa 23,500-ish, plus minus 100 points here and there, and therefore that range is actually pretty good for buying to emerge. I do think, though, that the steel stocks may start to weaken a bit because there has been a sharp correction in rebar prices. And the expectation is that with monsoon coming in, the other prices also will come off. So therefore, keep an eye out for steel stocks. Even though there is optimism, at higher levels, you might see some selling in that bucket. But clearly, the cohort of the day today has to be the oil-related names, and you'll probably see Interglobe Aviation, oil marketing companies, paint companies be the top decile of the winners list today, both on the Nifty as well as the broader end of the spectrum. So you got to keep an eye out for that for sure.
Yeah, so that's with regards to where, the setup goes in terms of factors. Again, is an early sign of a trend shift where we've seen a robust 260 points intraday recovery from the support floor. However, the broader structure is still cautious because Nifty has remained below all key EMAs and the momentum indicators are still negative. Resistance 23,695 is what you should be tracking firsthand, and support 23,470 as well. The 23,800 mark is the line in the sand, and it's reclaiming it. The triggers, any reclaiming from those levels should trigger a short covering rally towards 23,900 and then 24,000. If it fails to breach these levels, then this will keep the index range bound, and a break below 23,400 will trigger a fresh panic selling. Again, Bank Nifty as well, it snapped its losing streak and it's closed near its day's highs as we mentioned. So resistance is 53,655 and support is coming in at 53,040. And it's, in a classic buy on dips consolidation window as long as it holds above the 53,000 mark. So pullback targets look towards 54,000, 54,500, and a break below 53,000 shifts the target to 52,500 as well. So that's with regards to where, the trade setup and the factors go. But Neeraj, an interesting note by Mahesh Nandurkar from Jefferies as well that we should be looking at, where he's saying that not CAD, but the all-time high low capital flows is the culprit for the rupee pressure. And the equity market has been driven outflows that have accounted for $78 billion over the last 2 years. There is strong domestic flows, which is providing an easy exit to the foreign capital, escaping an expensive market. And the potential valuation correction or the AI trade unwinding or even Hormuz opening could actually stem these outflows. And past the rupee depreciation episodes show a turnaround possibility from here. The real effective exchange rate at 91, that is a 9% undervalued rupee, provides comfort, and historically, it's actually the rupee that has rebounded from such levels. If you're talking about the RBI's foreign exchange reserves at $597 billion, and this is adjusted for a $100 billion forward short, it provides a 9-month import cover, which is below average but still substantial, and they're expecting the rupee to move to 93 to 95 per dollar over the next 12 months, assuming Hormuz opens soon. So again, your base is still getting formed at 93, 95 over the next 12 months. That's the key for me in the end.
Yeah, well, let's see. Giving out numbers these days seems to be really, really difficult. But let's play it by the day, right? And therefore, let's try and talk about what could be today's key assessment. And Let's get in Puneet to talk about what the derivative picture might be showing today. Puneet, good morning.
Good morning, Neeraj. And it's been a very interesting session yesterday because while we started off in the downtick as the implied open indicated, a 200-point uptick, recovery in that sense throughout the day, and we're back above the 23,600 level. So while we've been highlighting that there haven't been any triggers and market seems to be sluggish and that all might be true, yesterday's move we'll just take with both hands at this point of time. So 23,650 is where we're at with the implied open suggesting today could go closer to that 23,800 mark, that psychological support as well as a support for the long term as well. While the bank nifty has been sluggish, continues to be so, we await macro factors that could trigger in the next leg of rally or change in mood for valuations for the private banks could be something to watch as well in the medium term though. When you also look at foreign investors, cash market was being sold into yet again. The F&O long positions also just a tad below 12% isn't the strongest and almost 8 to 9% down versus what it was in terms of April and the longs being built there. Put call ratio stays stable as yesterday. And in terms of open interest distribution, 23,500, 23,800 continues to be two levels that we watch, both for the longs as well as for the shorts at this point of time. And stock specific action, three key ones. You've seen within the open interest gainers, actually, PI Industries and PB Fintech as a couple of one where shorts being built up on PI Industries post week quarterly numbers. For PB Fintech continues to be in focus, but open interest is very minuscule right now to form a trend. But for the losers, you've seen the open interest actually be much higher than the gainer. So 20 to 35% change in open interest. Longs being unwinded for 4 out of those 5 counters. HDFC Life continues to see selling at every rise that it has seen, while BHEL saw covering of shorts in yesterday's trading session. So overall, very, very stock-specific market where results being reacted and news flows are also being reacted much harder on the negatives compared to the positive sides. But that's the set of F&O setup for today.
Okay, well, we will watch out for some of those levels. In fact, let's get in our experts in about 5 minutes from now to talk about some of those levels. But before that, the key stocks on our mind. And I'll start off with Whirlpool, not the best of starts today, unfortunately, because it is a big miss. The revenues were up 7.4% at 2030 crores versus 1890. EBITDA down 40%. Margins 410 basis points lower at 4.9 versus 9%. Net profit down 39% as well. It was not a good quarter for this company, unfortunately. And the point about Whirlpool is that the margins and profitability were compressed due to higher regulatory costs, such as additional e-waste provisions, energy transition expenses, etc. The further impact of commodity inflation arising from geopolitical or war-related disruptions also came in, and it trades at about 29 times FY27, so it's not cheap. Bear that in mind. Samvardhana Capital had a forgettable quarter, unfortunately, while there has been some upgrades to their rating numbers. But I think these numbers and the net loss, despite the write-offs expected, was a bit more than anticipated. So maybe, just maybe, some bit of a corrective move despite IHC's presence there. Watch out for that. Apollo has a deal and has numbers. I think the deal is net neutral, so I'm not going to spend time there. The numbers, the revenues were up 18%, EBITDA up 25%, margins at 15.3 versus 14.4, net profit up 36%. Their guidance remains strong. I would suspect that this expensive hospital stock could actually see some further momentum buying, not from a trading perspective, but I doubt that there are any large chinks in the armor for Apollo. So keep an eye out for that one today.
Okay, so in fact, the management will be joining us at 9:40 as well. Neeraj will be in conversation, so this is going to be interesting to see what the outlook is looking like. But on my list, Arvind Smart Spaces, that's on my list. The revenues are down 4.5%. EBITDA has seen a sharp uptick of around 76%. In fact, the margins have also improved substantially and the profits have grown 120%. In fact, this is the highest ever annual booking value that they've seen, and Bangalore has remained a key growth engine for the firm. Strong collections is what has translated into this massive net operating cash flow, and new projects have added immense medium-term growth visibility. So that's a thumbs up coming in there. The second one on my list is Metro Brands. A 20% growth in terms of revenues. Your EBITDA also is similar growth. Margins have improved marginally and the net profit has seen an uptick of around 23%. It's the festive and the wedding season demand that has driven this strong performance, and e-commerce and omni-channel sales have grown by 53%. They expanded their retail footprint as well with new store additions and new warehousing space to improve supply chain efficiencies. Lastly, Aditya Birla Capital, they've approved a 4,000 crore equity capital raise via a preference issue. Now, 2,880 crores will be backed by Grasim, that's the promoter, and 920 crores by IFC, along with a 200 crore by Suryaja Investment, that's Aditya Group entity itself as well. On this, brokerages, you have Morgan Stanley, which has maintained an overweight for a target price of 408. What they're saying is that the post-money overall shareholding dilution is 4%, and the promoter shareholding will actually improve to 68.9% pre-money. The fundraise from the promoter and IFC is a positive outcome for the stock as it prevents potential stock supply, and its attractive starting point of valuation makes the risk reward also very attractive. Jefferies has maintained a buy and they have a target price of 425. They're estimating the equity infusion to be around 2%. They're saying this will be EPS accretive and 11% book value accretive as well. And the ROE dilution should be around 140 to 130 basis points for FY27 and 28, and the accretion to SOTP valuation should be around 3%. They're expecting the standalone Tier 1 capital will rise to 15.7% from a 13.8% in FY26. So these are on my list, but another stock apart from this that will be in focus is Ola Electric. You saw the way the numbers have come in terms of yesterday's session. The company's Q4 has shown a mixed trend with losses getting narrower, margins improving, but a sharp fall that has come in. I think, if I'm not mistaken, the revenues have almost halved. Let's quickly listen into what the management had to say in their conference call.
Our free inventory days is actually down to 3-4 days. So, and we have an order backlog now. So the company is highly focused on ramping up the supply chain quickly enough so that we can fulfill these orders, the backlog also. And I actually expect as we improve our delivery timelines, volumes will go up another 10-20% in the near term. So very good signals from the demand growth in the market for EVs. And we are well positioned to capture it without any incremental capital required.
Looking ahead to Q1 27, we expect 40 to 45,000 orders and consolidated revenue of 500 to 550 crores, nearly double of the Q4 level. As volumes recover, we expect the auto business to move towards adjusted operating EBITDA and cash flow positivity through financial year 27.
Okay, let's go across to Puneet though for the brokerage views on the stock. And Puneet, very quickly, 10-15 seconds, you've been tracking this so closely. What did you think of it?
Well, most certainly it's a little difficult to track at this point of time, given that the net losses is almost double of the revenue that they're reporting. So the volume picture, how do you estimate for the next year, right? And I think that's where some brokerages, while giving their view, also seem to be struggling. So a lot more takeaways taken from what the management has said, and where the gross margin did rise in this quarter by 400 basis points. It was largely led by the PLI impact in this particular quarter for the Gen 3. Monthly delivery trends at 10,000 scooters in April is something to watch. They are estimating 15,000 in May, so that will be one key takeaway, and increasing it to 17 to 18,000 in the month of June and July. So I think those were some of the key takeaways. But Citi, has and most brokerages have actually maintained their sell rating or the rating that they have, and just tweaked with the target prices. Citi has actually maintained sell. Target price continues to be 26 versus 22 earlier. And for them, of course, the results were below the estimate. Leverage is still lower, but they are looking at sustained volume growth because a lot more capacity will come in the second half for the other players. And that's what MK highlights. They've also raised target price to 25 versus 20. And they feel that there will be a lot to watch out for in terms of management's volume growth guidance, because TVS Bajaj are raising capacity. Ather is putting a new plant in Sambhaji Nagar. So while the next few months might show some trend, overall they're still anticipating Ola to be under pressure, and largely the volume uptake won't come through. So it's essentially what you're seeing is conviction on the management commentary rather than on historical evidence at this point of time.
Absolutely. Thank you, Puneet, for that. Nothing changes for a shareholder because the stock is still trading at around 35, 36. The target prices of the brokerages are in that range of 20 to 22. So there is pain that continues. But we'll quickly slip onto a short break on the other side. We'll get you top trading strategies for today. Please stay tuned.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Welcome back to India Market Open. The green shoots that have emerged already in terms of markets today. 104 is the implied open that you're seeing right now. But let's take this across to Parag Thakkar and Kush Bora. Good morning and welcome to NDTV Profit as always.
Good morning.
Kush, I'm just seeing you very happy today because last 2 days we've just been nagging you with regards to kya hoga Bank Nifty ka, kya hoga, and now you're seeing that buying which is coming in at lower levels, right? What are you seeing from here on? I mean, is this something which is going to be sustainable this week, probably getting into next week as well?
So first up, a very good morning. I see you Bank Nifty and I raise you Nifty IT as well. Okay. Had it been a pair trade, it would have been a killer trade just yesterday. Just yesterday. Sirf ek hi din ki baat hai.
The viewers would have got it from you.
I hope so. I hope so. No, but I don't want to get too excited because this is just the first day of both those trades playing out right. In the sense that, Bank Nifty did well and Nifty IT just consolidated. Not to say that it can't do well. It's just that I've mentioned like 29,600, 700 thereabouts is the level where it needs to cross to get into a positive momentum. But to talk about Bank Nifty first, that since that seems to be the theme for the last couple of days and today at least. An impressive recovery of about 800 points from the lows. So you'll take that. Mild outperformance versus what the Nifty's done. And mind you, all of this despite HDFC Bank and ICICI Bank not doing well. So everything else is just pulling its weight and helping the Bank Nifty move higher. Now, we've been talking about technical indicators, how they do seem to suggest some sort of a rebound that's played out in price action also yesterday. So I think it's not a bad idea to play that long trade now on the Bank Nifty with a stop loss at 50 to 700, 50 to 800, that level where it's rebounding from a couple of times. Also happens to be the 61.8% retracement, by the way, of the April rally that came about. So yes, you can play positional long on Bank Nifty, like I said, 50 to 700, 50 to 800, on the long side. 54, 400, 55, 500, these are your targets on the long side on Bank Nifty. Nifty, you can get a good up move today. Perhaps it might even cross that 50-day moving average that it has been resisting for a while. But I really wouldn't be too gung-ho because the FI participation is not as encouraging. Broader markets, very, very exciting, but not as encouraging in terms of the FI participation on Nifty. So be a little cautious. If I do get this kind of a gap up, you might want to perhaps book profits if you're carrying longs from yesterday and buy on dips. So, again, closer to about 25, 600, 700 thereabouts is where you want to buy because the resistance of 800 will still act up. So buy on dips on Nifty. Bank Nifty is where you can consider that positional bet.
It kind of ties in with what I said in the morning, Kush, in some sense that people will not view this bounce as a bout of heavy buying unless crude sustainably stays lower. So you would want to see that because quite often in the last couple of months, crude prices have come off and then bounce back. So I think people would want to be a bit fleet-footed and swift in their trades. So therefore, does the plan of bottom-up trading continue? My question to you is therefore that if the Nifty were to start off 100 points higher and not dramatically higher, would you rather take a limited capital that you may have for trade on the Nifty or would you trade specific stocks? And if it is stocks, then what are those stocks?
Neeraj, I think for a while, the bottom-up trade is going to continue. Let me also just extend this discussion a little bit, right? Even if the war were to end today, right, you would see a bump up in the markets, but then the realities of what Q1 and Q2 will, throw up will set in. And of course, you, Parag Bhai, Hiral are, better place to, of course, discuss that. But I think that reality will set in. And after that bump up, you might have a sideways consolidation. And hence, bottom-up approach for the markets, I think, will be the theme for the next 3 to 6 months, if not more. So that could, very well, be how it plays out. And time and again, we've heard the war is about to get over and, things like those. And that hope comes up again and only to just fizzle out. So let it play out is my point, right? As far as stocks go, I'm playing it on all on the long side today as well, given the kind of undertone that the broader markets have. So Autumn Investment, SG Mart and GAIL, Gujarat Exports. So these are the three stocks that I have on the long side. For Autumn, 520, 535 are your targets. 495 is where you keep that stop loss. SG Mart, 638, 650 are your targets. 605 is where you keep that stop loss. And GAIL, 170 and 176 are your targets. 159 is where you keep that stop loss.
Okay. Parag Bhai, are you, these days we don't know what is definitive, what is not, but there seems to be some green shoots today because oil prices have cooled off the comment. And maybe the yields were the factor that is driving everybody to do this.
That is also down 8-9 bips.
Yeah, but is the risk reward in the favor for making a slightly longer term fundamental bet right now or would you wait?
So no. So what we have done in our portfolio is in our PMS is very simple. Buy leaders and under leveraged companies who are managing their operations very efficiently across the sectors and keep some cash. So that is what best we can do in this kind of uncertain times. For example, Grasim is for 9% of our portfolio, 9 to 10% in fact.
You must be a happy man today.
Yeah. So Grasim did brilliantly. Their paints business grew 52% YOY. Their B2B pivot, Birla Pivot, grew 100% YOY, and now that will get back to profitability with 8,000 crore revenue. And imagine, see, one thing is that Grasim is just a 2 lakh crore market cap company. You're getting 56% of Ultratech, which is the largest and most efficient cement company. 52% in AB Capital, which is growing at 25%. So financial services. So I would say that now you are getting a third largest player in paints, which is now towards a glide path of profitability. So I would say that Birla Pivot, which is a B2B platform, VSF business, where Chinese capacity utilization has touched 92%, which means prices are going to go up. EBITDA per kg improved this quarter. So I think you are getting so much and it is so undervalued in my view that Of course, people are busy buying Kospi today. So it is up 7%. Taiwan, Japanese.
That's because of Samsung.
Semiconductor and AI chips is the flavor of the day. But here in India, what we get, we buy. So this is a clean value buy like Agrasim. For example, if crude oil decisively goes down, then I completely agree with Kush. Bank Nifty will move, led by ICICI Bank kind of stocks, where up till now there is no visible sign of any NPA stress building up. And if now situation changes, definitely a stock like ICICI Bank, which is completely depressed, can give a very good returns. But from medium to long term basis. And as you rightly said, crude has to settle down lower.
And when you talk about Grasim as well, it's interesting to see Jefferies, they've gone ahead and hiked the target price to actually a 3,600 from a 3,440. They've maintained a buy. What they're saying is that the improving standalone business is what is driving the strong exit in terms of FY26. And, strong performance when you talk about the business that was driven by mix efficiencies and low pulp prices. Citi has also maintained a buy. They've also hiked the target price to 3,600. So both Jefferies and Citi have a target price of 3,600 on Grasim. And what they are indicating is that the holdco discount should keep narrowing from here on as paints volumes profitability rise, and this is mainly on elevated dividend from Ultratech. So both of these notes are indicating some bit of positivity, as Parag Bhai was mentioning as well. But moving on, the Supreme Court has reserved its verdict in the Yes Bank 81 bond case involving the write-down of 8,415 odd crores worth of bonds during the lender's 2020 rescue. Now, for more on the legal battle and its implication for the banking sector, let's get across to Piyush. Piyush, good morning. What are you picking up? One, if you could give us an explanation on what has actually happened and the implication for the banking space.
Absolutely. Good morning, Hiral. This is a very important development pertaining to Supreme Court actually reserving its verdict on Yes Bank 81 bond write-down case. Now, what had happened in 2020? The Yes Bank had to write down 81 bonds amounting to 8,415 crore rupees. Now, this was necessitated because the bank had sort of become unviable, and the institutional and HNI investors then and mutual funds, they tapped the courts claiming that they were missold the 81 bonds. Now, Yes Bank on its part said that it is writing down these bonds in compliance with the existing regulatory and government rules. Several banks do that in case of unviability, and the then resolution professional had actually approved this write down. Now, what are 81 bonds, Hiral? 81 bonds essentially do not have any maturity date, although lenders have a call option typically after 5 years, 10 years. Now, these bonds offer really high yields, but are also risky because in cases like these bonds simply get written down by banks. Now, why did Yes Bank had to write down 81 bonds? As we are aware, Yes Bank has seen a cycle over the last 5-6 year period. In 2019-20, we saw the bank reporting massive losses. In fact, the bank had reported net loss of rupees 18,560 crore in Q3 FY20, which is likely the highest net loss posted on a quarterly basis by any institution. And this was on account of the bank recognizing a lot of bad loans and the new management, aggressively providing for such bad loans. The bank was forced to write down 81 bonds, saying that it can't actually pay out this high yield and such high amount of bonds, and the RBI had to step in because the bank was in a precarious situation. The RBI and government approved the Yes Bank reconstruction scheme, under which a host of lenders led by SBI actually came in. SBI was the lead acquirer. They picked up around 65-70% of the stake in the bank. Lenders including SBI, ICICI, HDFC, all the top guys, Kotak, IDFC, they cumulatively put out invested around 10,000 crore rupees to rescue Yes Bank. This is a little bit of a background.
So we will have to watch out for what the verdict comes in as well. Absolutely. In terms of the case. Thank you so much for joining in, Piyush, and getting us the details. Parag Bhai, any view in terms of the 81 bond case?
I'll have to look into this. I remember this issue was there with Yes Bank, but now I think that must have been completely provided for. But I'll have to see into this issue.
Okay. The other one I want to talk to you about is AB Capital. A 4,000 crore fundraise is what they're looking at. Yes, there is some amount from the promoters. You have IFC also, which is coming in. Brokerages are saying this is going to be a positive move from here on. What is your read into it, and what does it do in terms of valuations?
So basically, see, first of all, Grasim itself coming in and putting in 2,800 crores out of the 3,900 crore dividend which it received from Ultratech is a vote of confidence. That even at this price, remember when Vishakha Mule was hired, the stock price was 100 rupees. And that time it was a thumping the table buy for me. Now it is 358, and here promoter is putting in 2,900 crores. So it is a huge vote of confidence. And it's a compounder, so I think 20-25% growth will continue. Plus, remember, in this, while I was speaking about Grasim, through AB Capital, actually you are playing what? NBFC, which is lending business, housing finance, you are playing mutual fund business, AMC business, and you are playing insurance. So it is all bundled into AB Capital, and where Grasim has 52% stake. So and they are not ready to dilute their stake even at this valuations. Even after the stock has more than gone 3.5x after Mrs. Vishakha Mule took over. So it's a huge vote of confidence, and so of course I don't own AB Capital as of now. I play it every.
I was about to ask you, which Kumar Mangalam Birla company that you don't own?
So I'm playing everything through. I own everything else through Grasim, and Ultratech is a different. So both put together is around 12% of my portfolio.
Okay, so
but Grasim is 9%.
Okay, so Grasim again, AB Capital again, there is value. Kush, we've discussed Grasim, AB Capital, we've discussed Yes Bank right now. Anything that you like on the charts?
So I think Grasim is on the cusp of a breakout. I do agree with the target that was mentioned a while ago of 3,600. Even if you see technically, the breakout level is this 29.50 thereabouts. So if you do get a bump up, and it sustains above that, from a technical standpoint, also another 500-600 points of rally positionally is very much on the cards. In fact, just about a week or so ago, we did give a call on Grasim with a target of about 3,000 plus. So that could well be hit today. But you should continue holding on to this. Trail your stop losses on Grasim far from overheating. So the structure is very, very comfortable, on this one. AB Capital has an immediate resistance, but even that is at 370. So if today you do get it close to that level and you've bought it at lower levels, you should perhaps book profits. But it's gone into a long consolidation phase since December. So close above 370 will put it in a different trajectory, and that's when you can consider a long. For now, around 370, I would suggest a profit book. Yes Bank, avoid.
Okay, so that's the view coming in there. Very quickly, let me go across to Somit Sarkar with all the chatter from the dealing room. Somit, what do you have for us today?
Be quiet. The first stock on the list is Godfrey Phillip. Now, it was a stellar fourth quarter numbers plus price hike is expected to aid earnings even going forward. But the buzz on the street is that there could be a potential block deal very soon here. Now, 15% of promoter stake is expected to change hands. It will most likely be an intersay promoter transfer. That is what the street is expecting, and this deal will most likely happen in the block window. So keep an eye out for Godfrey Phillips. For RBL Bank, there are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating this counter in trade, and delivery volumes are as well seen on the higher side. And lastly, DVs, there are sell flows on the large HNI desk. The dealers are expecting a weakish or muted fourth quarter numbers from the company. The company will be reporting its numbers coming Saturday, so keep an eye out for DVs as well.
Okay. Certainly keep an eye out for some of these for sure. So while we're talking about all the good things today, I want to talk about Samman Capital. And I don't know if Parag Bhai tracks it, and then I want Kush also to mention this. But here's my question, Parag Bhai. There is a note which is moving around, which is saying that the Samman Capital results reveal a loss, which is a stark reversal from the previous profits. And it raises questions about the financial reporting and potential hidden assets, quote unquote. Now, I have no idea about the veracity of this note and the allegations, but I know that if you've tracked this, you would know this well. What do you think of the very large loss that Samman Capital delivered? It's a write-off, but how large is it? Is it shocking? Is it going to derate the stock? What are your thoughts?
So, first of all, a disclaimer, again, I don't own the stock, but I would say that when IHCL came up, when invested in this company, actually the investors might be ready for something of like this coming, because you raise a large capital, then you do your write-off. So your capital is not, means I would say net worth is not going out because you have already raised the capital. So I think some of the intelligent investors who had invested in this company might be aware of this, but I would say that the new investors will take a pause because they will take it as a, as you rightly said, it is a shock that suddenly around 8,000 crore.
I have a point over here. Now, if you listen to their guidance, FY27 to 30 guidance is very strong.
Yeah.
You're talking about their legacy book, which is now fully closed as well. So it's becoming a completely retail-led strategy from here on.
Yes.
Does that change things anywhere?
No. So I'm saying that's why I'm saying that the institutional investors who have bought into the company, they must have met the company and they must have already understood that this kind of write-off might be coming after the fundraise. And so I would say that now, suppose if it goes down a bit, say 5-7% today because of this, I think people will take it in their stride and then move on. And now focus on the management's new roadmap, which is retail growth. And now they have capital also.
Kush Bohra. So I'm putting in Sammaan Capital, I'm putting in AB Capital because we spoke about that as well. These two on the charts.
So AB Capital, like we discussed, is fine up until 370. I mean, once that is crossed, I think it will go into a new trajectory. But for now, you should book profits if you have a position. Sammaan Capital, I will admit, is a curious case because it's been consolidating for a while, about good 6-7 months. The delivery markup on the positive days is actually very exciting, but the follow-through price action is missing. Maybe the street knew something that we didn't, and this is what it was perhaps. What I will look for is supports. 134, 135, that's the immediate support, long-term support at 130. I think if this is held, there could be some consolidation along the way. Might not have enough triggers for it to move up, but this might just turn out to be a good accumulation zone for Sammaan Capital. So 130, 135, if it holds, then you can perhaps consider accumulating from a medium to a long-term perspective.
Got it. Now, there are 2 or 3 stocks that you want to focus on today. One of them which came on the back of numbers, Sansera. The Q4 profit after tax was 123 crores versus 59 crores. They've doubled their profit after tax. The best of estimates had about an 80-85 crore PAT expectation. So Sansera could well be a stock which could actually do well today. Bear that in mind. Apollo Hospitals is the other one, wherein the numbers were a beat. And the deal that they have done, because the street knew about it, I think the belief in the sales note is that it's net neutral. So that's the second one on your radar. The third one is yesterday's howler, PI Industries. And for PI in particular, the street is divided simply because there were a lot of people who were logged in at the lower levels after the fall yesterday, believing that in the con call they'll say something really positive. I don't think there is something dramatic that they've said there. So I don't know if indeed there could be some bit of selling pressure, in fact, on open today on PI Industries as well. So 3 names out here, Parag Thakkar, from these 3, Apollo, PI, Sansera. Do you track any?
Apollo and Sansera are mind-blowing numbers. They have beaten all estimates. You might say, I might say, because I don't have it, so I might argue that stocks are expensive and all, but that is all nothing. One should write off myself. But, it is. I have to accept the fact I have missed those opportunities.
Which is fine.
Yeah, but fantastic numbers. Apollo Hospital, outstanding numbers, even at this scale, and they continue to deliver. And Sansera also outstanding numbers. I can again say that stock has rallied a lot, so it might consolidate, but numbers are fabulous. And I have missed this story.
Yeah, but I mean, obviously you can't catch every story and the limited capital that we have.
No, but I regret.
Oh, you regret missing Sansera. Okay. But in Apollo's case, viewers, I mean, the other thing is the size probably helps them now consolidate, acquire more, expand more, and the brand attracts people for their hospitals. I mean, it's a solid performance. Frankly, somebody who tracks it very, very closely is my colleague Varsha. Let me get her in. Of course, you will hear from the management at 9:40 today. But Varsha, tell us what stood out for you in the quarter.
So one thing is, of course, Neeraj, one is solid performance across segments. Of course, there was a beat in numbers, no doubt on that. But the growth was, of course, driven by hospital volumes and pricing, and diagnostics also gave, strong boost, I would say. Talking about the segmental wise, let's start with the hospital business. Revenue grew 16% year on year. EBITDA grew 14%. New hospitals caused though 41 crore of losses, and growth was driven by higher volumes, improved pricing, and shift towards complex procedures. Excluding new hospitals, EBITDA grew 20% year on year. Over here, occupancy, if you see, improved 60 to 68% versus 67%, and ARPP, that is average revenue per patient, grew 9% year on year, and 4 new hospitals were commissioned in FY26. Now, this is about the hospital business. Talking about healthco performance, where you have digital and pharmacy, super performance there as well. Revenue was up 20%. EBITDA margins expanded 400 basis points, which was driven by reduction in 24/7 cost, and digital cash loss sharply reduced. Talking about AHLL segment, where revenue and EBITDA were up 24% and 38% year on year. Over here, diagnostics was very strong, which was up 52% year on year, and primary and specialty care also did well. So overall, yes, a solid set of numbers that the company has seen. But yes, they have divested their maternity business, which is kind of negative for the company.
Okay, so that's the negative aspect one should be watching out for. Thank you, Varsha, for that. Now, Metro Brands, a strong Q4 led by festive season, supported by reduction in GST. You're talking about a steady expansion as well. Mr. Nissan Joseph, CEO at Metro Brands, joins in. Mr. Joseph, welcome to the show. Always a pleasure to speak to you. Do you think the performance that you've given out in the fourth quarter is something that you will be able to translate into FY27 as well?
Well, I think through the year, you've seen the numbers get progressively better. So I think a lot of things were coming together for us. Those things don't go away. And, over a period of multiple years, we've always delivered a 15% revenue growth, give or take, in that range in terms of total revenue growth. And, we also have seen profits hit the mid-teen mark pretty consistently. From where we sit today, there's no reason we don't believe that to continue over a long-term period of time. Of course, there could be quarterly blips here and there, given, the fact that we are facing some headwinds with the oil price crisis and all of those things we have going on, right? So but I think we're well prepared to take any impact on in the near term. And, we should continue to see the sales growth continue.
Okay. Apart from this, now you're talking about the ramp up that you're seeing in terms of your filler portfolio. The Clarks footprint is expanding, and the Foot Locker assortment and stores issue is now probably behind us as well. With all of this, what is that scaling in terms of global brands and the EBO strategy looking like?
Yeah, so I think we see a good long runway for both Clarks and Fila. Foot Locker is heavily dependent on imports, which continues to have challenges of its own. Though a lot of that production has moved to India, it's still not 100%. So we'll see that continue into this coming year. So Foot Locker might see a little bit of a slightly more muted growth. Not that we're not going to grow it, but it's not going to grow as fast as we would like it to grow. But, if you think about it, the other brands that we have, Metro and Mochi, have just equally a long runway ahead. And so does Walkway, that we started growing again in the last year.
Okay. And your same-store sales growth, do you think you'll be able to return to mid-single digits in terms of FY27, taking that consumption squeeze that everyone is staring at?
Yeah, I think that it's hard to predict that one, right? And you look to the future of what that's going to do. But I think over a period of time, if you look at the real vectors of this economy, which is, there's growing population, there's growing income, there's growing urbanization happening, there's a shift from unorganized to organized retail. All those are very, very strong tailwinds for, a company like Metro Brands with its multiple portfolio of brands, banners, to continue to grow.
Mr. Joseph, my last question to you is overheads and spends, because you're seeing aggressive rollouts in terms of multiple new format stores. The ad spends that could increase as well. So how will that impact your margins, number one? And two, you've maintained EBITDA margins of almost 22 to 24% as well historically. Can you sustain back to those numbers in FY27 with the expansion that you're looking at?
I think, first of all, taking the EBITDA number, we've been in the high 20s for the most part. And we're very confident that that will continue to hit that number. We are making significant investments, not only in our new stores and the investment that goes behind all the CapEx that's involved and so on and so forth, but also from the standpoint of, investing in banners to grow them and the marketing that goes behind it. And the marketing investments go, of course, they're distorted a little bit more to the growing banners, but it doesn't mean we're in any way taken away from marketing spends and investments into our Metro, Mochi, and Walkway businesses. So, that's going to continue to happen, but marketing is one of those things that you invest to get back, right? You invest to harvest. It's not a question of, spend this for the sake of spending. So we'll continue to measure and monitor how those investments are working out for us. But of course, we're going to have to distort our investments in our embryonic brands.
Absolutely. Lots that the investors are watching out for. The stock in pre-open is indicating an up move of nearly 6% as we speak. But thank you so much, Mr. Joseph, for joining in. Always a pleasure to speak to you as well. Shifting focus in terms of IT, we have NVIDIA, which reported numbers. You have LTTS, which is now doubling down on Europe. And they're launching an engineering intelligence center of excellence in Munich as it actually, sharpens its focus on AI-led engineering. And, excuse me, this is against the backdrop of the company registering 6 straight quarters of strong deal wins. In fact, let's get in Amit Chadda, CEO at LTTS, for more details and what the path is looking like going ahead. Amit, welcome to the show. Always a pleasure to speak to you. If you could help us understand with regards to this Engineering Intelligence Center of Excellence in Munich, we understand Europe is a strategically important market for you. What is the way forward?
As we look at the company and look at the next 5 years, we had talked about our Lakshya 31 strategy. Part of the strategy was a big bet, which is in software and AI. And I would actually like to call it EI, if I may, or engineering intelligence. Now, as we look at AI, we do believe that there is work to be done in the automotive sector or mobility sector, in industrials, as well as in medtech in Europe. Europe today has close to or more than 1,000 engineers from LTTS, with Germany alone being about 500 plus engineers. Our whole goal is to set up this center of excellence that will be a demo center for our European clients and will work also to build new proof of concepts and work that we can do in AI with our customers. We are building out forward deployment engineer workforce in Europe as well as in the US. The FDE workforce in Europe will be centered around the Munich Center of Excellence. That's the goal of building this out.
Okay. So, Amit, what's the projected timeline, to get to peak capacity utilization, etc.?
We already are, like I said, close to about 1,000 people in Europe, with a significant number of people being locally hired, locally trained. And we do have workforce that is coming from other geographies as well. As we look out into the future, I do believe that AI will be a significant part of the company's revenue, either directly or indirectly. And as we look at the AI center in Munich, this is the first step, or maybe a step and a half, as opposed to where we were. I don't want to put an exact number to it right now, but I do expect the company to double over the next few years, with this center being a pivot and a significant part as we move forward.
So how will this nearshore model impact the company's consolidating margins compared to your traditional offshore delivery, taking the way the cost environment is in Germany?
So as we look at execution models, we do believe that the AI forward deployment engineer model will require about 60% workforce local, but 40% in India to start with. Over a period of time, I do believe this model will mature to a 40-60 model. We do work outside of this as well. And overall, with the growth, I do believe that EBIT as well as revenues will grow, and it will be EPS accretive as we move forward.
Okay, so this is going to be EPS accretive as we move forward. Thank you, Amit, so much for joining in. Always a pleasure to speak to you as well. This is interesting because at the face of it, initially I thought probably this is not a great deal, but when I spoke to Amit, categorically it's telling us, Neeraj, that the investment that's going in terms of the center is something which will help them pivot to that AI-led strategy, what they're working towards right now. And that is going to be one of the key aspects.
Yeah, some of the stocks have bounced as well. Paragwa, LTTS, any thoughts?
No, I think, see, any company which is futuristic, which is investing, like Cofor did this Encore acquisition, or LTTS, this particular thing, I think this is the new normal, right, for IT services.
That doesn't mean that you buy
Go and buy the stock. Yeah.
So what do you think about LTTS?
So I have not formed my view on LTTS, frankly, as a company, because what we keep hearing in this ER&D space will take its time to recover. So that is the only problem. Otherwise, company is doing well, of course, an L&T group company, so no other problems. So
yeah, well, okay, and that's a fair assessment too. But watch out for LTTS in case there is some traction. You should know why. Some of the comments that they have made are pretty strong. Okay, Shrikant Chauhan joins in as well, and I would just mark this, that we aren't seeing a very strong move on a number of stocks which was anticipated. For example, we are almost at the end of the pre-open session. PI Industries is absolutely flat. We are almost at the end of the pre-open session. Interglobe Aviation doesn't have a rara move. It's just about 1%, if you will. So it's not that we are having some very dramatic moves on some of the key or the usual suspects. In fact, Samman Capital, despite the losses, is likely to start off about 4% higher. So there you're seeing some bit of a move. So pretty interesting. Shrikant, good morning. Thanks for joining in. About 0.7% higher on the Nifty. Is there a further trade here at the 23830 levels? Would you initiate a trade at these levels on the Nifty?
Good morning, Neeraj. Good morning, everyone. So, yeah, I think the way the market had spent time within the range of 23,800 and 23,300, and yesterday, despite there were a number of worries, the market recovered from the lows. I am of the view that market is poised to move higher. And on the dismissal of 23,800, we are of the view that the market can move towards the levels of 24,000 or maybe 24,200. So even at these levels or more on dips, we should look for creating some long positions. I think 23,800, 700 are going to act as major support for the market. And it looks difficult for the market in the near term to sustain below the mark of 23,700. So yes, we should look for creating some long bets at open or close to 23,800 levels.
So what are those long bets, Shrikant, for the morning?
Specifically, I would like to go with BHEL. There we are seeing a very strong uptrend since last almost 2 months. BHEL, which is currently around 410-12 sort of levels, there we are expecting 430, 440 sort of levels. So it's a buy at current levels with a stop loss close to 400. It is into long-term breakout. The other stock on which we are bullish and from the index basket, that is Bajaj Finance, which is currently around 925, 926. There also we are expecting gradual rally towards 950, 960 sort of levels. At least we can expect 945 in the near future, and we can keep a stop loss at 914. So Bajaj Finance and BHEL, I think these are the two stocks to watch out for.
Interesting. BHEL. Well, as a trading play, I'm just wondering, it's one of the few PSU stocks, to be very honest, which has actually done so well in this environment as well. Look at the 3-month chart of BHEL and the kind of moves that this stock has done. Phenomenal. And on every valuation parameter, you would find it expensive, to be very honest. So I'm not gonna push Parag Bhai's hand that tell me why is it that BHEL is doing what it is doing. But clearly, thermal, nuclear, all of those things, BHEL is present, and therefore interesting. Parag Bhai, I'm going to ask you a difficult question. Interglobe Aviation. Now, 3 months into the conflict, whatever demand destruction has to happen has happened, but it's effectively, if crude comes off, it's unlike for Interglobe as much as it is for other industries to have a lasting impact, right? Because there's a clear and present buying, selling, etc. usage that is happening. So if indeed this conflict were to see a bit of a resolution, are these attractive valuations for Interglobe?
Yeah. Absolutely. And plus the positioning of the company, the way this see, I'll tell you, every company and every business go through cycles, right? We have seen what happened in telecom, Bharti emerged stronger. In steel, JSW Steel emerged stronger. In aviation, Interglobe is that play, right? Who has emerged every time out of the crisis because of their under-leveraged balance sheet, strong, I would say, operating metrics. So I would say that yes, if crude falls, definitely Interglobe Aviation is an exciting opportunity.
Okay. So if crude were to sustain
crude and rupee both. Remember, see, for all these companies, Interglobe Aviation, Pidilite, Asian Paints, OMCs, it is a combination of both oil and rupee. So rupee should also appreciate and oil should also fall. Of course, both of them are also interlinked. If oil falls, rupee will also appreciate.
Is the worst price level on the charts, Kush, or is it difficult to say?
It seems like there is a bottoming out process that is underway, and hence you will not find momentum. So if you do believe the theory, then yes, you can accumulate because the risk reward ratio seems extremely favorable. For me, the breakout level is 44.50, so that's some distance away. But like I said, if you believe the theory that crude will fall off and rupee will appreciate, like Parag Bhai saying, then there is a possibility that this might, from a medium term perspective, turn out to be a very interesting level at which you buy. So yes, you can consider it at this level. 4150, 4100 thereabouts is where you keep that stop loss. Like I said, the risk reward ratio is very favorable. Momentum is missing, so play for medium to long term, about 6 months or a little more.
Okay, on the brokerage call of the day, slightly delayed, but Mahima joins in to talk about Jeffrey's note on Jubilant FoodWorks. Mahima, why this one?
Right, so basically Jeffries has cut the target price for Jubilant FoodWorks. They have been bullish on this one, but this time what they're saying is that they're cutting the target price from 850 to 600. They're maintaining buy, but what they're saying is that they're still waiting for growth to pick up in terms of where earnings growth stand. Plus, the commentary that's come in for FY27 from the management remains weak in terms of near-term guidance with regards to margin tailwinds, and they're saying that consumer tech platforms are performing better and become preferred ways of investors to play the entire consumption theme. Plus, they've also gone out and said that they will wait further for earnings growth to pick up to reconsider the rating on Jubilant FoodWorks, and that's the overall view as to why Jeffries has cut the target price for something like a Jubilant FoodWorks.
Okay, well, is it a H2 FY27 story? I think, Parag, that's the question that comes in. Any thoughts on Jubilant?
So I would say that from market cap perspective and the execution perspective plus the delivery model, so it is asset light, the way they use the technology, everything is good. But the only thing is, as you rightly said, the H1 FY27 our margin outlook is weak. So there is no hurry to buy.
Okay, so that's with regards to Jubilant Food as we speak, but a couple of other names that we should be tracking as well in terms of earnings. Team Lease, Honeywell Automation, Bosch, Satwik, all of them are in focus. Kush, quick one in terms of, Whirlpool, JK Lakshmi, anything that you like, 30 seconds.
No, if that's the time limit, then I will go with something that we've already discussed. I will go with Gujarat Ambuja Exports. Good volume, good uptick. Yesterday, opening also fairly strong. So 170, 176, reiterating the targets. 159 is where you keep that stop loss.
Okay, Shrikant, before we just open up, your top pick, 10 seconds.
Yeah, I think all these energy or power related stocks, they should do well. In that JSW Energy, that looks good to me. They have announced some QIP, so we may see some lower opening. But in case if there is any opening somewhere close to 535, 540, then with the stop loss at 520, we should look for adding this stock. I am of the view that the stock is heading for 550, 560 sort of level.
Okay, well noted. Shrikant, we'll let you go on that note. Thank you so much for taking the time out and being with us. And this morning, are we looking at strong green on the screen or mild green on the screen? Well, on expected lines, 0.74% higher, but not a bad start at all. Market breadth looking terrific, 1%, near 1% up for the Nifty mid caps. I would suspect small caps too could be doing okay, about 1% higher. Nifty IT should come up on your screen. Let's just see if IT is actually rolling on from the last 2-3 days. Remember, it's already put on some gains behind it. So not bad, really. Let's get the heat map up on the screen and show you what's moving and what is not. Do we have Grasim at the top of the pile? Yes, we do. Great results. It's showing in the way the stock has started off about 3% higher. BEL follows suit. Integral Aviation 2% higher, no surprise there. Shriram Finance up about a couple of percentage points. Then there is Eternal. In fact, both of these are making a habit of falling when the markets are down and higher when the markets are up. Asian Paints rallies, no surprise again there. There is L&T, Tata Steel, Bajaj Finance, Eicher Motors. A lot of green, very little red. What is in the red? ONGC, some bit of IT, TCS, Infosys, etc. down. Sun Pharma is down, Reddy's is down. So the defensives are slow off the block today. We have the aggressive names doing well. Remember, the Nifty is not running away. It started off 0.74% higher, still around 0.67, 0.7%. So no running away move, but the usual suspects, the ones that you would have expected Hiral will start off well, are actually starting off well. Very impressive move from Grasim and Interglobe Aviation.
Yeah, impressive moves there, but I'm disappointed with the way IT is. I had thought probably it will take cues from what's happened with comments from Nvidia as well, and the kind of AI spends that they're looking at. It's only, I think, a Wipro which is in the top 10, 12 names that you spot in terms of IT. But clearly, if you just quickly pull up what's happening in terms of the sectoral indices first, and then we look at the broader markets as well. In terms of sectors, again, it's a sea of green, which is a positive to some extent. You have defense, real estate, PSU banks, auto, all of them are seeing somewhat of a bounce back in trade today after the kind of moves that we've seen in yesterday's session. Yesterday, in fact, the sectors which actually opened in the negative saw a reversal with quite ending in the positive. Here, the only one which is a laggard from, in comparison to the others, is the oil and gas space, which is just seeing marginal gains of 0.2%. Likewise, IT, pharma, so all your export-oriented sectors, when you talk about healthcare and IT, are the ones which are seeing some bit of pressure as we speak as compared to the others. Let's just quickly pull up in terms of what broader markets are doing right now as well. If you have to look at the mid-cap and the small-cap indices, your mid-cap index is up around 0.8%, so there is that buying interest which continues. Small-cap as well, 0.9% higher. In fact, your small-cap was the one which actually ended at the day's highest levels. Let's quickly look at individual stocks now. AB Capital is in focus on the back of the 4,000 crore fundraise. JSW Energy also is looking at a fundraise as we speak. Both these counters stock is trading in the positive. Restaurant Brands Asia, wherein you have CCI, which has cleared a stake buy, not doing much. Strong numbers from Nvidia, so Anantraj, E2E Networks, Netweb Tech. These are few of the names that continue to remain in focus, all of them trading in the positive. Page Digitech and RVNL have seen an order win, so both these counters are also in focus, some gains in the range of 1.5% to 3%. Strides Pharma has got 5 observations for their Bangalore facility, so that probably could see some downtick. Hexaware Tech also has made an acquisition that is trading pretty flat. On the back of earnings impact, Strides Pharma is what we were talking about as well. On the back of the 5 observations, no major reaction coming in there. Earnings: Sangvi Movers, Apollo Hospitals, IGI, these are few of the names which have seen a good earnings in overall. Sangvi Movers, 8.5% up move is what you're seeing. Apollo Hospitals, IGI, a few of the other names not doing much in terms of Apollo Hospitals, but if you can just look at IGI, 4%. Metro Brands also, if you can pick up that one on the screens, because the numbers have been pretty steady, 4% up move coming in there. Arvind Smart Space is another one that we spoke about this morning. Let's see what that stock is doing. Arvind Smart Space, 5% up move coming. Teamlease, again, there is a pretty inline mixed quarter. No major moves there. And you have a Power Mech Projects as well. If you pull up that one on the screens, again, a pretty mixed inline set of numbers, but that stock is up nearly 3%. Jubilant FoodWorks has been weak. Whirlpool has been weak. Samman Capital is what we should be watching out for as well. Clearly seen over here, all trading in the negative. Samman, 7.5%. I think they're reacting to the guidance and the change of strategy, which is becoming absolutely retail oriented, but strong moves there. And you have Garwari Technical, JK Lakshmi, all trading in the, reacting to numbers. Adani Ports, Adani Power, these two also we should be looking at in terms of the stake purchases that have been made. Ports seeing gains of around 0.8%, and you have Adani Power, similar kind of gains coming in there. But interesting moves there. Advanced decline ratio also, Neeraj, if you go to see in favor of the advances, which is a slightly positive signal there. and your VIX becomes interesting right now.
But a bit of a cool off really from the highs of the day for the Sensex as well. 0.4% higher now, so nothing too dramatic there. But it just kind of cooled off. Kush Bora, very quick opening thoughts, 30 seconds.
No, I think still I would say avoid the indices. It's hit that, it's actually crossed that 50 DMA resistance, but 23,800, that's the level. It's just slipped below that. I think it might just consolidate till you actually get a confirmation, if you get a confirmation of the geopolitical tensions easing. Bank Nifty is still the index to focus on, and I would say go stock specific. GAIL we already mentioned. Autumn investments, opened well, going strong. I think that's also a stock that you can focus on.
Okay, Autumn investments. He's spoken about this thrice now, Kush Bora, today. So keep an eye out for that. Parag bhai, very quickly, anything opening thoughts here on any of these, or if something that we missed talking about?
I think Samvardhana Motherson result was very good. That we missed during the discussion.
Please.
Yeah, so I think fantastic numbers, completely beat on estimates. And that too, this is a very large scale company, 1,40,000 crore market cap. This quarter PAT was 1,550 crores. Very good YOY growth, I think. And most importantly, the interest cost is just 12% of the EBITDA. So they have a huge room to again do inorganic acquisitions at a good price, which they are master in doing.
Okay. Kush Bora, you want quick thoughts here?
Samvardhana was a call that we gave out yesterday. 135 was target one. That's hit. 139 is the second target. You can continue holding on to it. Bump up your stop losses to about 130, 131.
All right. Great updates there on NDTV Profit India Market Open. Gentlemen, thanks so much for joining in today. Really appreciate your time. Okay, let's move on and talk about Karnataka Bank, which has reported a strong quarter 4 with sharp profit growth, improving asset quality. Before we speak to the management, Shivam Johnson with the Q4 snapshot. Shivam, you have about a minute. Tell us what happened in the quarter.
Well, yes, Karnataka Bank has posted a strong Q4 results, and let's quickly take a look at the key highlights, starting with the margins that has seen an improvement on the back of higher share of low-cost deposit and funding mix. The advances growth were led by the retail and agri-loan segment, and in terms of other income, we have seen a slight decline, and that was due to lower treasury income that were elevated due to the yields. Now, asset quality has also improved on higher recoveries and lower provisions, and the company has achieved its majority of the FY26 guidance. Now, looking at the guidance, the company has given loan growth guidance of 15 to 20% for FY27 and margins to be maintained above 3%. In terms of cost to income ratio, that is targeted around 52 to 53%, and return of asset is also expected to maintain above 1%.
All right, thanks a lot for that, Shivam. Now, Mr. Raghavendra Bhatt, MD and CEO of Karnataka Bank, joins in to talk about the numbers, the outlook ahead, and the macro. Mr. Bhatt, thank you so much for joining in. Sir, before we talk about the numbers, I just want to broadly ask you, it seems that we are in a scenario wherein interest rates, instead of what the hope would have been would come off, are likely to stay elevated or maybe even go higher. Looking at the inflationary scenario around the world, yields around the world, and the fact that it may not cool off in a hurry, would that be a fair assessment, Mr. Bhatt?
Yeah, good morning to you. With regard to rate of interest, yes, last year also, based on whatever we were working on it, mainly one is increasing the income, other one is cutting the cost. We are working on very carefully when the market is very much sensitive. Further, in the present day scenarios of geopolitical situation and the problem of oil, all those things are there. With that also, we have plans to move ahead cautiously. And going ahead, since the EBLR and other market-driven rates, by and large, stabilized now, it is at the lower end. If at all it is moving up, it should be an advantageous position only. No doubt, other political situations, geopolitical situations, ifs and buts will be there. Still, we are very confident that we can manage this situation.
Okay, now let's talk about your numbers and the guidance that you've given. You guided to what? A 15 to 20% growth in advances, deposit growth about 10 to 15%. Are these conservative estimates, Mr. Bhatt, or do you believe these are realistic and seem near certain for FY27?
Yeah, one, growth is the required. We have a conservative approach of growth, 10 to 15% growth in liabilities and 15 to 20% growth in advances with the overall growth of 15%. It is not very high ambitious target. These are the numbers which is very minimal required. The situation, as you said earlier, yes, those are the challenges which is there, but we are well equipped. Our team is in the ground, as you must be knowing. We have got 15 regional offices across India. The team is ready to work in that direction.
Mr. Bhatt, good morning. This is Hiral on this side. Now, basis the guidance that you've given, my question to you is, in the previous quarters, you've heavily focused on retail, agriculture and the MSME portfolio, which is the RAM portfolio, to rotate out of your low-yielding corporate books as well. So, what is that target RAM mix for FY27, and what is that specific loan growth that you're targeting for this portfolio then?
Yeah, we want to grow in as during the previous year, whatever was planned. We want to grow strong in retail and mid-corporate only. Rather, last year there was some compulsion with regard to some degrowth during the financial year. So somehow we managed with the bulk advances, larger and corporate, which are yielding low return. The IBPC, which we had huge exposure, we are constantly reducing that. Somehow balanced last year. This year, from the beginning itself, we want to grow very strong in retail and mid-corporate only. Some adjustment is required in the course of time, depending upon the situation, market condition, all those things. But we are aiming strongly to grow in retail and mid-corporate only.
Okay. And with regards to your corporate book stabilization, are you expecting any further optimization in FY27 there?
No, constant efforts are there to reduce. But as I told you earlier, there will be repayment also during the year. We have to maintain a normal ratio. We want to have a mix of retail 60, mid-corporate around 20 to 22%, remaining in bulk and large corporates. That is the main focus. We will work in that direction.
Okay, and when you're talking about the cost of funds as well, how are you looking at the bulk deposit rationalization? Because you have substantially reduced your bulk deposit dependency, if I understand correctly. So what is that floor looking like for FY27? And two, are you seeing any deposit repricing impact that could be coming in, because your CASA has improved significantly to little over 33%?
Yeah, cost is very much under control. There was a continuous reduction. If you analyze our result, continuous quarter on quarter, there is a reduction. There is a repricing to the extent of one particular segment of deposits, which we have taken around 1.5 years back, 7.55%. That is going to reprice in the last deposit will be falling due in mid-June. That is, we have got a small amount of that. With that, cost is further going down because all are either repricing at a lower price. That higher rate of interest will be over by coming June.
Okay.
Got it. Mr. Bhatt, just wondering, by and large, would you believe this conflict and the resultant slight slowdown that we've seen in economic activity may result in any kind of and NPA accretion for the risky lenders? And how is that situation for you as well, sir?
Situation we cannot say as of now, because the things are very much under control. Why I'm telling this is, last year also there is a significant improvement in the asset quality, significant improvement in the ratio of GNPA and NNPA. GNPA has from 3.32% came down to 2.78. NNPA for the first time less than 1%. All those things are there. In addition to that, our focus is to ensure that slippage to NPA. Here I have to stress, because the stress portfolio was little bit on the higher side. We, through our continuous monitoring mechanism, either at our regional office or head office, continuously we have brought down from around 14-15%. We have brought it down to 4.5%. That is a significant improvement. So with that improvement, slippage ratio also will come down, and I am confident as things move on, the slippage, when it is coming down, everything will be under control. Exceptions may be there. Exception in the sense, because of geopolitical situation and other economic activity problem, which is affecting to the banking industry, may affect also. But by and large, things are under control.
Okay, my last question coming to you is, what is it looking like going ahead with regards to where the succession goes and a recommendation to the RBI goes with regards to a successor? Because there has been a lot of churn that has happened as well, in terms of management and leadership roles. What would you have to add over there, Mr. Bhatt?
With regard to that, see, ultimately it is the decision of the regulator. As this question was being asked earlier also, when I have chosen as interim MD also, things were moving fine, and it all depends upon the board decision as well as the regulatory decision. I'm confident as far as that it will not impact the bank. It is a going concern. It will be as smooth as it was earlier.
Okay. We will leave it at that, Mr. Bhatt. Thank you so much for taking the time out and being with us. Really appreciate your time.
Thank you. Thank you.
Okay, on to a very, very important conversation. And that is the piece that is on top of everybody's mind. That a two-factor or a three-factor or a troika of factors, right? One, what's happening to the current economic situation? How bad can it get? What does that economic situation mean for flows and thereby the current account deficit and thereby the pressure on the rupee, if you will? And it's under sustained pressure for a while. And three, what happens if the situation were to resolve? I think best that all of these are put as questions to our guest on the show today, Tanvi Gupta Jain. She joins in right now. Tanvi, always good having you. Thank you so much for taking the time out. And I know the easier question to ask you is what's happening to the rupee and what will happen. But I want to start off by just understanding, what do you reckon is the current degree of economic impact that we have already had? And if the conflict were to resolve in the next 7, 10, 15 days, what happens in the near term to the economic impact?
Sure, and thanks for having me on the show. So let's discuss where are we on the ground. And we have a lead indicator known as UBS India Composite Economic Indicator, which is largely a compilation of 15 high-frequency data on India. And that is telling me we did see softness in the month of March. But surprisingly, on a sequential basis, I can see in April, there is an uptick. And which is very interesting, and where we are seeing a big divergence in India, is that your demand side indicators are holding up pretty well. So if you look at two-wheeler sales, you look at car sales, you look at tractor sales, they're all in double-digit growth. But the moment you step into your activity indicators, which is your, PMIs, your core sector growth, we're already seeing some signs of a slowdown. And I think that divergence is also largely because till the month of April, we didn't really see any pass-through of higher gasoline and diesel prices to the retail prices. So the way I'm looking at GDP growth, and you did ask me, what if there is some resolution and how things are going to pan out, I would say our full year GDP growth forecast for FY27 is 6.2% at this point in time. In case there is a quick de-escalation, we do expect GDP growth at 6.5%. But in case we see an extended energy shock scenario, I think the material growth slowdown could be as low as somewhere between 5.5%. And we need to realize this is not only about the energy shock. Indian Met Department has a forecast of subnormal monsoons. The first long-range forecast is one of the lowest in 26 years. We can talk about water level and reservoirs being decent, correlation between monsoons, and whether an agricultural output has weakened, but all to say a double shock, which is energy shock followed by maybe a weather-related disruption, is going to lead to more downside than upside at this point in time.
Tanvi, good morning. Hiral on this side. A quick follow-up here. You're mentioning about the lower range of 5.5%. If you're looking at 5.5, is that already baking in all of the shocks that you've mentioned right now? Or this is just taking the oil shock severely into consideration, and if anything else follows, we will be below that 5 to 5%, 5.5 to 5.5% mark as well?
Okay, very valid. So the downside scenario, which is 5 to 5.5%, is an extended energy shock scenario. And basically, we have assumed a weather-related disruption in all our scenarios because that is something we are not really building in a super El Nino in our forecast, but we have already priced in all the three scenarios a weather-related disruption. An extended energy shock scenario means that we still don't see a resolution, and oil prices, instead of headed lower, continue to remain higher for longer. And I could also be talking about oil moving above $120 a barrel and maybe staying there for the rest of the year. So that is how we will be building in the downside scenario in our forecast.
Got it. Okay. Tanvi, the other point is that the sharp depreciation in the currency was also obviously on account of the factors that we had a lot of people attributed more now to the capital market flows that we've had and the incessant outflows that we had from the FIs more than the CAD. Now, one, do you presume that to be the case? But two, if indeed the money flow into the AI and the semicon trade is real, and if therefore even if the conflict were to end and that flow from global funds were to go to the AI-led markets, and which is even in the emerging side, the South Koreas, the Taiwans, and the Japan markets of the world, even China maybe for that matter, could we continue to see the pressure on the rupee, or a crude cool-off will essentially help mitigate that stress?
Absolutely, and a very valid question. And I think I will also connect with what I'm hearing from my investors. So you're right in pointing out that current account deficit this year, if I assume India's imported crude oil basket is going to average around $100 a barrel, will be 2.5% of GDP, which basically means I need $100 billion of capital flows to fund this kind of deficit. Now, number like 2.5% of GDP is not such some big number that I have not seen in the past. In 2013, our deficit had widened to even as high as 4.8% of GDP. But that time, the size of the economy was smaller. Right now, roughly $100 billion current account deficit is a big number. And when I look at capital flows, and very rightly, as you were pointing out, FII equities have recorded near record outflow. If I look at the data from March to now, it's more than $22 billion. Already, we have seen in FII equity, FII debt are muted, and FDI, we all know the number is now less than $10 billion. So the challenge right now is how am I going to fund a $100 billion current account deficit when flows are actually quite negligible at the moment. And that is obviously getting reflected in INR. But just to connect with how the global investors are going to look at things, if suppose tomorrow, things de-escalate, oil start to soften. Now, it's also the question is at what level are we expecting oil prices to settle down? So, for example, if there is a quick de-escalation, our UBS global oil team is still expecting oil to stabilize somewhere around $80-85 a barrel. So that will be a very critical question depending upon de-escalation and softening, but softening to what extent? Because oil at 85, you still have a current account deficit that needs funding. The second question is, and I'm talking to a lot of long-only global investors, I realize that India is getting into favor, but underperformance of INR could be one of the biggest issues because the dollar-adjusted returns are 0 to negative, despite even if there is a positive performance in the Indian equity market. And this is also creating this vicious cycle. So definitely the policy priority right now is to stabilize INR to ensure that investor sentiment could be contained. I also want to highlight that before this energy shock happened, we did see positive FII equity inflow into India despite the AI trade already ongoing. So I think the confidence will come back if oil prices soften. We are able to take policy steps to stabilize INR on the margin.
Quick question, Tanvi. The RBI measure, they've announced $5 billion in terms of the rupee swap on the 26th of May. A quick comment on that. We just have probably 30 seconds to a minute.
Okay. So RBI response has been focusing more on FX smoothening rather than outright tightening. So far, curbing speculation, extending the onshore forward book, absorbing a large part of oil importers' dollar demand. So FX swap is largely a policy tool used to stabilize INR. Can it reverse the direction of INR depreciation pressure? No. To fill the time, we are able to constrain current account deficit or increase capital flows. These are needed to stabilize INR. FX swaps is just an FX smoothening step in the right direction, but not enough to stabilize INR.
Thank you so much for taking the time out and being with us. Really appreciate your time. Okay, welcome in on the show, Ms. Sunita Reddy of Apollo Hospitals, and strong performance, Ms. Reddy. Thanks so much for taking the time out and being with us. Some of the quarter for us in your ways. What do you think was the highlight of the quarter?
Well, I think in terms of quarter, we've shown 18% growth. So we're higher than expectations with a revenue of 6,605 crores. EBITDA also was at 1,111 crores and profit at 529 crores, which is a 36% growth in profit. So I believe we're ahead of expectations.
Yeah, I mean, well and truly above the expectations for sure. So what went behind that? If you look at the start of FY26, would you have settled for this performance at the start of the year? And how does this momentum set you up for FY27?
I think that it does set us up. So yes, expecting this momentum because we know it will carry through. In terms of, I think we need to deconstruct each of the verticals. So if you look at hospital services, which is healthcare services, we showed a growth, we delivered about 3,268 crores of revenue, representing a 16% increase. And EBITDA grew to 81 crores, which is 14%, and profit came in at 414 crores, which was a bit muted because of the opening of new beds. And this is where the growth of the hospital will come from. One, it will come from the existing beds, which are about 8,900 beds, which will continue to grow at 14 to 15%. But the addition of 750 beds in the last year has contributed to about 2 to 3% of revenue and will continue to do so. So this year we're opening out another 850 beds. So you can expect to see that the hospital services in terms of growth will deliver close to 20% in 20% growth in revenue coming from both the established as well as the new, and at very healthy margins, because we believe that we've reached a stage of maturity and cash flows where we can absorb the losses of the new, and with this we should be around 24% in terms of margins. We closed the last quarter at 23.8, but moving forward, the new units which are about are really picking up in terms of traction and will contribute to break even soon.
Last quarter, Ms. Reddy, you had mentioned that you would carefully balance the EBITDA deterioration in the new hospitals with the existing network performance and raise margins by 100 basis points in FY27. Are you on track for doing 100 basis points expansion in FY27?
So the established, we've crossed 25.4%. in terms of the EBITDA margin, and that's a very healthy margin. With increased occupancy, I believe it should go higher. Our mature units are in the region of 30%. So we should be able to grow the established. The new will take time. And I think the strong, like I said, the cash flow, the trajectory from the old will minimize the losses. We believe the losses will be contained to around 140 crores for the next year.
Wow. Okay. That's strong commentary. And okay, let me change tracks now, Ms. Reddy. The belief is that for a lot of businesses dependent on Middle Eastern patients and inbound patients, there could have been an impact because of the conflict. Are you sensing that for your business?
No, for us it's minimal exposure. It was only Iraq, and we have very minimal exposure to Iraq, which is less than 40 crores. So, and we are seeing a comeback of patients from Bangladesh. So they more than compensate for that. Total international patient revenues grew by 10% for this quarter at 870 crores.
Okay. The digital health and the pharmacy distribution business crossed about 10,000 crores for the first time in revenues. Is this becoming a structurally high margin business for you, or is it difficult to call that right now?
It is definitely it is a good margin business, but the way you should look at this is a higher ROCE business, This is driven both by offline and online. So total revenues were at 2,848 crores, with a very healthy EBITDA of 156 crores and profits of 100 crores. So this has moved into very healthy profitability. And in the physical stores, they grew by 21%. The revenue grew by 21% to 2,518 crores, and EBITDA of 195 crores. So this is very healthy growth. They've added 176 new stores, which will contribute to the growth. With regard to the online business, the significant thing to while it was 330 crores of revenue, the losses have come down to only 16 crores. So I think you can look at a very profitable business, and it's not about margin, but it's more about asset turns. It's more about return on capital employed and high volume business.
Ms. Reddy, there are now fertility clinics coming out with IPOs, but you've exited the maternity and the fertility space. I mean, why do that? You could have, with the brand power that you have, scaled it as well profitably. So why the decision to divest?
Well, I think two things. One is that we continue to be a strategic investor in Cloud9 with 9.9% holding. So we believe that there is some future value to capture. Second, we've got now 750 crores of cash in hand. And if you look at our diagnostic business, this is, we believe, where the future is, because it's closely linked to healthcare, to clinical work that we do. And we are expanding the diagnostics network. Already there has been 52% growth in the diagnostic space, and we believe we can become among the top three. Margins in this space are also very healthy because we're going into very high-end clinical diagnostic testing. The third aspect is that we're still in the mother and child space. So we are not letting go of the fact that, mother and child is very crucial to what we do. So we continue to engage with patients, to consumers along their entire life cycle.
Okay. Any formal guidance, Ms. Reddy, for FY27 or some color about what FY27 could look like?
I think FY27 will be a good year. I will say that in terms of revenue, yes, you can expect to see hospitals deliver close to 20% growth in revenue. The same with Apollo Health and Lifestyle, if not very close to more, 23% to 24%. And the same with Apollo Health and Lifestyle has already showed 24%. But now that, they're a little bit asset light, have cash in hand, we can expect to see higher growth coming from diagnostics, contributing to overall growth in Apollo Health and Lifestyle. So it should be a year of good growth.
Okay, Ms. Reddy, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time. And the stock, as the management was talking about the commentary confidently, is now at the highest point of the day, 4% higher for Apollo Hospitals. That's about a 1.15 lakh crores of market cap, moving up 4%. That's not a mid-cap stock doing that. Really strong show. By the way, speaking of strong shows or weak shows today, Nifty IT slipped into the red. And keep an eye out for Jubilant FoodWorks, amongst others. It's the top loser on the Nifty 500, down about 7.5%, followed by Ola Electric. So a couple of stocks clearly facing some bit of stress, Hiral. Yeah. But there are some winners.
Yeah, but you have a Bosch as well, again, reacting to numbers, 2.5% downtick there. But from the winners, Samman Capital, again, it's on the back of the FY27 guidance and the change in strategy. Honeywell Automation also reacting to a good set of numbers, along with the IGI, which is seeing gains of nearly little over 6%, reacting to numbers. Angel One, NMDC Steel, Triveni Turbine, few of the names. The kind of names that I'm seeing over here actually pushes me to look at what's happening in the mid-cap and the small-cap index. If we can just pull up that one on the screens and see the performance there. There you go. Pretty much steady in terms of mid-cap 150. But let's shift focus to Motherson, Samvardhana Motherson, I would say. A strong set of Q4 numbers. Puneet, is here with how brokerages are viewing the company post the Q4 numbers and then in conversation with the management. Over to you, Puneet.
Well, thank you for that. Well, they continue to be positive at this point of time, and it's one of the stronger quarters for the company as well, because the other side, the emerging businesses have also done well. So strong 19% growth reported in a quarter where you've seen volatility as well, and despite that, the wiring harness business continues to be robust. The India performance is very strong, of course, led by the higher growth both in EVs as well as in ICE vehicles as well. And that continues to be what we are seeing in terms of the key takeaways. And there was a restructuring of the Europe units. There was a one-time cost impact associated with that as well. But management has highlighted that this is with what they are penciling in terms of the long-term growth for the company also. Most brokerages, as I mentioned, continue to be very positive. Of course, the growth, these are, of course, the key takeaways and the key numbers as well. And that continues to be one of the positive aspects for the company in this particular quarter as well. But let me welcome in, Pankaj Mittal, the whole-time director and president at Samel, Gandhar Tongya, the group CFO of the company now as well. Gentlemen, both of you, thanks so much for joining in. Let me start the first question then, Mr. Mittal, because currently what we are seeing globally at this point of time is going back to the alternate fuels, alternate products, and especially in the hybrid side, those products coming back. Are you also seeing that kind of revival again in terms of customer conversation at this point of time?
You're very correct that we do see a trend where many of the car makers who had thought earlier that they will purely go into the electric side have also announced that they would want to continue with their hybrid platforms or ICE platforms. So ultimately, it's the consumers who decide, and based on that, it is better for providing all kinds of options to the customers. And that's the trend which we also see. Having said that, Motherson has always maintained itself as a powertrain agnostic company. All our products go to all kinds of powertrains, and that's how we see us growing very well. Some of the new companies which have come into the group or are coming in as part of the acquisitions, they are also related to hybrid technology and also to ICE engine technology. So it also gives them a good fillip before we pivot them into many different areas. That's the whole idea.
Mr. Mittal, just in terms of what we've seen as well, because your EV order book is one of the highest now that it has been in the past, 22% of the $96 billion order book that you have. How much is that translating into revenues right now?
Yes, country to country, there is a variation in terms of the penetration. Still, you would have seen that the penetration level in India is also not very high, but EVs are also growing at a very fast pace because the base itself is less. Also, the car makers have provided many exciting products to the consumers, which are not just because they're EV, but they are very good vehicles that there is an aspiration to buy those products. So we are also suppliers to most of the cars which are there, and we do make products which are for these vehicles because there is a huge opportunity to provide very high quality and very exciting components and products. Since the company has a very high focus on developing the DEMAL capabilities, design, engineering, manufacturing, assembly, and logistics capabilities, we have been able to create new products for our customers and also to manufacture them in India itself to provide the local solutions.
Mr. Mittal, then let me come back to the more exciting part of the business now, because that's consumer aerospace. Also, I'll just get to it in a bit. Because analyze, you've done almost 14 to 16 million units, and that's for your two plants, as you mentioned. The third one also expected to come in. Just want to understand, because you report lighting and consumer together, is the growth for revenue in lighting slower, and is the current EBITDA largely from the lighting segment? Is that a correct assumption, and should we expect consumer growth to be much higher for the next year?
Well, when you look at the whole division, the whole vertical, then there is a big base of the automotive business which is there itself. And the consumer electronics is a very new business in which we entered. And when we mentioned about the capacity of 14 to 18 million and that what we could execute, that's in the last quarter. So it's only in one quarter as the business was ramping up. And this business is poised to grow further in the volumes also, because as we have mentioned that the GF3 will be upstream sometime in quarter 3, and after that the real volumes will come. And this business has also turned EBITDA positive. And as we do vertical integration in this business, it will also contribute solidly.
So is there a correct assumption that we can make that the third facility, GF3, as you mentioned, which will be coming on stream in quarter 3 of FY27, so 3 quarters away, the commissioning of that and capacity will be leaps higher than what we've seen for the other 2 facilities which we're working on in FY26?
So you are absolutely correct that the ramp up is very fast, and once the facility comes on stream, then it's an immediate ramp up. And the change in the orders are very fast because the life is say a year, and then you are modifying and then moving on to the next one. So that's how it will work, and the volumes will be quite large. So as it comes forward, we will keep briefing the market as to how it is growing. But yes, it will be fairly much higher than what we have achieved this year. As we see in the full year, only the last quarter we had seen the volumes being picked up. So they will continue to get picked up. And with GF3 coming in, the volumes will grow even further.
And in terms of aerospace, because that's the other big change that you've done in the emerging businesses, you've shown roughly around 2,400 crores of revenue, while that pales in terms of the comparison of the full year revenue of the auto business. What's been the expansion in Europe? Because you have 2 facilities coming in India now in this year, maybe in the next quarter itself as well. How is the order book now for India? Is it more larger than Europe, given the facilities that will be coming in India? If you can give us some perspective.
See, order book has grown 20% year on year. It's about 1.6 billion for aerospace itself. And the product portfolio has grown across all platforms. And we are in the metal parts, we are in sub-assemblies, we are in wiring harnesses, and we are doing multiple products. So the Indian specific, the business has improved in Europe also, and it's growing very well. The order book is very strong from India, as there are a lot of aerospace companies and new customers have also come in, wherein we are making the products for them. So they have selected us to do new products, and for the same, against these order books, the new facilities are coming up and they will ramp up.
Well, Mr. Mittal, thanks so much for joining and giving us that perspective. Of course, a longer chat warranted on the different measures that you're doing at Motherson, but congrats on a good quarter and thanks so much for joining in today. But that is, the management of Samvardhana Motherson. We'll take a very short break. A lot more action on India Market Open on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Investments in Specialized Investment Fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy-related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global.
Welcome back to India Market Open as we speak. The question from here on is, with the way markets have been panning out, are Indian markets at an interesting inflection point with that extreme pessimism colliding with improving underlying fundamentals? Let's head across to Neeraj, who's taking us through as to what is that next leg of markets probably going to look like. Over to you, Neeraj.
Here's some key data points for people to mull over about when they're thinking about what could happen next to the equity markets. And I've borrowed some from a note from Morgan Stanley and some from our own research. So what can indices bottom out? I think India's share of global profits currently exceeds the global index weight by the highest margin. So if you take the share of global profits to the global index weightages and do a ratio, I think it's probably the highest that it has ever been in terms of the margin, which effectively shows that the valuation has gotten skewed on the downside relative to history. The trailing 12 months relative performance is the worst in history. This is as per a Morgan Stanley note by Rhythm and colleagues. So interesting to see that how from versus history, I think we are on some key footings. And the foreign positioning, of course, is known as at multi-year lows. Now, can this actually go down further? It sure could. Various FIs have come and spoken about they would still want to pursue the AI trade. But be that as it may, we do know that from here, the quantum of selling that could happen is hopefully going to be much lower than what it was maybe 12 months ago. Now, all eyes are on the government to pick up crucial reforms before the 2027 UP elections. I think there's a clean slate of 7 or 8 months that the central government has to enact some reforms without worrying about the overhang of state elections and what the response of that could be. So I think this is something that people are looking forward to. Some reforms coming in, tough as that they may be, but if they actually help investor sentiment around what the government is doing on reforms architecture, I think that could really, really help. That is one. And the other point is that even if the indices were to flatline, what could it do to markets and portfolios? So can the Nifty flatline while portfolios gain? I think I took a look at what the period of 2000 to 2013 meant for the US index, for the US stocks and the Japanese index. Now, the S&P 500 from 2000 to early 2013 traded near 1400 levels in 2000 and hovered around the same levels in 2012 to early 2013. But there were enough stocks which during this 13-year period did really well. In US, Apple rose by nearly 70 times. Amazon saw triple-digit returns as well. Monster Beverage multiplied multiple times as well. So and of course I'm picking and choosing here, but what I'm effectively trying to say is if the index flatline, it didn't matter if you were able to choose the right stocks for a long period of time. I'm nowhere insinuating that the Nifty will flatline for 13 years, but history is shown. Even in FTSE 100, for example, 2000 to 2013, it peaked near 7,000 in the end of 1999, and I think stayed around these levels for up to 2012 or 2013. And even in this case, which is the UK index, Reckitt Beckensur, Primark, etc., delivered strong returns. Rio Tinto outpaced the index as well. So there are enough. Japanese index in the early years also has some measures like this or responses like this, if you will, or data like this. So the index may well flatline, but we may have enough stocks which could deliver returns. Shreyas Devalkar joins in right now, and I would love to ask him this. Shreyas, does it petrify you or worry you that we may be in a period or have been in a period now for nearly 2.5 years that the indices have virtually done nothing? Or is it okay that the Nifty or the headline numbers flatline, but individual stocks continue to do well and therefore portfolios may well do okay?
Good morning, and thank you for inviting on your show. Yeah, it's interesting observation that yes, the mid and small caps are doing very well, while the large cap indices are actually flattish in last 2 years. Normally, what happens is when it comes to large cap, the larger companies are actually their growth is dependent on nominal GDP growth. So if the nominal GDP growth slows down for whatever reasons, then the large caps don't tend to give you return, and their returns being slightly lesser than the mid and small cap. You are seeing some sort of derating as well. So the headline market, especially when you talk about Nifty, etc., it is more driven by the large cap where the growth is dependent on the nominal GDP. That, in my opinion, after the sharp rally of 20 to 24, rightly so, it is actually underperforming. Having said that, what we should look at that the market is divided in two halves. One is low growth, which is companies where the growth is mostly dependent on the GDP growth, which are reasonably priced now. And the other part is the high growth companies, which are very highly priced. So those companies are especially in the themes like power sector, renewable, EVs. So wherever you are having a really good theme where the earning growth delivery is there, which is any way upwards of 15, 20, or in some cases 25 as well, those companies are doing well. So if you see the damage in the equity, what we have seen after this war started. Actually, 30% of large cap have corrected by more than 10%. 25% of mid caps corrected more than 10%, and 10% of small cap corrected more than 10%. So the damage, actually, if you notice that headline level, though it looks flattish, even at a broader market level also, if someone would have told you that beginning of this year that, okay, now there is going to be war and then crude will go upwards of 100, rupee will touch so much, there will be pressure on yield to go up, and where you would have predicted the market. In my opinion, actually, market is resilient as such.
Okay, Shreyas, good morning. Hiral this side. It's interesting when you say that the markets are resilient at this moment. However, if you have to look at what's happening in terms of the global macro and where Indian market valuations stand, I mean, the multi-cap multiples are trading above historical averages as well. How much of this premium is justified by this, if you could say structural earnings growth versus the domestic liquidity, part one? And two, if you have to look at the sectoral themes as well, for Axis, historically, you favored secular growth, right? So is the portfolio shift happening away from consumption and private banking?
Sure. So so the two parts. One is that the growth where you are seeing and whether valuations are justified or not. Definitely, valuations are always outcome of growth expectation. One, and secondly, how much is the liquidity. So what is happening, which you are also rightly highlighting, that in the large cap space, the one part is the growth is relatively slow, while the FIs have pulled out. So obviously, their liquidity is lesser than the mid and small, and that's where you are seeing the valuations which are more reasonable in that space. While in mid and small, there is a flow of DII, and if you see dissect the flows, then you will notice that the flows are not in the large cap as much in the large cap oriented scheme. The flows are in mid, small, flexi, and the schemes which invest across. So there definitely, because of this, the valuations are not as they are not reasonable, I would call it, and always the valuations are outcome of liquidity plus the growth. So definitely, what I would say that when as an investor you are choosing, either you have to sacrifice valuation for growth or you have to sacrifice growth for valuation, and that's where in that judgment, if you see last 1 year behavior of the market, 2 year behavior of the market, market has erred on sacrificing valuation for growth. So far, and in my opinion, the liquidity in the domestic market is good. We have to watch out for next 2-3 months how it shapes up, because now I think the SIP returns for now not just 1 year, now even 2 year basis, they are not as good. So we will have to watch out for that liquidity, and definitely the multiples in the mid and small cap would depend on that.
Okay. Shreyas, where is it that you are finding favor currently? Are you looking for names which have gotten beaten down because of the sensitivity to Middle East or crude or both, and therefore if the resolution were to happen there could be a bit of a normalcy coming? There are aviation companies, paint companies, etc., etc., etc. Is that the cohort, or are you looking for resilience right now, that the stocks may be expensive but you're looking at resilience because frankly the Middle East situation is a bit of an unpredictable situation?
So here, what I would call out is even your last question was around what in large cap and mid cap and in the overall segment, what are your way of picking the stock? The way I would look at it is in the large cap oriented scheme or in the large cap bucket of any scheme what we are managing. There, the observation is most of these companies are getting affected by, so if you take banking as a pack or lenders as a pack, then affected by question mark over liquidity, though RBI has managed it very well, but future question mark, then the interest rate and asset quality and so on and so forth. So that is the big pack which is getting affected, and there are multiple such segments. So in the larger cap segment, we are definitely looking at the turnaround if this war is to go back, and because most of the stocks are affected and they are priced reasonably today. While in case of mid and small cap, as I highlighted, actually most of these growth scheme themes are in the mid and small cap. So there we are positioned in both manners. So so most of the portfolios are overweight actually, if you see on the capital goods in our case, in case of mid and small cap as of last month there. So wherever in those spaces where the themes are available, especially backed by the growth in near term and for next 2-3 years, we are there in those stories as well.
Okay. Shreyas, apart from this, when you're talking about broader markets as well, and then we're shifting focus in terms of what's happening with the financial side of it and IT, because these are the two segments which usually drive FI inflows as well. Now, FI is not coming back yet. For them to come back, do you think it will still remain these two sectors? Are you seeing any value there? Because IT valuations have come off significantly, and you have large cap IT, which is looking much more attractive versus mid cap IT right now.
So IT, I'll keep it separately because there are totally different arguments out there in IT apart from valuation. But just to begin with, the financial and any other sector which is more dependent on the war and rate cycle, etc. In those cases, in my opinion, the valuation are reasonable. If and when the crude bank comes down, or the commodity pressure, the inflation in that actually subside. So in my opinion, there would be interest in India on that count. Coming back to, so I'm talking about not only financial, but India as a broader large cap market as such. Now coming back to IT. Now, IT, actually speaking, the matter of the fact is its weightage now in BSE 100 is getting closer to almost 7% odd, unlike it used to be very high earlier. In mid-cap kind of indices, it would be sub 5%. Now, that sector as a driver for the market has is good, but like just to give a flavor that pharmaceutical is around 4% of the large cap weight. The point is that yes, because of the valuation, that sector is lucrative, but because of the long-term trends, what happening in that, definitely there is a concern over a longer term period. It can get addressed if the growth comes back to the segment. But having said that, valuations are reasonable, both on the free cash flow yield count, dividend yield count. But end of the day, if you're talking about 3% growth, 4% growth, probably with rupee depreciation in rupee term, they may grow higher. But if you're talking about dollar term, 2-3% growth, then that is not really exciting, especially when it comes to the large cap space.
Okay. Shreyas, we'll leave it at that. Thank you so much for taking the time out and being with us. Really appreciate your time.
Thank you.
All right, that's the view from Axis AMC. Now, the big story that we broke just a while ago, sources tell NDTV Profit that the RBI board will meet on Friday to consider a dividend payout to the center and is set for a record payout for FY27. Piyush has more details on this. Piyush, this is a very important thing.
and bring us the details.
Absolutely. What we are hearing from our sources is that the RBI's board will meet tomorrow to consider paying dividend of as high as 2.7 lakh to 3.5 lakh crore. This is a massive amount which will go towards the government in the form of dividend. The RBI's balance sheet has swelled on account of around 10% odd fall in Indian rupee versus the US dollar, which helps them providing this dividend. Further, the dividends have over the last 3 financial years, they have grown by over 3x from 87 odd thousand crore in FY23 to around 2.16 lakh crore last fiscal. Now RBI in the last financial year, which is the FY26, made significant gains on account of its interventions in the forex market. We also saw that RBI's domestic and foreign investments, the returns were higher, and of course the RBI also makes money printing currency. So that is also where the RBI has a bit of a headroom to give this higher dividend to the government. There is one interesting aspect, Neeraj. In last year, the RBI had hiked the contingency buffer to 7.5%. Now, if they choose to lower this buffer from 7.5 to say 6.5 or 7%, then that gives them additional headroom to provide further dividend to the government. That is what we are hearing from our sources. The RBI has yet to respond to queries sent by NDTV Profit. Back to you.
Okay, thank you so much for that. This is going to be interesting to see in terms of what that payout number actually comes up, because if you look at estimates, the lower end of the estimates is pretty much in line with what the street was estimating. I mean, what the government has given out, what the RBI has given out to the government in FY25, but the upper end of the estimate is very strong. And the government is looking at around 3.15 lakh crores. So it's pretty much in between the two numbers what the street is watching out for. But moving on, amid Prime Minister Modi's austerity call, gold imports have emerged as a key concern, reflecting strong domestic demand in spite of this global uncertainty. Feroz Aziz joins CEO at Anand Rathi Wealth joins in. Feroz, good morning and welcome to the show. Hiral on this side. Interesting take is what I would want to start off with regards to the way you're looking at this entire austerity measure. First up, your initial comments and how were you looking at it?
Good morning, Hiral. Yes, what we were doing is, at Anand Rathi, we were doing some degree of hisab to try and see we've got $4 trillion of household gold, which is sitting. And the normal time import has been, it was actually 35, 45, 58, 76. That's the $1 billion we have spent. After Modi ji's request, or the Prime Minister's request, I'm sure we will come back to normalcy. Like last year was astonishingly high because people run to buy assets which do well. That's called recency bias. So what am I trying to get to is, the hisab is very clear. If you have a $65 billion balance of payment or current account deficit, $65 billion is 1.5% of our total gold reserve. So what we did at Anand Rathi was, we said we have 403 relationship managers, 13,800 families. If we request each of them to sell 100 grams of gold average, of course somebody sold even half a kg, and take receipts from them just to motivate the rest of them, then we can almost solve India's 1% of the gold import problem. If a small unit of 403 professionals, along with the generosity of the clients, of course, and God's grace, if we are able to solve 1% of the country's problem, that is solvable if we all participate. That's the initial thought. Let me stop here and look for a follow-up question from you, Hiral.
So, Feroz, it's very interesting to put something down on paper and have everything in terms of theory. The question is, how doable is something like this, number one? And have you actually received any interest on the positive plea that you've made?
Yeah, so much interest. I am surprised myself. Okay, a couple of tweets have gone viral and clients. Now, yeah.
I understand. Yeah, you know what my question is going to be. I mean, all of this going viral is one side of the story, and that's what internet is meant for. But on paper,
I'm not even So I'm not so fascinated by virality. I wouldn't have been doing investor education on shows with 1,000 rupee SIP amounts for the last 13 years, which are never going to be my client. So it doesn't impress me. Virality doesn't impress me. The fact that several of my clients proactively wrote to us, my CEO's wife, who loved some jewelry, she sold it in spite of emotion. Her statement was, I am emotionally attached to this jewelry, but I'm more emotionally attached to the country. Okay, you've struck the right chord, and I can probably show you live 11,79,000 receipt. Morning conversation, going to the locker, withdrawing it, going to the jeweler, melting it, and then giving you 11.79 lakh rupees. That's a 1 day's job for the CEO's wife. And so we are all very, very adamant as professionals that we will get support. So coming back to how much support did I receive? There's one client who's one of our platinum clients with triple-digit growth. He says, don't even bother calling me, sell all excess gold I have. Those kind of calls I've received. I've got one person saying that yaar MCX mein meri future chal rahi hai, usko bhi hata do. 70 crores. So can I, with God's grace and everyone's support, get to 3,000 crore number, 2,500 crore number, which we can directly catalyze? My belief is very high. With support like the channel like yourself, can the Abhiyan become larger? Right? I was debating on another channel. The anchor says that huge emotional attachment with gold. There is also a huge emotional attachment with the country. Now we have to strike the right chord.
Okay. Tell me one thing. I mean, in terms of the emotional attachment with gold as well, Feroz, the question is, for someone to go ahead and sell gold right now, are they getting anything which probably could be a carrot on the stick to go ahead and sell it right now? Because that is something that will probably help someone get detached from the emotion to some extent.
I'm sure you understand the emotion to jewelry or anything with gold much better, being a lady. I understand that there is some incentives can catalyze this drive, but kya hai na, pehel kaun karega, right? I personally believe that we have to do the start, and then can there be a catalyst? Of course, the government can say 3-4 months of capital gains on gold is zero. If they did that, people queue up to sell, in my judgment. But I think for the country, incentives, at least in our company, we operate like everything doesn't need incentive. Something needs a cause, right? If we can bring our currency to 85, of course, RBI can do its bit to make it from 97 to 96 in the morning by doing $5 billion ka swaps. And RBI can do a lot of stuff, and it is trying its best. If 100 crore people join, at least the 10 crore, 15 crore owners join in, it'll be very easy. And then we can again do foreign holidays. So coming back to your question, I think that it is possible. And the emotion incentives should be second step. And I hope with your channel, I'm sure someday the ministry will see and say, let me say, okay, these guys have done their bit. Now let me motivate them. Probably can happen 3 months from now. But I assure you, now that you're giving me airtime and giving me so much attention on the subject, which I'm very, very passionate about, that I assure you that I will confirm to you with receipts that I will sell. I will try my best. With God's grace to
one
sell
last
50,000.
question. One last question on this aspect is, do you think something can be done in terms of not accumulating gold through mutual funds or ETFs, where a directive can be put into place so that there could probably be a freeze in terms of accumulation from that side of it?
I think, people hate me to say that, right? But I think we should, if we can stop accepting monies in international funds,
correct.
Ideally, it can be considered. Now comes the question, is it mathematically right? See, I'm not making kisi ka nuksan nahi kar raha hu. Bhai, you look at, today we have AI. Everybody says AI. AI use karo. 10-year rolling return of gold is 4.1% from 1970. Okay, 10-year return average, rolling return is 4.1. I add 4% of dollar depreciation or dollar appreciation, rupee depreciation, 8.5%. 10-year, I think the odds of gold doing more than 9-10% is near impossibility. So if there are, Sukanya Samriddhi Yojana gives 8.5%, yeah, tax free. I'm not getting you to sell something at lows. I'm getting you to sell something at highs. And I'm getting you to sell something which on a 10-year basis has not been able to get to double digit. That's reality. Has there been one instance? There has been one instance where tabhi mach gayi, return itna bhayankar aaya. 20% compounded in dollar terms. I agree. But ठीक है यार, opportunity cost अगर हो गई for that 2-3%, 5% chance that you miss out a certain portion of the rally, it's okay. It's what I think most people are responding. And I'm getting support in actuals, not on internet.
Feroz, you're appealing to the public, to India right now to do something like this. Your focus, you said, is not the 1,000 rupee SIPs, but you're appealing to the 1,000 rupee SIPs right now to come and do something for the country. Why not come up with a scheme from Anand Rathi itself saying that, okay, this is what we have for you as a scheme and let's do something together. Because your appeal is to that 1,000 rupee SIP, but your product is not driven towards them.
See, 1,000 rupee SIP was in a different context. Let me clarify, but I'll do any Anand Rathi scheme if you can propose something. Okay, now, I was saying that I am not interested in virality. Otherwise, nor am I looking at some clients coming to me. Otherwise, people used to laugh at me saying that, Feroz, you are in private banking. You're going to shows which recommend SIPs of 1,000 rupees. How will that ever help your company? So I said, that's not what I can do. I can't manage a 1,000 rupee SIP, guys. Why precisely I'm going in the evening doing personal finance shows. That's what it was. So coming back to your point, if there is a scheme which can be proposed, can I put some money on the table? If I have projected 485 crores of PRAT as a listed company this year, can I put something on the table to catalyze this cause? For sure. But will
I think the suggestion, Feroz, the suggestion I would have is, okay, sell your gold to whatever extent you're proposing, and we will make sure, or at least get you into a scheme or, whatever you propose in terms of structure, where that will give you equal or more amount of returns in the future. Why not propose something like that?
Okay, that's what you meant. Okay, let me apply some mind. Guaranteed returns in my business are
I'm not saying guaranteed returns. I'm not saying guaranteed returns, but something which is similar where you know that at least that capital will stay protected, probably move at what gold is moving in at that pace.
Great. I think you've directed a great thought-provoking idea because there are structured products which can be designed around gold or any other index with capital protection. Superb thought process, Hiral. I'm very grateful. Actually, truly grateful because I can look at some products which don't give guaranteed return but gives you some degree of capital protection. Let me apply mind on that. But I'm so grateful that you're thinking on those lines so that we can actually, like my boss, Mr. CEO, coins this word generally. So it's his quote, जो देश से करे प्यार वो गोल्ड को बेचने से कैसे करे इनकार. Okay, so basically, if we invoke an emotion stronger than the emotion which we have with gold, we may be able to get there. Getting 1-2% monetization, 1-2% monetization, इससे छोटा क्या होगा यार?
नहीं, absolutely.
2 महीने की प्रॉफिट बुक कर लेना. जो लास्ट ईयर अगर आपकी 50% की रैली हुई है, तो उसमें से 1% बेचने में कितना टफ होगा?
Absolutely agree. Thought, very noble. Execution expected to come in now if people follow your path, and hoping, Feroz is actually probably putting a structure together where people can actually go to Anand Rathi to understand how they can probably get out of gold, get into any other structured product, but hoping to see some progress there. Thank you so much, Feroz, for putting out this thought process across, and looking forward to many conversations as well in the future. Thank you. So that was Feroz Aziz, but completely out of time, ladies and gentlemen, on this edition of India Market Open. Lots more lined up on the other side. Ask Profit next with Mahima and Puneet. Please stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots.
Hello, welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharani. With me is Puneet Zaveri. And since it's Thursday, we have Kush Bora with us in studio today. So lots of queries are going to come for you, specifically Kush, today. Before we start taking your questions, that, by the way, you can ask us on the numbers that are flashing on your screen up there. Let's take a quick look as to how the markets are doing. I think Kush will agree to the fact that we've been talking about this 23,700 resistance levels. We've crossed that at least for now. So we'll be watching out for as to how the day ends, up by about 0.5%. Let's try to pull up the Nifty 50 heat map and see as to what counters are pulling Nifty up right now. Grasim topping that chart, up 4.5%. I think Birla Opus is the one that's going to keep running Grasim's business going forward, because gaining of market share is something that they've gone ahead and said, and that's why we're seeing that 4.5% gain coming in on this one. Interglobe Aviation also one of the top gainers, up 3%. BEL today seeing some buying action, up 2% after the profit booking that we saw yesterday. Apollo Hospitals also on the back of numbers, up 2%. Adani Enterprises, Max Health, Bajaj Auto are also some of the other names that are doing fairly well. But largely, there's more green on the screen, and it's good to see that. On the flip side, you have Bajaj Finance, Nestle, Titan, some pressure coming in on these counters by about 0.5 to 0.6 odd percent. Let's try to pull up the Bank Nifty as well. The Bank Nifty also gaining by about 0.6 odd percent, hovering around the 53,800 levels now, almost trying to touch the 53,900 levels. Let's try to see the sectoral heat map as well to see as to what sectors are looking like at this hour. And you have defense topping that chart, up 1.9%, followed by realty, energy as well as metals doing fairly well. It's only the IT which is down by about 0.3 odd percent. Only that is the counter where we're seeing a tad bit of pressure. Let's try to pull up the advanced decline ratio and see as to what that is looking like, because yesterday in just the last couple of minutes we saw tides turn for the advanced decline ratio. We ended almost even Stevens yesterday, but today it's purely in the favor of the buyers right now, Puneet, as we speak, because you've got around 2,000 odd advances versus that of 500 odd decline. So 3:1 healthy ratio is what we're seeing there.
Most certainly. And while the growth actually in terms of what we've seen today, largely for the benchmark has been quite positive. It's a day of broader markets as well. So pull up the mid caps, the small caps, and then we'll just quickly highlight the individual names as well before we start taking your stock related queries. Mid caps up 0.5%. The small cap index is up 1% now. And the BSE 500 also shows you some of the result movers. It's a day where there's been a clear winners and losers. So while Samman Capital, the result is eye-popping to say the least. Write-offs all the way through, and the cleaning of the books happened. Stocks up 10% on the back of that commentary. Apart from that, also you've seen PNC Infratech also results weren't the greatest. I think it's the commentary that people are liking. Stocks up 5.6%. Metro Brands also a similar picture. We had the management today. On the flip side, though, Jubilant Foodworks is down. Bosch is down after the con call, though. Con call was at 9:30. Some key comments coming in there as well with the streets not liking. Garware Tech, PI Industries continues its downtick. Just pull up a few movers. Sangvi Movers is the first one I just want to quickly highlight because that is up 13%, I think, the last I checked on the back of results as well. And that momentum is maintained throughout. Pull up an Ola Electric. Results weren't the greatest. Commentary, while will support the near-term aspect, stocks down 4% on this news flow as well. The other one that I want to quickly highlight is Jubilant Foodworks, and I think we pulled that up in the BSE 500 also. That was down, I think, around 7% right now. And Mahima, this was a quarter where QSRs have been under pressure, but that's reflected in for numbers for Jubilant as well.
So I think it's the other way, right? Because you've seen Westlife doing well. You see Barbecue Nation turned out very well yesterday, locked in upper circuit yesterday. And as compared to that, Jubilant has not performed very well on the back of a high base as well. But I think the commentary was important. They've said that there could be near-term pressure in terms of margins, plus they could take price hikes going forward. And that's why the cautious approach is something that the street is not liking. Plus, the like-for-like growth was almost flat this quarter, which has not been the case for the last 4 quarters at least for Jubilant Foodworks. So I think that's something that's putting pressure on the counter as well. But let's start taking, all your stock-related queries. The first one that we have is from Ashwin, who's asking about Shipping Corporation of India. He's bought it at the levels of 217, and 50 shares is what he's already holding. Wants to know whether to sell or hold for the next 3 months. Kush, your view on the charts for this one? He's sitting on mild profits around 5,000 rupees.
Yeah, so first up, a very good morning. The profit in terms of the amount, you could call it mild, but I think these are very handsome gains in terms of percentage.
Levels,
so fantastic.
Because it's quantity is
absolutely fantastic buy, I would say. So right now, the entire space is doing well. Just to throw in a couple of names, G Shipping, something that we've discussed on the channel. Also Shri G Shipping. Some of these stocks have been doing well. I think you should continue holding on to this because you are making a handsome profit. I think a prudent strategy would be the trailing stop loss strategy, like I usually suggest. So keep your stop losses around the 310, 305 mark. If it dips below that, then this rally could fizzle out. But up until then, I think you should continue to hold. On the way up, targets of about 355 and 370 plus, very likely.
Got that view, Kush. And, before we take another query, let me welcome in Shaina Mukaddam, the independent market expert on the fundamental side of things. Shaina, we'll just come to you and take a quick question first. And this is a caller dialing in from Chennai. Our viewer, Shakar, I hope I'm pronouncing your name correctly, is joining us right now. Shankar, pardon me. Shankar, go ahead. What's your query?
Good morning, sir.
Good morning, Shankar.
Luckily to get Kush Bora is there. I'm very happy because earlier 2 times I asked this query to Kush Bora only.
Okay.
I bought 10 shares of Power India.
Okay.
At the average price of 19,200. Still I hold.
Okay.
I want to know about it future price rise. I think it will fly to like MRF.
And when did you buy this, Shankar? Because 19,200 on stock, that's at 36,000 is definitely very commendable. Did you buy this at the start of the year?
First I bought November 2025. 5 shares at the rate of 22,200. Then I bought 5 shares January end of 2026. I bought 16,200. So my average price is settled at 19,200. At that time I asked this question to Kushmora. It's a good company. Wait. He suggests wait. It's also a chance to fly to 30,000 at the time he commented.
Well, Shankar. Got it, Shankar. Well, thanks so much firstly for dialing in again on the day that Kush is in the studio as well. But Kush, for the last 6 months have been stupendous for this chart. So would you recommend Shankar to continue holding at this counter?
So first up, Shankar, thank you so much for that query. You're awesome, right? I'm glad that, the discussions that we've had on this stock in the past helped you. So it really brings a smile on my face, when something like this happens. So really happy for you. What I would suggest is that, yes, you can continue holding on to Hitachi Energy Power India, even from these levels. I think there is an upside to be had. My only hitch is that there is some overheating that is creeping in the stock. So, there could be some possibility of a profit booking that could come about. But because the momentum is strong, the volumes are also very healthy, even now after having this kind of a run-up, my suggestion would be you should continue holding on to this. But keep a trailing stop loss near the 32,000 and the 33,000 zone. If the stock were to dip to that level, in fact, if you see, in the last 5 sessions, the stock has actually rebounded from those levels, right? So if it were to dip again to those levels, I think you're better off booking it partially at least. So hold right now. If it goes to 32,000, 33,000 zone again, book partially and then hold the rest of the quantity. Take some money off the table if it dips.
Okay, all right. So that's the view coming in on Hitachi Energy. The next one that we have is on Apollo Hospitals. Siva from Toronto says that at what price can he enter into something like an Apollo Hospitals from a long-term perspective of 5 years? Shaina, the stock, of course, is buzzing today on the back of Q4 numbers. But your view on Apollo Hospitals and probably a price point at which he can enter for 5 years?
Yeah, so the numbers of Apollo Hospitals were quite decent. They are showing a decent growth both in terms of profitability as well as revenues. But yes, having said that, I think the diagnostic business also doing well. Having said that, I think it has started looking a bit expensive. So if I want to add to make decent money, I would buy it somewhere close to about 7,300, 7,500 type of levels. So buy it at dips, not today.
Got that view, Shaina. But next question coming in now, it's on CDSL and Jaideep from Mumbai. And we've been getting a lot of questions on CDSL, the whole capital market theme as well. So we're trying to take as many as possible. Jaideep bought it at 1482 Kush. He's holding it on to these shares, and he's asking if he should continue to do that, invest further either in CDSL or NSDL.
No. So this is slightly tricky in the sense that the stock is obviously below the buying price. The structure's not looking as exciting. I have maintained that you have to start getting very picky in the capital market space. BSE, MCX, even the AMC names. Those are the pockets where you want to be. CDSL has gone through selling for some time now. It is looking at a support near the 1200 mark, 1150 zone. Maybe it can hold on to that, maybe not. I wouldn't really buy more, but I would for sure have a stop loss at the 1150 mark. If that is broken, I would exit. And I really don't see any major triggers for it to rally too high from here. So if it does and it comes close to your buy price, you're better off exiting there. Right now, keep a stop loss at 1150.
Okay, all right. So that's the view coming in on CDSL. But time to take a look at the F&O space. And we have Sharad joining by to give us a perspective as to how the setup is looking like. Sharad, there is expiry, of course. But overall, I think the screen is looking decent today.
Well, yes, a little bit of a good reversal is also at play. But how much will it sustain? That's the big question to be asked. But yes, a sea of green coming in. Interglobe Aviation and BL, just have a look at that. They are doing really well in trade. Tata Steel also seeing a good momentum. But what's not working? No major kind of, stress. A little bit of profit booking after almost 3 days of good moves coming in the IT space. That's what we have. Tech Mahindra, Infosys, and also a little bit of Bajaj Finance in the red as well. But stock-specific moves still is something which we are focusing on. A long build-up happening after a long time. HDFC Bank is coming onto the screen. This is up, but it's not very convincing. But nevertheless, it is moving, especially the BankX, Hyundai Motors also. That's up almost 3% as well. Apart from this, let's look at the short covering. We have Samman Capital. Of course, the numbers were on the stronger side, so we'll try to understand more from the management as well. And Angel, when we are talking about the capital market theme, so this stock has again picked up. We saw that move this Monday also. Apart from this, looking at the long unwinding, there are some divergent trends happening. No major trade to be made here. A little bit of profit booking from Mankind Pharma also. And if you look at the overall short build up. That is where we see the sell-off is intensifying, especially for Jubilant FoodWorks on the back of earnings. The stock is down 7%, and Bosch also after the con call, no major positive news coming in. That's why the street is concerned about this counter as well. So stock-specific moves are happening in the F&O space.
Shara, thank you so much for giving us those details with regards to where the F&O setup goes. But I think Ravi is waiting by, who's calling us from Hyderabad. Ravi, a very good morning to you. What's your query about?
Yeah, very good morning. I have a query on GV Vernova T&D India.
Okay.
Currently, I'm holding 18 shares bought at 3170.
Okay.
Just want to know, shall I book profits and enter into some other counter, or shall I stay?
Ravi, did you see the charts while buying this counter?
Yeah.
Okay, all right. Then I'll take this up with Kush. Kush, your view on this one? He's sitting on profits of around 29,000 rupees. What should he do? Should he book out?
Handsome gains, there is momentum, and this has been a call, by the way, in this space, on the channel as well, that I've reiterated a couple of times already. It's already seen a round of profit booking and now rebounding. So it's not a bad idea to continue to hold. The profit booking dip that was supposed to come about has already come about, right? So you might as well hold on to this one. It has already, attempted to take out the recent swing highs that it made. So my suggestion would be continue holding on to, GVTND. It is creating negative divergences on the daily and the weekly setup, which means the momentum's waning a little. So maybe not a bad idea to book partially, but I wouldn't exit out of this stock completely. So partial book profit, hold the rest with a stop loss at 4650.
But well, it's very interesting because both those counters giving such good results, but there's a clear preference between the two at this point of time for both GVTND as well as Hitachi Energy, of course, that we just discussed previously as well. But another caller now from Hyderabad, and Praneeth has a stock query for us. Praneeth, very good morning to you. Welcome to the show. What's your query?
Yeah, good morning. I'm having a query regarding PNB, and I need a long-term outlook for 3-4 years actually.
Okay.
So I'm holding 700 shares actually. So, yeah.
And is this the only PSU name in your portfolio right now? And do you have any other private banking names as well, Praneeth?
Yeah, I'm having HDFC, and I'm also having IDBI Bank.
Okay, got it. Shaina, let me come to you then. HDFC Bank, IDBI, he also has, and asking a question to us specifically on PNB, bought at 104. What would you recommend for the next 3 to 4 years?
Well, I think PNB will see a bit more of weakness consolidation, while valuations are not expensive at just 0.8 times. But I think there was a bit of disappointment. The profits were showed more by the lower provisions. So of the three, if you take, I would of course prefer the large cap HDFC Bank over the next 1 year. I think that should do better because that stock has consolidated for a long time. And IDBI Bank, yes, because of the M&A activity, it may also see some bump up. It could take some time. So the preference would be HDFC Bank, IDBI, and then last PNB.
Okay, all right. So that's the view coming in on the entire banking space. In fact, there is one more on J&K Bank. Gautam from Bengaluru is holding 100 shares at the levels of 131. He's looking at a time horizon of 3 years and wants to know as to what could be the possible upside growth for this one. By the way, he's asking this to you, Kush Bora, 3-year view. If possible on the charts, if you can see.
Yeah, and I think I know why he's asking that, because J&K Bank as a standout, mover, I've pointed out a couple of times, at least on the morning show, and it has given a fabulous breakout after a very long period of consolidation. It's given you that breakout. It's holding above, those resistance levels and gaining ground. 3 years is a long time. A lot can happen in that. But if you see the kind of long-term chart of this, there is a major long-term cup and handle formation breakout that comes about at 145 and above those levels. So if the stock were able to go to that, close above that, I won't be surprised to see this stock actually go out and hit 195, 200 plus kind of levels also in the time frame that he's mentioning. For me, right now, this stock is a very clear hold. Good that you've bought it and bought it at very reasonable levels. So I suggest you continue holding on to this. Positional stop loss on this one comes close to 120, 125 zones.
Got it. Well, let's go across, take another caller now from Hyderabad, and Pawan has a stock query for us. Pawan, very good morning to you. Welcome to the show. What's your question?
Sir, very good morning. Sir, my question was REC. I have bought on 474, number of share was 200.
Okay.
So can I invest on it to average, or else can I shift to PFC?
Got it. Well, and do you want to hold this for the long term, Pawan, since both are getting merged? Okay, got it. Shaina, on REC, he's holding 200 shares at 474. Should he just make the switch to PFC if you want, and should he invest more in PFC at this point of time?
Yeah, I think it will make sense to switch from REC to PFC. I think once the merger happens, of course, it will be a stronger organization, and valuations also. If you look at even PFC standalone, is not too expensive. It's about one-time price to book. So I think it is a better switch at current levels because REC doesn't seem to be going anywhere.
Okay, all right. So that's the view coming in on PFC and REC. The next one that we have is from Yamini, who's writing us from Chennai, asking about Max Health. She's got 40 shares at the levels of 1025 and wants a short-term perspective on this. Should I sell it at the current levels or should I continue to hold is what she's asking, or whether she should accumulate? What's your view on the charts, Kush?
So I wouldn't recommend to accumulate right now because it's had a good run up, right? If you see the chart, it's actually precisely at the 200-day moving average. I mean, today intraday it went past that and then it's seeing that profit booking. But good structure, good volume accumulation, the golden crossover of the 20 and the 50-day moving average happened a while ago. I think if it takes out this 200-day moving average today on a closing basis, more upsides can be had. And anyway, her buying price is very attractive. So my suggestion, a definite hold on Max Healthcare. And I would suggest a stop loss near the 1065 mark, 1070 zone. So continue holding on to it. You just wanted to cross this 200 DM at 1090.
Got that view, Kush. But the next one, next caller actually dialing in from Pune. And Vinay has a stock query for us. Vinay, good morning. Welcome to Ask Profit. What's your question?
Yeah, good morning. I have a question. Is it right time to replace TCS by either Coforge or NetWeb, and secondly, CDSL by MCX?
Got it. But Vinay, unfortunately, I can only take one question since they are both polar opposites in what they're doing right now as well. Apart from TCS, do you have any other IT name in your portfolio?
Yes.
Which one is that?
The TCS itself.
Okay,
that is the only thing I have.
Okay, so you only have TCS. Got it. China, would you make that switch right now, switching out TCS with Coforge, or are you avoiding that space as of now? Is the valuation lucrative to you?
See, TCS, I would remain with TCS, but half of it he also mentioned NetWeb. Now, I would believe NetWeb valuations are a bit expensive, but I think the longer term prospects are very strong, given the semiconductor and chip growth potential over the long term in India. So I would believe that half the quantity from TCS, yes, he can switch, but instead of Coforge, switch it into NetWeb, buy it at dips, buy NetWeb at dips, and then you can hold it for the medium to longer term.
Okay, all right. So that's the view on the IT counters that we just talked about. The next one is on GAIL. Our viewer Nidhika from Pune is holding 100 shares at the levels of 191. What she's asking is she wants to know as to what should be her next course of action considering the technicals. So Kush, your view on GAIL?
Not so positive. It's had a series of lower top, lower high, lower low formations, falling trendline resistance. The stock's attempt at rebounds have fizzled out. It was attempting a breakout near 165, 170 zones, not really materialized. Volumes on the way down heavy. I think you get the drift, right? It's not really holding up. I know you're on a bit of a loss and that's painful, but the structure does not really look as great. My suggestion would be exit.
All right, we've got, I think, Yogesh, who's calling us from Jaipur. Yogesh, a very good morning to you. What's your query about?
Good morning, Mahima. Actually, my query is Bohra ji.
Sure. Go ahead, ask your question.
Yeah, I am always buying everything, and so I am asking about the PSUs. I have a Bank of Baroda share. And actually, I am holding last 5 years. This time I am think I will buy for this in this price, and how much time I will hold for that. It is last 5 years. It will very good sector for me.
Okay. So
what I do for that?
So but your question is basically on BOB. Got it. I'll take this up with Kush. Kush, he's I think bought 500 shares at the levels of 269. What would you suggest? What should he do?
I think Yogesh is a frequent caller. I think Yogesh from Jaipur is a frequent caller, and I think he knows that I'm a Marwadi. He perhaps one day will start talking in Marwadi.
I think he calls us only on Thursdays, it seems.
Yeah. I think a few of them do, but that's so sweet of him. So Yogesh ji, I'll try to answer that in Hindi if that is okay. So PSU बैंक्स में पर से कोई प्रॉब्लम नहीं है, इट्स जस्ट दैट मोमेंटम बिल्ड नहीं हो पा रहा है। मेरा व्यू अगर आपने सुना हो तो बैंकिंग पे पिछले 2-3 दिन से कंस्ट्रक्टिव चल रहा है और बैंक निफ्टी ने थोड़ा जंप भी दिखाया है, फॉलो थ्रू मूव नहीं आ रही है। तो अगर आपका व्यू यहाँ से मैं कहूँगा 1 से 3 महीने का या उससे थोड़ा ज़्यादा का है तो आप बैंक ऑफ बड़ौदा डेफिनेटली होल्ड कर सकते हैं, 250 के आसपास स्टॉप लॉस रखिए। लेकिन बिकॉज यू बीन सो स्वीट एंड काइंड, मैं एक और स्टॉक आपको सजेस्ट कर दूंगा, बैंक ऑफ महाराष्ट्र। बहुत अच्छा ट्रैक्शन है इसमें, काफ़ी अच्छा रन अप आया था, थोड़ा प्रॉफिट बुकिंग भी आ गया है। 77 एक बहुत अच्छा सपोर्ट जोन है, सो मे बी उसके आसपास या उसके जस्ट नीचे आप अपना स्टॉप लॉस रख के ये स्टॉक भी कंसिडर कर सकते हैं। सो 75-77 के आसपास अपना स्टॉप लॉस रखें, बैंक ऑफ महाराष्ट्र भी कंसिडर कर सकते हैं, बैंक ऑफ बड़ौदा होल्ड करें, 250 के आसपास का स्टॉप लॉस।
Got that view, coach. So you got 1 pay 1 free, Yogesh, at this point of time. A good maha bet.
Not everybody gets it.
Not everybody gets it. Yes. So Yogesh, I think is the Marwadi connection that might be working here as well, coach. Being very selective with his choices. But viewers, it's now time for the rapid fire round in this edition of Ask Profit. Shine as well as coach, you know the drill. First question on Force Motors. Is it a good buy now for the next 1 year? Shaina, would you recommend that?
Yes, it's a buy.
Okay, the next one is on Apollo Microsystems. Gaurav from Bengaluru wants to know whether he can enter into this counter from a short-term perspective. If yes, what should be the price, Kush?
No, don't enter now. You might want to enter close to the 330-340 zone and keep a stop loss then at 315, not now.
Okay.
Fractal is the other one. Komal from Mumbai is holding shares at 909. Wants a long-term view. Shaina, I know you don't track IPOs, but is this one making the cut?
I think I'll pass.
Okay. Any view, Kush? I know it's a very recent listing though.
Yeah, but it had a good up move and then a very sharp downturn. I would suggest a hold. Keep a trailing stop loss at your buying price. It could start the up move again.
Okay, Geo Finance is the next one. Harsha from Mumbai has been holding 1,000 shares at the level of 367. China continue to hold?
Well, she can switch to some other, NBFC or bank. It looks like it will consolidate for some more time. So I would say, it's a switch.
Got it. CG Power, Kush, a short-term view is what Vijay is asking.
Yeah, very interesting stock picked there. I would suggest, you can enter into it. 840 is your stop loss. On the way up, look at 885 and 915 plus kind of level. So good pick.
Okay, Sterling and Wilson is the next one. Our viewer has bought it at around 270 levels. Continue to hold this from a long-term perspective or sell? Shaina, your view?
I would suggest that he switches even from Sterling and Wilson. It's a switch.
Got it. On Dalmia Bharat, Kush, Ray from Bangalore is holding shares at 2085 and he's also following up the company because they've announced a fundraise. Does that have any impact on the charts? Anything that you're looking at right now?
Yeah, not a positive one at that, but because the stock is close to long-term support zones, I would suggest a hold with a stop loss at 1650.
Okay, Dixon Tech is the next one. Our viewer Ajit from Dubai is bought it at the level of 10,400. He says he's sitting on a profits of around 5,000 rupees because he's holding 10 shares. Sorry. Shaina, continue to hold from a long-term perspective?
Yes, I believe the valuations are starting to look attractive, so he can continue to hold for the long term. Short term, it may see a bit of consolidation.
Okay.
Got that view. Shaina, on SBI also, Mohan from Surat wants to know, Shaina, he's holding shares at 775. Should he continue to hold? Is there a time to buy more now?
No, I would say just continue to hold. Look for dips to buy. Don't buy immediately. It can consolidate for some time.
Okay, the next one is on Paris Defense. Our viewer has bought it at the levels of 353. 100 shares is what he or she is holding. Continue to hold, Kush?
Yes, you can very well continue to hold this. I would suggest positional stop at about 700.
Enviro Infra is the other one. Our viewer Charan from Bangalore bought shares at 177. China, a view on the stock?
I believe it's a hold. I think the segment is doing pretty well. It's a hold.
100 shares of Jubilant Foodworks bought at the level of 680. Our viewer is already sitting on a loss of 24,000 rupees. Continue to hold from a long-term perspective. Shaina?
Long-term perspective, we are hold, but I would believe Devyani looks better compared to Jubilant as of now.
Got it. Pawan from Andhra Pradesh, was watching an interview of Samvardhana Motherson, and thanks so much for that, Pawan. He wants to know, Shaina, that the other two verticals, aerospace, consumer, that's starting to build up now. Probably, do you think that's in the valuation? Should he buy for the long term?
I think that isn't a valuation because otherwise valuations look pretty expensive if you look at the shorter term, but numbers were pretty good. So yes, I would take the rally, continue to hold, keep stop losses, but hold for now.
Okay, the next one is on Quality Power. Nitin from Andhra Pradesh has bought at the levels of 425. Slightly long-term perspective on the charts, Kush?
Recovery underway. I think you should very well continue to hold. Deepish stop loss close to the 1,000 mark.
Okay, all right. That brings us to the end of this rapid fire round. Viewers, time to slip into a very, very short break, but don't go anywhere. We'll be answering more queries on the other side.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on.
All right, welcome back. You're watching Ask Profit. For viewers who are just tuning in, you can either call us or WhatsApp us your stock-related queries on the numbers that are flashing on your screen up there. The next one that we have is from Chanchal, who's writing us from Vasai. This question is for you, Kush. She wants to invest 50,000 rupees in auto ancillaries. Is this the right approach, is what her first question is? And if yes, what are the counters to look at?
So I think Chanchal's been listening to me because I have mentioned that I like the auto anc space. I mean, despite whatever is happening with the OEMs and whatever is going to happen, with a lot of the input costs and everything, probably China can shed light on that a little better. But I continue to like the space because of the kind of price movement. That's still there on the stocks, right? So if you want to consider, I would suggest Wheels India on declines, something that I've repeatedly mentioned on the channel and has done fabulously well. But right now it's overheated. So if you do get it close to about 1450, 1500 zones, I think you should consider that. Look at Bellrise also. That is also something that is doing well. So these are a couple of stocks that I can suggest. Bellrise, by the way, you can buy right now and keep a stop loss around the 200 mark.
Well, Shaina, actually, since Kush mentioned on Wheels India, I think that joint venture with Bosch is just driving that momentum on the stock today. Anything that you have on Shaina view on Wheels India or on Bosch? Bosch is actually down 4.5-5% now in terms of the post-con call view. But the revenue is actually doubled in the last 5 years for Bosch, right? Any view that you have on either of those counters?
I think Wheels India looks very interesting. The numbers also were very healthy, very strong numbers. And I believe with all good orders coming in from their joint venture partners, there is some pressure on overall margins because of increase in metal prices. But I think largely they pass it on over a period of time. And especially this quarter, numbers were very good. It's a small cap. Balance sheet is also very strong. So I would concur with Kush that Wheels India looks like an interesting bet as of now.
Got it. And hopefully that answers the question also from Murli as well. He bought Bosch at 36,932. And he has been following the company as well. The big acquisition of 9,000 crores of Bosch Chassis Limited will be the future, of course, Murli. But that's the view coming in from Shaina. And hopefully that helps you as well. Piyush Rai, unfortunately, is asking us on a stock that, Kush, I think we've asked you about 100 times now on Happiest Minds. He's bought shares at 886 and is currently in the losses. Would you recommend averaging? What should he do?
You already know the answer to the first part of the query, right?
I have to give hope to viewers, right? If abhi kya kare?
Hope is not a good strategy, Puneet. Hope is not a good strategy.
Absolutely not.
Yeah, no. Okay, so this is difficult because he's sitting on massive losses, primarily because of that. My view on this is not very constructive. It is attempting a rebound, but again, it doesn't have enough strength or enough volumes going for it. The honest answer is that you should exit out of this right now. It's consolidating with a negative bias. If you want to give yourself some chance of maybe the stock rebounding and having a slightly lesser loss, keep a stop loss at 330. But the outlook, despite this kind of fall, is not looking great.
Okay, all right. So that's the view coming on Happiest Minds. The next one that we have is from Arvind, who's asking about CESC. He's got around 100 shares. What he's saying is that he's bought it before the West Bengal elections at 181. Wants to know if there is further possible upside on this one, possible or not from a slightly long-term perspective. So Shaina, your view on CESC?
Well, yes, I think they are doing pretty well in power sector. I think the overall sector is doing well, and not only that, even CSE looks pretty decent from current levels. I would believe that they have got good plans for both expansion. Their numbers, even for the quarter, were quite good, March quarter numbers. So I would say it's a hold at current levels.
The next question coming in on Bajaj Housing Finance question, Harsha from Vijayawada, who's a regular viewer, but bought shares at 165, so very elevated levels. Is it starting to form that bottom at 82, 83? It's come there twice, thrice, but what's your view on the stock now? What should she do?
Okay, because of the nature of queries that we've been receiving off late, where viewers are sitting on a deep stop loss or deep losses, right? My honest suggestion, trade लेने के पहले stop loss decide कर लो और जब वो level आता है exit कर जाओ. This is an honest suggestion in terms of a trading strategy. The three things you should know before you enter into a stock: target, stop loss and time frame. इन तीनों में से जो भी आपका trigger हो जाता है, you should exit. Okay, so that's the general view for everyone. As far as Bajaj Housing Finance goes, look, nothing to write home about. There aren't really these signs कि यहाँ से turnaround हो रहा है or anything. Also, the kind of April rally that came about is starting to fizzle out now. Again, the structure not looking good. There is a gap around the 80 mark. Perhaps that could get filled and perhaps the stock then could attempt a rebound. Since you're already sitting at this much loss, my suggestion, continue to hold with a 79 rupee as a tight stop loss. But like I said, the structure even now is not looking so great.
Okay, so that's the view on Bajaj Housing Finance. And I think, Kush, you've put forward a very important point. It's very important to stick to your stop losses because, just yesterday, I think if I'm not wrong, I saw somebody having deep pocket loss of around 6 lakh rupees, which might be his or her appetite, but still that's a big amount of loss that you're incurring. So very important point. And Kush, thanks for pointing that out. The next one is on Cupid. This is also for you, Kush. 300 shares bought at the levels of 102. 3 months outlook on this one. Hold, sell, buy at the current market price. Kishore from Chennai wants to know.
Interesting stock, interesting buy. The price is also very, reasonable. So I think he's done a brave thing buying it at that price. My suggestion, you should continue to hold. Profit booking dip that was expected came about last week. The stock is now again attempting a rebound. Trailing stop loss at 112. 112. Good possibility of the stock hitting the recent swing high of 133 and about 140 plus kind of levels in the next 3 months. So a hold with a trailing stop loss at 112.
Got that view, Kush. The next question coming in now. And this one's on Mahindra and Mahindra. Are the current levels a good entry point for the next 2 years? Is the question from Ajit from Kochi. Would you recommend that? China, it's corrected back to that 3,000, 3,100 mark and has been, in that 200 to 300 point range. Is now a good time to buy for the future?
So I would not buy for the future as of now. I would keep a hold and look for dips to buy, because one is monsoons is uncertain and that could have some impact on their volumes and tractors, which is doing pretty well as of now. So I would not buy as of now. Keep a watch and buy at dips.
Okay, all right. So that's the view coming on M&M. The next one that we have is on Barbecue Nation, that is United Food Brands. Now 200 shares bought at the levels of 580. Our viewer wants to know whether to continue to hold, exit, what should be the next course of action. He says that he's been holding this since a really long time and sitting on a loss and stuck since 2+ years. So now what should he do? Kush, I'll come to you on this one. Your view on the charts for this one. Yesterday it did hit an upper circuit, but what's the view?
Looks like it's on track to hitting that again, today. I haven't tracked it in terms of the news, but perhaps there's either a news or a result reaction or something of that sort. 2 days on the trot, this kind of move without news is very difficult. Good thing is that it's still some distance from overheating, so it does have room on the upside. Volumes are fabulous for yesterday and today. So I would suggest a hold. A stop loss on this one comes close to about 440, 435 zone. So keep that as your stop loss. Continue to hold. The stock might face resistance around 525 levels. I think it's slightly shy from your buying price. But once it goes to those levels, you might want to start offloading gradually.
Got that view. I think that 14% plus seems to sales growth. I think that's on the results, as you rightly mentioned, that's driving the trigger and has been, an underperformer in that sense in terms of fundamentals. And I think hence just the first aspect of seeing that kind of revival is probably something the street's lapping up at this moment. Continuing with that as well, a stock that's done well for investors today, Sangvi Movers. Soumya from Bangalore has bought shares at 336 and holding almost 3,000 shares of the counter. So sitting on good gains right now, up 14%. What would you recommend here, Shaina? Because, a very sharp move on results, but any views on Sangvi Movers?
Well, yeah, I think, the numbers also were quite, I would say okay, though they are continuing to do better. In fact, quarter over quarter also, and the numbers were in fact very good, which I see now. So, and I think stock price is also reflecting that, and it's a hold at current levels, continue to hold.
Okay, all right. So that's the view coming in on Sangvi Movers. The next one that we have is coming in from Chandan, who's writing us from Hyderabad, asking about AB Capital. He's got around 150 shares, and from a short-term perspective, he's bought it by the way at the levels of 360. Wants to know as to what should he do next. Kush, your view on the charts?
Yeah, we had a discussion on this, today morning. I think you should continue to hold. The stock is consolidating. The bias is positive. Of course, you could ignore today's move, but in the medium term, the bias is positive on this one. I would suggest a stop loss at 335. But once it takes out, these 369, 370 levels, I think it could get into an upward trajectory, afresh from here. So yes, continue to hold. Stop loss at 335.
Got that view, Kush. The next one coming in on JK Tires, and Ramana from Hyderabad wants to know a medium-term view of the stock. Kush, what would you recommend? She's asking for a stop loss and a target. I think she's heard you.
This is brilliant. This is application of theory.
Very quickly,
the theory doesn't make you money. The application does. So fantastic. Kudos to you on that. Has she mentioned the buy price on this, by the way?
410.
Okay. So the I think from a near-term perspective, the tire story is done. A lot of these stocks just flew off the radar, right? They were on a roll, no pun intended. So I think you should perhaps exit this right now. I would suggest a stop loss, but with the kind of structure that there is, it's actually better if you exit it. Again, if you want to give yourself a chance, keep a stop loss at 335. But right now, the structure is weak to negative.
Well, I don't like that thing that you're saying is the tire story is done as an auto researcher. I don't like it one bit, Kush. But Shaina,
how about the input prices?
Yeah, Shaina, and actually I'll just ask Shaina also on this. Shaina, do you also feel that the tire space is done in the near term? Sorry, it's a tough question, but Kush has led me and rolled me into that question in that sense.
Well, the valuations are starting to look expensive because raw material prices are impacting their overall margins. I would agree that for now auto anch stocks are starting to look a bit expensive on pure valuations.
Okay, all right. Kush did a small dance
out of it.
because you agreed to him, and Puneet is not very happy with this. But anyways, moving on to the next one. NSDL is a query that Kochu Tarangu from Dubai is asking about. His buying price is 1161 and 56 shares is what he's holding. He's already sitting on a loss of around 19,000 rupees and wants to know whether to continue to hold or exit. Kush, your view?
Exit. The volumes even now, look at the last week volumes, massive. Right, I mean, way above, not way above, but significantly above the last 20-day moving averages, despite the kind of vertical fall that the stock has seen. So, like I said, no real indicators of a revival or anything. It's a better idea to exit right now.
Correct. Well, True Alt is the other one. A very, the ethanol play has been focused over the last couple of quarters, and True Alt is a beneficiary of that. So is Manul, who's from Delhi and bought shares at 377, so sitting in gains. Wants to know if he should book out the profit or continue to hold. Shaina, you track this counter. They've got some good targets over the next 2 years, but any view on True Alt?
Well, see, what we saw last quarter was a loss, but I think from there things are starting to look a bit better, both in terms of government policy. So as of now, given the technicals also, I think it's a hold as of now. The stock is doing pretty well. Hold for now.
Okay, all right. The next one that we have is on ITC. Our viewer Karthikeyan from Thiruvananthapuram is holding around 1,415 shares of ITC that he bought at an average price of 343. Says from a long-term perspective, can he continue to hold, sell, buy more, average at the current levels? Shaina, your view on ITC?
Well, I've been an ITC bull for quite some time. It has disappointed for last couple of, I would say, months. But at the same time, I would continue to hold because of valuations, pretty attractive valuations. And in terms of cigarette, I don't think today the numbers are going to be too great in terms of volumes. But of course, one needs to wait for 1 or 2 quarters before taking any major decision on ITC. It's a good dividend play. I would continue to hold for the long term.
And I think not just the first half, right? FY27 is going to be tough for them considering the taxes, the price hikes that they're going to take, plus the tobacco leaf inflation itself is not helping the margins. So I think the FMCG business is going to be the star performer for ITC for at least the next 3 to 4 quarters. Of course, earnings today, we'll be watching out for the commentary as well. But that's on ITC. The next one that we have is on EPAC durables. I think Puneet, who tracks this very closely, we've been having extensive discussion about this one as to how they've managed to do, come down to zero profits this quarter. What's gone wrong?
It's a very weak quarter for the company, most certainly. And it's not helped down 8.5% now. And it's not helped that the PLI benefits, some of those have been actually reversed. So FY25 PLI benefits have been reversed. Some more clarification from the management is awaited. But Shaina, we're seeing a lot of pressure on the AC side of things, right? Voltas also, Blue Star also, the results weren't the greatest, and today EPAC as well. How are you viewing this space? Any view that you can offer on EPAC specifically also for Venu from Hyderabad, who bought shares at 239?
Well, see, they are facing this problem because of the problems that are happening in the Middle East. And and also plus in terms of their raw material costs is also being impacted. But I think the balance sheet is strong. And after this correction that we've seen in the stock, maybe, if one is looking to add, one can add at lower levels. And if one is already holding, I believe at slight dips, you can in fact average if you're looking at the long term, because the problems are not going to get over in the next 1 or 2 quarters. But if you're looking for, small cap with potential, then maybe at lower levels you could add, but not at current levels.
So that's the view on EPAC durables. The next one is on the pharma space. Uma from Bengaluru says, by the way, this is for you, Kush, that she has got no pharma company in her portfolio, which is that one stock at the current market price that looks attractive to enter. 6 weeks straight gains for the Nifty Pharma is what we've seen, right, Kush? And a lot of pharma stocks, I mean, we've been talking about this as well, have done exceptionally well in the past so many days, right? Any particular one that you think now still makes sense to maybe enter and make some profits?
Sorry, what's the name again?
Uma from Bengaluru.
Uma, okay, great. First of all, thank you, Uma, for directing the query at me. You've actually made life difficult for me because every second day I've had at least one pharma stock in the list as a buy call, right?
In fact, I was going to say it might not be just one. You might have multiple options.
Why not make a basket, right?
Yeah.
I mean, why be that concentrated? So I think I'll give you a couple of names, in this. Again, you would have listened to, some of these names on the channel, when I gave them out as calls, but you can definitely consider them even now. So one is Senoris Pharma, the other is Ajanta Pharma, and the third is Ipca Labs. So a lot of these names have had, a good price up move. Some of them have already seen profit booking and rebounding. Something like Senoris hasn't really, and it continues to do well. So I think you should consider these three names just for your benefit. I will repeat these: Senoris, Ajanta, and Ipca Labs. So these are some three stocks that you can consider as a pharma basket rather than that one single concentrated stock.
Got that view, Kush. So definitely a good pill to swallow is what Kush is recommending today on this one.
Funds, I see, huh?
It is a day of funds. And it's been a good market day today, right? I think the first time in this week where we've seen some kind of momentum. So lapping it up with both hands at this point of time. And another caller now from Bengaluru, and Chaitra has a stock query for us. Chaitra, very good morning to you. What's your query?
Very good morning to all of you, sir. This question is for Kush Bora, sir. What is his view on EMS space, and what are the stock suggestions for this for long term and short term? So, yeah.
Got it, Chaitra. Kush, you've been very volatile to say the least. Anything that you like right now? Because on the fundamentals, I think the two companies that gave good results were the smaller ones. You had Sirma, you had Avalon, and the other three have just been bearing the brunt right now, maybe of size, maybe of demand. What would you recommend?
Yeah, so Chaitra, thank you for directing the query at me. Beautiful name, by the way. I am not very gung-ho about the entire space. I mean, it's not really something that has just gone through the roof and, makes a screaming buy. Even after falling so much, a lot of these names don't really come up as a screaming buy. My suggestion would be focus on three stocks, and I will rank them. Actually, this is my ranking for these stocks. One is Sirma. The other is Avalon, and I'll add one more to the list, which is PG Electroplast. So PG Electroplast already seeing some profit booking, but there are signs of rebounding from here on. So, like I said, you might not want to go overboard, in terms of allocating too much money to this space. But if you want to, you should have these three stocks on your radar. Again, Sirma, Avalon, and PG Electroplast in that order.
Okay.
Got that view. I think the next question is on Maruti Suzuki, and our viewer has bought shares at actually 15,700, so slightly elevated levels on valuations, asking for what he should do with his 20 shares. Shaina, is it a good time to probably average down? What are the levels you're looking at? Currently I think 15,700, slightly elevated in that sense. What would you recommend?
Yeah. So the investor is making losses. And even at current levels, for the shorter term, I don't think, the stock is going to rebound. While there are volumes that are doing well, capacity expansion is there on the cards, but all this takes time, and they are having some problems with raw material costs going up. So I would say if you want to average, it's better to average close to about the maybe 11,000 type of levels, but not at current levels. You can just wait and watch.
Okay, all right. Time for our rapid fire round. Kush and China, try to keep your answers as short as possible. The first one is from Mohammed, who's asking about DCB Bank. He's bought around 1,000 shares at the levels of 182. What's the short-term outlook on this, Kush?
Yeah, you can continue to hold. Stop loss at 173.
Finolex Cables, Shaina bought at 9 Rand 10 by Sabita from Hyderabad. What should she do with this counter now?
She can continue to hold.
Okay, the next one that we have is on Page Industries. Our viewer wants to know whether can he buy the stock at the current levels, though the results are supposed to come today. Shaina, any long-term view on this one?
Yeah, he can. It looks pretty good, so he can buy it at any dips, but not today because the numbers are today. So
Yeah,
wait,
exactly.
but yes.
Got it. On Anup Engineering, is it a good time to purchase right now, Shaina? Would you recommend that for our viewer Madhusudan?
I'll pass this. I don't track it.
Anything on the charts, Kush, that you might be tracking on Anup Engineering?
Nothing to write home about. I'd give it a miss.
Okay, the next one is on Yes Bank. 10,000 shares bought at the levels of 28. Kush?
Continue to hold.
Are you saying a no?
If he would have asked me whether to buy or not, I would have said a no. But because you already have it, keep a stop loss at 20, continue to hold, exit at slightly higher levels.
Next one's Translate Lighting bought at 500 by Bindu from Vijayawada. Should she continue to hold her 100 shares, China?
Yeah, she can continue to hold it. Though I think it looks pretty weak for now, but maybe on a rebound she could look to exit, but as of now, hold.
Ajanta Pharma is the next one. Kush already likes it technically. Shahina, your view, our viewer Astha from Delhi has bought it at the levels of 3192.
Yeah, it's a hold.
Kush, MobiQuick bought at 234. Jyoti from Delhi wants to know if she can exit.
Yeah, that will be the better option. Yeah, you might want to exit this.
Okay, Kush, the next one is from Satyan. He's asking whether Ajanta Pharma or Biocon, which one to choose for better and faster returns. I believe it's Ajanta. Okay.
Yeah, there you have it.
The next one's on Latent View, bought at 421 by Avinash Naidu from Bangalore. Wants to know if he can book his losses or should he hold. Shaina?
I think he should hold it for now. He probably will get some better levels because there seems to be some bit of a bounce as of now. So he can hold it for now and look for a bounce to exit.
Okay, the next one is on Idea Forge. 100 shares bought at the levels of 560. What should be the target price and stop loss for the next 3 months? Kush?
Yes, so Idea Forge has had a run up looking at some sort of profit booking. My suggestion, stop loss 690. On the way up, look for targets of about 815 and then the recent swing high of about 890.
Sansera Engineering, Bindu from Hyderabad bought shares at 2415. Stocks flying up in 13% in trade today post results as well. What would you recommend here, Shaina? Good aerospace, auto play in that sense?
Well, it's a very high risk stock actually. But I would say hold for now because here in terms of valuations it is very expensive. But since it's diversifying into aerospace and various other sectors, it may be do better in the longer term. So as of now, I'd give it a hold. Risky stock.
Okay, Welspun Corp 200 shares bought at the levels of 935. Continue to hold. Push.
Sorry, what's the buy price?
935.
Yeah, continue to hold. It's getting overheated, so you might want to book 50%, hold the rest with 1275 as stop loss.
Oberoi Realty bought at 411 by Sagar. He's holding 5,000 shares here, Shaina. Should he continue to hold? He's sitting on massive gains. Should he book out now?
I think even at current levels, you can continue to hold. The overall sector is coming back in focus, so hold.
Okay, Tamil Nadu Mercantile Bank bought at the levels of 545. Short-term target on this one. 500 shares is what Satish is holding. Kush?
Good structure, some profit booking. Continue to hold with a stop loss at 660, 650 zone.
Okay, all right. This brings us to the end of the second rapid fire round as well. Kush and Shaina, thank you so much for helping us answer all those stock-related questions. And viewers, if you've missed out your queries on this one, you can always call us or WhatsApp us at 2 p.m. because that's the second edition of Ask Profit. But till then, do stay tuned and keep watching NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and it's a very interesting show where I get you companies which are buzzing on earnings, hidden gems, and also a lot of retail interest, and I get you these interesting companies for you. And today also there's a very interesting company, but before that, try to guess it. The first hint, it's a certification services company for natural and lab-grown diamonds. The second one is also very much important. The company is backed by ADIA, which is nothing but Abu Dhabi Investment Authority and Government of Singapore. And also if you look at it, the company's promoter is Blackstone Group. Interesting, right? Company has come earlier in KYC also. That's another hint I'd like to give you. And they've delivered a strong March quarter. Interestingly, from January lows itself, the stock itself is up 25% as well. Talking about gem and jewelry, but the company is a certification company. So the company in focus today in KYC is going to be International Gemological Institute. This is the company which we are talking about. The company has come out with a good set of numbers. But what are the key questions we will try to ask? Of course, on the earnings and the outlook going ahead. Let's put out the key questions, for this company. The first one is definitely going to be on the growth expectations for FY27. Is there any change in the margins, change in the sales outlook, volumes? That's what we'll talk about. Also the LGD, which is nothing but lab-grown diamond. How's the volume looking like? Is there any, changes happening in this certifications for this segment? PM Modi recently urged to buy less gold, but will this impact the studded jewelry volumes? That's also a key question a lot of investors have been putting up. The Middle East conflict, what happens on the impact on business? Remember, the company has, offices in Abu Dhabi and Dubai as well. Apart from this, the AGL acquisition, that's where a bullish commentary is coming in, especially on the diversification part. That's something we'll be watching out for. And also, the diamond prices, they have fallen almost 50%. Does that impact the demand, and is there a second order impact on the company? Also, apart from this, the 3-year sales CAGR is of 25%. Will this growth momentum continue, or because of a higher base, there might be a little bit of moderation going ahead? And of course, we'll be asking the certification gap. Is it widening between LGDs and the natural diamond segment or not? So these are the key questions. And to put that in perspective, we'll have the global CFO of the company, Ishwar Iyer, with us. But before that, let's try to learn about the company. What does this company always do? Or you could say, what does the company's main operations are? Of course, the certification and accreditation of diamonds, colored gemstones and jewelry is something their core business. And to get more things in perspective, of course, they do the grading reports for the diamonds and this colored stone origin reports as well. They have an education setup also, and 55 to 90% market share they're having across their key categories. And interestingly, apart from this, the backing is something which the street is quite bullish on. The promoters is Blackstone and of course backed by some really large institutions globally as well. Also, let's look at the other details about the company. They have transitioned. If you're tracking this company, now it's April to March. Earlier it was on a calendar year basis, so that's an important point to mark. And the global network of 36 labs and 21 schools of gemology across 10 countries. That's what we are going to talk about. And also the revenue mix, let's just have a look how things are panning out. Largely lab grown is 60%. That's the majority I'm talking about. After that, there is some kind of a breakup. Of course, the natural diamonds, that's around 15%. The remaining goes for the jewelry and the gemstone segment. This is where their certification they do of these key products. But March quarter highlights, it was something very strong. The total certifications went up 16% on a year-on-year basis. And also, if I give you more details, let's just pull up the other key triggers, and there was a strong growth momentum on the certification of their key business segments as well. Also, the bullish commentary is coming on the AGL acquisition, and that's coming from the management. So we'll try to understand what are the incremental benefits actually there. The average realization prices, they did go up by 4% on a year-on-year basis, coming in at 987 rupees per share. The reason is the increased mix of natural and lab grown loose stones, and that is why the average selling price, which is called ASP, has gone up. Largely, let's see the industry, how things are panned up, and this is a very important takeaway. 4 times there's a production growth coming in the last 3 to 4 years. Also looking at the industry size for the India is almost $0.6 to $0.7 billion. For the global, look at that, that's $10 to $13 billion. But how the CAGR growth is looking like, that's around 13 to 15% for India, and for global, it is around 6 to 8%. So if you're understanding the industry, do take a note or take a screenshot of this data. What works for the company? Of course, strong operational and financial parameters are there. High ROCE company, Blackstone as a promoter group, things are looking really strong here. And also one positive point is it's a debt-free company. So largely these are the key positive pointers coming in, but what is there? Where is the lack happening? Where is the concern? There is a lack of analyst coverage in this stock. Secondly, IPO, post its IPO, it was in the year end of 2024. After that, there hasn't been any major institutional buying post the IPO, and it's almost 1.5 years now. The benefits of the recent AGL acquisition will take time. It's not that it's going to happen next quarter, it's going to take some time, and that is what a little bit of concern or caution would be there if I am analyzing this company. But to analyze this company more in KYC, I'll be getting you those 8 parameters where we judge a company. And interestingly, there includes income statement, balance sheet, cash flow. These are the official financial ratios to track. Return ratios, I'll get you both the ROCs and ROEs. And don't worry, Street Cred also will try to understand from the IPO price, has the company made any money or not. Shareholding, of course, we spoke about valuations. The company doesn't have a peer, so we'll be judging their peak and the current valuations, and of course the outlook on the industry going ahead. So 8 parameters for the KYC in this show. The first one, let's start with, that's the income statement, and largely the 3-year CAGR, revenue, EBITDA, PAT, all of them growing 30% plus. So a good, healthy income statement growth in the long-term basis. But the Q4 numbers is something which I was very bullish on, and that is where we are seeing a good momentum happening. If you could just show the Q4 numbers, and this definitely beats whatever the expectations was there in the street. A year-on-year basis, there is a good growth coming, and they're sustaining it. The question is, will they sustain going ahead or not? Let's pull up the margins also to see what has happened. Remember, most of the data is calendar year, and now they are changing the reporting period, and there's a good up move in the margins also at 64% in first quarter calendar year 26, or let's just put it March quarter to simplify it for your analysis. So net income statement is a strong thumbs up. Let's look at balance sheet. Remember I mentioned that the company is debt-free company, so that's a good sign. A healthy balance is also there of 464 crore rupees, and if you have a promoter like Blackstone, you can expect that the balance sheet and the working capital will be maintained very professionally, and that's what we are seeing. So balance sheet is also a strong thumbs up. So we spoke about income statement, we spoke about balance sheet, all of them are ticking. But cash flows, let's see what's happening. And remember, the company has come earlier in KYC also, and I'll give you the entire history of it, but you need to be stay tuned with KYC right now. A little bit of variance here in the net cash flows. Of course, some adjustments are there when it comes to the investing in the financing segment, but largely from the cash flow operations, it is a decent growth and the conversion is also pretty decent. So let's keep it neutral and give this a neutral rating when it comes to the cash flow segment. Let's talk about the return ratios. And remember, this return ratios numbers for the last 2 years we have gotten, it's roughly from 48% is the ROC and now it's at 45%. There's an adjustment also. Let's pull up the ROE numbers to show you. And remember, this is a very high return ratio business. Same thing story happens here as well. Remember, there was an adjustment also which the company has taken in place, and because of that, this return ratio minor hit has come in. If you compare that, this is the reason for it, the ROE adjustment for a fresh equity issue. It was there in the month of December 2024. But nevertheless, ROE, ROC strong is dhande ka, and we know that by now. Also, let's talk about the shareholding, what has happened. The promoter shareholding, of course, we spoke about it. Blackstone is the group here. But my concern is, we had good names in the IPO, but after that, have the good names added positions? No, it hasn't, and it's been almost 1.5 years. It's largely same. Actually, FIs have reduced a little bit. It's coming in at 9%, and DI's holding has been flat. No major move for the public also. So largely the institutions are holding most of the stock. So it's a neutral rating right now when it comes to the shareholding. But the question remains is, has the stock made money for retail or for the investors? That's the key question. And remember, from January lows, I had mentioned the stock is up 25%. But the concern is from here, from its lifetime high levels, especially during its IPO time, the stock was, trading at a pretty stronger rate. It's down 43%. It hasn't recovered yet. And also from the IPO price also, there is a fall. It's down 12% from 1 year basis. Also, the stock is down 7%. So concern is there when it comes to the overall performance, because that money hasn't been made yet. Because of that, I'm going to give this a thumbs down. Let's talk about valuations, how things pan out. And largely the peak valuations are 41 times, especially during the euphoria of the IPO. But after that, correction has happened and it's at 30 times right now if you compare that with the 12-month trailing P. So largely valuations seem neutral right now. I can't say very attractive because there's just only one company. What's the sectoral valuation? We need to give it more time. It's just been 1.5 years. So I'm going to give this a neutral rating as well. But outlook, let's see what's happening here. And outlook seems to be turning more bullish. I just read the recent, management commentary, the bullish commentary coming on American Gemological Labs. That is something which we need to talk about. LGD, the lab-grown diamond, is definitely at inflection, and now the industry is moving towards volume. Zyada volume aayega, zyada certifications karenge to simplify it for you, and also a good visibility comes for the revenue. Now, are they using AI to increase their operational efficiencies? That's what we'll try to understand, and if yes, will the margin outlook go up? And the volume growth, pricing stability and operating leverage already exists. So company is reiterating that statement. So net, the outlook remains pretty strong. And of course, Indian government recently standardized a terminology for this lab-grown diamond. So more you see, more quantification happens, more regulations come in, so more certifications also come in. So it's a strong thumbs up when it comes to the outlook. Let's see what's the final rating in the KYC segment for International Gemological Institute, and largely income statement, balance sheet have been really strong. Cash flow is decent. The concern is definitely not here. The concern comes in the street cred because the returns haven't come in for the investors, and at the end of the day, everybody wants returns. Also, let's look at the valuations. Largely, we could say neutral, but the outlook is something which the management is quite bullish on. So let's give in the entire KYC ratings for the company, and right now is going to be 5.5 out of 8. It's largely in line to positive on the average numbers which I generally give. But there is an interesting take. There's a history of this company coming in KYC for the third straight time they have come. So let's give you the entire picture. First time they came in March 2025. It was around 5.5 out of 8, first time from the IPO. After that, early this year, they came a minor dip, but now they have regained it back in the May 2026 in today's KYC as well. So this is the entire KYC report card for IGI as well. But to understand more, we'll be joined in by the management. He's Ishwar Iyer. He's the global CFO of this company, and interestingly, he has been at this helm from October 2023 onwards. So, interesting conversation with Ishwar, but just after a straight break.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what.
Welcome back to KYC, and now we are joined in by Ishwar Iyer. He's the Global CFO at International Gemological Institute. Ishwar, it's always a pleasure to have you in NDTV Profit, and of course, first foremost, a good set of numbers coming in Q4. Of course, Q3 also last time we spoke was strong as well. And the question is, does this momentum continue in FY27 as well? Because there is a hint of uncertainty all throughout the globe. So how do you take that?
Yeah, thanks. It's a pleasure to be on the show. Thank you for having us here. Yeah, we've had a extremely strong, actually 4 quarters, 4-5 quarters post the listing. Yes, there are uncertainties that we all are grappling with. We've given a full year guidance again at around 15% of revenue growth and 20% EBITDA growth. So, and as the year starts, it's been a strong first, quarter 4 for us now.
So right now you have, and right now you have shifted, right. So will there be any accounting adjustments also in the coming, or
no, there is no accounting adjustments. It's just that versus the classical 12-month reporting report out, I think we have now going with a 15-month report. And just to ensure that there is adequate comparatives, etc., our investor deck is also capturing a corresponding 15-month comparison versus for the previous period as well.
Exactly. So as an analyst, it got a bit like,
because
too much on me, like 15 months and 12 months. But anyways, the certification segment, the volume growth, you spoke about the numbers, it's fine, but the certification, is there some kind of a tailwind happening here? Because you mentioned in your presentation that now LGD becomes a volume play. What does that mean?
See, I think what's just to give a context on how the LGD has evolved, the US market has been the first adopter of lab-grown diamonds. All of the manufacturing sits in India, and that's the reason most of the certification also happens here in India. So it's basically a made in India product with a made in India certification body as well. And because of the affordability that it works with, I think there is a lot of scope for the Indian consumer also to come into play. And that is what we are also looking at, because while it's today in the US, most of whatever gets manufactured here goes to the US. In due course of time, I guess the Indian consumers will also come into the fray. And that's the trend that we are also seeing over the last 4 or 5 quarters, because if you were to look at our lab-grown jewelry certification business, it's pretty small now, but it's growing at a healthy 25-30% range in the last 3-4 quarters. This quarter was around 29%,
right.
I guess.
And
yeah.
the margins front also, Ishwar, I was just looking at it. There's a good contribution coming from the studded segment also. Do you think this trend continues? And if yes, what kind of margins we are looking at?
See, over the last 4 or 5 quarters, I think our margins has been pretty consistent. Plus, I think it's been always plus 1 or 2. But I think importantly from the company standpoint, there are significant investments that we are making. There is, I don't know whether you've been able to notice it, we co-sponsored the Ladies World Cup last year.
Okay.
We are also now partnering with Gujarat Titans for the IPL.
Anything on the FIFA World Cup?
Not yet. We'll have to think through that. But I think we are also making significant brand investments, because the need for a third-party independent certification body is far more important today than the past.
So Ishwar, that means if you're doing a significant brand investment, so your expenses would be coming in. So a little bit of margin pressure would be there if you want more visibility.
We hope that with the volume throughput that's coming in, and just to address your first question as well, I think significant capacity additions are also happening in this segment, because as I mentioned, probably the Indian consumer also comes into play. There's a lot of retail activity also going on in terms of number of outlets that are getting open to sell lab-grown jewelry. So there is a lot of interplay at the moment which is happening, and with our operating leverage that we have, some of this volume throughput also enables us to therefore getting good cash flows from
And literally you do not have a major competitor in India, and you have most of the market share also. You're having a lion's share of it. I just wanted to understand, there's a lot of, Middle East issues, West Asia issues coming in. You also have offices in Dubai and Abu Dhabi. Is there an impact there happening?
See, I think at the early onset of the war, obviously we are concerns. I don't think the business is that important.
So nothing coming on the numbers in first quarter?
Nothing that's come on the numbers, but I think we are very cognizant to ensure that our people are protected there. So business obviously takes a backseat when you have such issues there. So I think our paramount important aspect that we wanted to start with when the war started was to ensure that the people there is safe. But they've been able to manage the transition pretty well. I don't think there is too many issues.
So
we have an office only in Dubai.
Is fine. Okay.
We have an office only in Dubai. It's been okay. I don't think there has been anything to worry about at the moment.
Right. And there's a lot of bullishness coming in your commentary for the AGL, American Global Institute. We spoke about it. And this time we can see that the conviction coming in. If this conviction comes in, by when can this conviction come in your numbers? The benefits, when did that number start accruing, and why this acquisition is important?
Yeah, I think to address your last question first, this is a strategic investment that the company has done, because our services is restricted to diamonds. We wanted to enter gemstones, and AGL is a leading brand as far as gemstone certification is concerned. So that is the thought process behind doing this acquisition. But the important thing to also, for everybody, the audience also to know is, you can't scale it up overnight, because this is high competence, highly skilled work that happens. And this is a 10-11 man organization based in New York. So you have to build that sort of structures and infrastructure to do this grading elsewhere. See, what happens is with that, the skill set that they have, and the geographical presence that IGI has, there is a good marriage that happens. Now, how do you translate that into getting new offices in, because we have Jaipur is a very large market for gemstones in India. Thailand is pretty big, Dubai is pretty big, China is also getting very big. Now, how do you build that competence across the other offices in terms of recruiting skilled labor?
So it is still a work in progress.
Yeah, it's absolutely a work in progress. The integrations have happened. We have also talked about 2 months of revenue that seeped into our numbers this year. It's given us an incremental 2% revenue growth as well. But I think the
real chunk will come.
Absolutely, the real job starts now for us. in terms of building that capability across our offices.
So you can expect 2-3 quarters.
I think
after
absolutely
that.
2-3 quarters. I think let everything settle down at the moment. I think there's a lot of work that's gone in terms of integrating financial processes.
So it's going to take time, but nevertheless, on a full year basis, the benefits will start coming in. And the diamond prices, that's a concern. The prices have fallen, and I'm talking about the last 2-3 years. The stock, you could say the price is down 50%. So does that impact the volumes or the purchasing decision?
I think while the prices corrected sometime in 2024, but we have seen a lot of stability since then, because beyond a certain base price fall, the profitability and the commercials of the growers also get impacted. So we have seen that sort of stability at least on lab-grown wholesale prices. But you must understand that the retail prices are significantly, they are holding firm because they're like 5-6 times at price at what it's
the diamond prices.
Because there's a brand play brand at play.
We have been seeing also so much retail
and investments coming in.
जैसे एक diamond का दुकान है तो उसके बाजू में lab grown diamond की एक छोटी दुकान आ रही है, and that's what we have seen the trend happening across all the high streets which I have visited. I have seen that. But there's a gap widening. Is there a certifications gap widening between LGDs and natural diamonds right now?
No, I think, see, the 4 C's are what determine the commercial value of the diamond, be it natural or lab grown. So without the 4 C's, it's impossible to do a trade between the various players in the value chain.
And just for information, what are the 4 C's for the people who are tuning in for the first time?
So this is cut, color, clarity, and the carat weight.
Cut, color, clarity, and carat weight. So these 4 things are there. You should remember that.
These 4 C's determine the commercial value of a diamond. It's akin to a 18 carat or 24 carat or a 9 carat gold. So this 4 C's is what determines the value of the diamond, and that is very critical. So regardless of whether it's natural diamond or lab grown, IGI provides 4 C's for both. So
right, that's pretty much interesting. And the last question I need to ask is the market share, because you already have, there's a range there. I couldn't find it in the investor presentation. Last time we spoke, it was between 55 to 90% on your key categories. Any gain which has come in any category?
You see, I think for us, an important prerogative has been to get into natural diamond space because
that's roughly 65% of your revenue.
I think since India we have probably that level, but globally we must be around 20-25%. So I think the largest market obviously is the US. So that is an important aspect for us to drive, and that's something that we're trying to work on. The natural diamond business also grown 18% over the 15-month period, and there was some 10% this quarter.
Right, so that's a pretty interesting take coming in. But yes, this time, from the last time we spoke in KYC, and from now, there is a stark improvement, in the company's, vision as well. So very interesting story. It's always a pleasure to talk with you, Ishwar.
Same here.
And that's the interesting story of International Gemological Institute. And stay tuned to KYC and NDTV Profit for these interesting stories.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots.
Good afternoon, you're watching Markets at 12 with me, Somit Sarkar. This is the show where we get you updates on the top buzzers and the news updates at the noon. But first up, let's go across to the Zydus management. Now, Zydus Life has reported a strong set of numbers led by a strong recovery in the North America business, robust growth in rare disease therapies and continued momentum in the consumer wellness business is what has aided the company in the fourth quarter of FY26. Let's listen into the conversation that we had with Sharvil Patel, the MD of Zydus Group.
You guided high teens growth but lower margins. I mean, what can go wrong? Because in FY26, your margins were around 33% when it comes to EBITDA margins. Guiding a lower margin but a high teen growth, what can go wrong here?
Thank you for the compliments. I think, yes, we have seen very strong FY26 and also ending the year Q4 on a very high EBITDA margins. I think you have to look at the EBITDA margins two ways. If you remove the ERF contributions, obviously we are around the 26% range in terms of EBITDA margins. But seeing a very strong export-driven business, obviously we see a meaningful foreign exchange gain. So whenever we guide for the future margins, we are obviously talking about net of foreign exchange gains. So from that point of view, we still believe that FY27 and going forward, we'll see high double-digit growths on the revenue front, which is industry beating in my view. Also, this will be driven across the businesses and not by one or two businesses. So we'll see our India business driving meaningfully higher growth than the IPM and double digits. We would see international markets, which last year grew at 40%, continue to show that momentum. And India and the US business, which was sitting on a high base on Revlimid, it will also continue to see growth momentum in the coming year. So all-round performance, we are guiding towards a 24% plus EBITDA margins, which is still very strong and one of the better margins in the industry. And we hope that going forward, we will continue to improve on those margins.
Right, understood. And, Mr. Patel, when it comes to North America, you're expecting a single-digit growth, of course, despite FY26 high base. Is this a temporary phase or new normal when it comes to US generics, the single-digit growth guidance that you have given?
So you have to understand what has happened in the US business. In the last 3 years, we have meaningfully scaled up our US business with many launches on day one. We know that as an industry, we had this opportunity on Revlimid for us, and which has now gone away in this fourth quarter. So despite seeing that gap, we have seen good growth in FY26. And going forward in FY27, we are still confident on a single-digit growth. But if you take a 3-year view, we will see strong momentum and better growths in the US business. But obviously, we have to cover the exclusivity loss that we have seen on Revlimid, and we should be able to show that. So, while people have been worried about degrowths in the US as Zydus, we are confident of showing growth in this year and continue to improve on the double-digit growth as we move forward.
Right. And also, sir, Mirabegron, we all know the competition when it comes to this drug, Mirabegron. How big is the revenue or margin risk for Zydus as a whole?
So we have, Mirabegron has been a good product for the organization. We have already had a settlement, and we will see a 3-player market probably until the end of the next year. So we have built in that scenario into the business and into our guidance, and it will still remain a very good product for the company. But as I said, we continue to see very robust growth in the US with multiple launches. So we expect 40 plus launches in this year. We also continue to see that the base business continues to grow in share and volume. So not only are we seeing good launches, but also our established products business also doing well. And then the scale up of our 505(b)(2) specialty business, the rare disease Sentinel business, which has become profitable now, overall is aiding to the growth momentum for the organization.
Understood. And also, Mr. Patel, you're pivoting from generics to specialty, I would say. What percentage of your revenues or US revenues can come from specialty in maybe, next 3 to 5 years?
So, yes, a very important aspect of our growth, not only in the US, but also in other markets, is going to be driven by our differentiated pipeline. If you first start with India, saroglitazar, desidustat, our first launches of the biosimilars, all have meaningfully contributed to the business. In fact, the saroglitazar molecule as a franchise has become now more than 500 crores in the market. And with 30-40% growth, so I'm sure it will cross the 1,000 crore mark very soon. And we're seeing similar opportunities with desidustat and other molecules as well. In the US, with the rare disease business scaling up, the 505(b)(2) business scaling up now in the next 3 years, we see that maybe 30 to 40% of our future growths will be driven out of the specialty differentiated pipeline, not only for the US market, but also for many of our other markets.
Right. And, talking about the Assertio acquisition that you have recently done, what's the revenue or margin potential for this platform? And also, I think Rolbitin has only 4% market share currently. How fast can you scale this?
Yes, so I think we have already built a supportive oncology marketing team and front-end teams in our business, and we've launched Beizray, which is one of the drugs. We have one more filing that we've done on the 505(b)(2), which we hope we'll get to commercialize. So Revlimid will fit very well in with our specialty team that is already there commercializing the products. So we see very meaningful synergies with the acquisition. We still believe we will be around the 4%, 5% range only. We are not looking to expand it further, at least in a base case scenario. And assuming the base case scenario with the synergies, we see it as an EPS accretive business in this year itself. So it will be it'll add meaningfully to the business and also very high profitability.
Right. And Mr. Patel, talking about the India business, which was also strong, which was also a stronger one, the chronic mix, if you see, improved to 46%. What's the next leg of mix improvement from here?
So we will continue to see better growths on the chronic segment. We have added 200 to 400 basis point, 400 plus basis point improvement on chronic, and that we'll see. We still believe that we will grow at least 200 to 400 basis points faster than the IPM. We have demonstrated good growth in the last 8 to 10 quarters, and we hope we continue to do so. It will be driven by our growth booster brands, our specialty portfolio of our own pipeline of products that we have commercialized, new launches, and also sustained growth on our chronic portfolio. So all in all, I think we will see that momentum continuing, and with saroglitazar obviously leading in the front.
Right. And, Mr. Patel, biosimilars, is the current hot topic after semaglutide currently. When can this become a meaningful driver for Zydus? If you would, help us with that also.
Yes, so I think it's been a very important part of our strategy and plans. In India, we are now the largest biosimilar player, India's largest Indian oncology player, aided by the strong launches that we have done on monoclonals, on ADCs. We are seeing very strong momentum for this business in India, and we are, if you look at the top 2 or 3 biosimilar brands, all are Zydus brands today. So we have seen very strong traction on this. Similarly, with our capabilities, we are also internationalizing our business with many launches coming the next 2 to 3 years in different markets. Today, we have 15 to 17 biosimilars that we commercialize. I'm sure it'll only add to it going forward. In the US, we licensed ranibizumab, which we're launching very soon. We have licensed pembrolizumab, which is one of the largest drug molecules in the world, Keytruda. We believe we could be the first filer to this in the US very soon, and we're very excited with that opportunity in the future. Obviously, our acquisition of the Assertio also brings in a monoclonal antibody, biologicals for us with this differentiated GCSF. So overall, we are building a strong pipeline on biosimilars. It is already a meaningful business in India and scaled and largest. We believe we can replicate this in the next 5 years in the developed and the developing markets as well.
Right. And so lastly, on to the semaglutide, of course, opportunity. You claim to be having a second position when it comes to semaglutide. I know this is very early, but if you could also help us understand what's the current, market share and any plans for oral, semaglutide as well, because number of companies are also coming up with that.
So yes, it has been a very important and good launch on semaglutide. We have a novel formulation that we have launched, which offers very significant patient ease and benefit and cost benefit as well. Also reduces the complexity of supply chain with multiple devices. Great start for us and also for our partners. If you look at the top 5 players, 3 of the players are product companies which have Zydus product launched. So very exciting times. We are right now, and month of April is the 2nd in terms of the branded generics injectable market. So we can hope to consolidate and continue to grow. We are seeing better visibility going forward with a very significant uptick in our expectations, both from ourselves and our partners. So it will become a meaningful product for the organization with the differentiation that has been created. Yes, oral also we will continue to look at it, but oral has its own challenges on bioavailability, also in terms of effectiveness of weight loss and other related issues. So I think it will be a segment, but I think we are driving the injectable segment more strongly because that is where we believe maximum benefit to the patient exists.
Well, that was the extensive chat coming in on Zydus Life. Well, shifting focus from Zydus Life to another earnings related company, that is Team Lease. Now, a mixed set of numbers. Revenues declined on a sequential basis, but margins were steady. Moreover, the company announced a buyback worth nearly 240 odd crore rupees. Let's get in the management. Ramani Dhati, the CFO of Team Lease Services, to understand the way forward for the company. So, firstly, to start off with, for FY27, what is the outlook when it comes to headcount additions? Will it be positive?
Absolutely. So for FY27, we are very confident on maintaining a positive growth on the headcount. While in Q1, between June, July, we are planning for transition of about 10,000 headcount in our staffing segment because these are very low margin mandates and they've been a drag on our margins. And our focus, so next year, our focus is going to be a lot more on profit and margin expansion. So in June, July, we'll be kind of transitioning that 10,000 headcount, but even net of that, on a full year basis, we should be growing with meaningful volume on our top.
Right. And when it comes to the general staffing business, do you think that has bottomed out? and BFSI hiring a slowdown is largely now behind?
So BFSI slowness for us is largely driven by one large NBFC, and now the hiring in BFSI segment also has been picking up. At the same time, we are seeing a large new hiring happening in segments like retail, manufacturing, logistics, and also broad-based across consumer segments. Having said that, given the current geopolitical situation, global headwinds, so there is a little slowness in the hiring trends. And to some extent, in certain job roles, there is also an AI impact in the short term. Also, labor codes, since many companies are going through their CTC restructuring and workforce planning in view of the labor codes, we have indicated that for the next 1 or 2 quarters, there can be relatively lower hiring compared to last year H1. There can be relatively lower hiring, but this is going to be just for 1 or 2 quarters is what our assessment is, in line with the discussions that we are having with clients. Overall, the outlook for next year in general staffing is a lot more focused on profit expansion. So on bottom line, we are targeting a 20% growth, while top line can be a single-digit, low or medium single-digit growth, mainly because of the fact that we are seeing more and more job positions coming in from tier 2, tier 3 places, where average salaries are 30-40% lower than our current average salaries. Because of that, the top line growth may seem as if it's low, but on bottom line, we'll be adding a lot more mandates at higher realization, more value-added services, and very targeted approach to high growth industries and higher profit pool clients. So coming to specialized staffing segment, as we have called on the investor meeting yesterday, GCC segment for us is adding very good contribution both on top line as well as bottom line in our specialized segment. And we believe that momentum will continue into FY27 as well.
Okay, and just wanted to understand from you on this, the ongoing conflict in the Gulf region. Could that potentially slow down decision making on workforce addition? Anything on that front that you're seeing, any trends that are emerging?
I may not be able to call out any particular impact coming from the Middle East trend, because we have been going through multiple impacts and multiple headwinds coming from different directions. Having said that, as far as sales roles are concerned, we are seeing very strong hiring trend. Be it sales within retail or consumer durables or even the general overall all service industry sales, we are seeing very strong demand for sales profiles. The other non-sales segment within few pockets like logistics is very strong, or maybe even within manufacturing, some pockets are very strong. But pure play back office or calling activities, customer service related kind of job roles is where we are seeing some level of stress. But since 60% of our base is mainly into sales, and in fact, that's where our strength is, we are taking sales staffing as a main offering to our clients.
Okay. When it comes to the other HR services, that witnessed a significant margin expansion, EBITDA margin expansion to around 16.5%. Is that sustainable?
No, there is a seasonality in Q4 because especially within our EdTech business, a lot more invoices or billing happens in the months of Feb and March to the universities. But on a full year basis, we should be able to maintain 8 to 10% of EBITDA margin for FY27 within HR services. Q4 will always be higher. Even FY27 Q4 will have 20%, 16 to 20% of EBITDA margin. Full year would be 8 to 10%.
And one question on the buyback. I believe you are giving around 40% of your net cash to investors via this buyback. And also, correct me if I'm wrong here, I believe there is a net TDS receivable of around 246 crore from the income tax. So if that comes in, say in this year, could there be a special dividend as well going forward?
The board will be evaluating on the dividend option, but as per the regulation, we have to maintain a gap of at least 6 months between the buyback and the dividend. But you are right, we are expecting some more tax refunds to come in FY27. Also, our cash conversion on EBITDA is very high, like our earnings quality is very high. So even though we are going to use 40% of our existing free cash for buyback, we believe by end of FY27, like by March, April 2027, we should be back to again 500 to 550 crore of free cash.
Well, thank you, ma'am. Thank you for joining us and giving us the way forward for TeamLease. Strong management commentary coming in from TeamLease, both on financial operations and also on cash generation. Moving on, the Adani Group is advancing its resolution plan with the JP Group, acquiring key power and logistic assets. Sharad is joining us with all the developments that have happened.
Well, yes, an important implementation coming in with Adani Group and the JP Group as well. First announcement for Adani Power, two important acquisitions. The acquisition of 180 megawatt thermal power plant, which is located in Uttar Pradesh for almost 1200 crore rupees. And secondly, an acquisition of other related assets and almost 11.5% in Prayagraj Power Generation Company. Also, another acquisition of 24% in Jaiprakash Power Ventures, which is coming in at almost 3,000 odd crore rupees. Now, why this is important? Because the company is having 3 power plants and aggregate capacity is more than 2,000 megawatt and 2 million tons per annum of cement grinding unit, and a coal mine is also included. Apart from this, Adani Ports is also in focus, and because the reason is that they're acquiring 100% stake in JP Group's Kanpur Fertilizer and Chemicals, and largely the deal will be at 1,500 crore rupees. And remember, more than the company itself, it's the land. Almost 243 acres of land is there in Kanpur, and it is strategically important, especially for the logistics park and the warehousing facilities. That will augur well for Adani Ports. Also, this will further consolidate the company's inland logistics presence and service more capabilities in northern India, and it will also expand its network, the MMLP network, from 12 to 16, and the warehousing capacity by almost 4 times by the year 2031. So this augurs well for both the Adani Group stocks.
Well, thank you, Sharad, on that. Well, shifting focus to IndiCube Spaces. Now, if you look at the company's numbers, the EBITDA did expand on a sequential basis, but so did the company's net loss. From 17 crore, it increased to, I believe, 23 crore in the fourth quarter of FY26. To give us more clarification on the Rishi Das, the company's founder, is joining us. So, firstly, to start off with, yes, you have your EBITDA has expanded on a sequential basis, but so did your net loss. By when do you expect to break even on the profitability front?
Yeah, thank you. I think what loss you are talking about is on the account of accounting standard, Ind AS. If you look at our PAT for the year that got over, our PAT has been 125 crores, and we have paid an income tax of 21 crores. So accounting standard, which is Ind AS in this case, is where basically the leases that we have are capitalized and then they are amortized. So as a result, you are seeing an exceptionally high EBITDA in the Ind AS accounting standard, and even in spite of that, you see a loss. So the right way to look at the P&L is the IGAAP accounting standard. And there, compared to last year, where our PAT was 51 crores, this year our PAT has been 125 crores, and EBITDA is 301 crore, and this has grown compared to last year by 60%. And top line has been 1,469 crores, an increase of 37% over last year.
Well, thank you, sir, for that clarification. Now, coming on to the seat addition part, I believe for FY26 you had given a guidance of 33 to 35,000, but you did around 28,000. So, why did this miss happen? Firstly, and then what is your FY27 outlook for seat additions?
Yeah, so seat typically, of course, like there are some exits that happen in the business, and this is a net seat addition that you are seeing, and some of it has got shifted to the Q1 of this year compared to the last year. That's where you are seeing the dip. And if you look at like our area that we have at the end of the year 6.6 million square feet of 6.3 million square feet of rent yielding area where we have these two clients, and we have a total space availability of AUM of 9.66 million. So we have a good 3.3 million, which is 50% of our current space available for growth. And we see that some of these supplies are signed up, which will be delivered over the year, or some of them may go even to the next year. So we are very confident that we should be able to have a 25 to 27% revenue growth in this year, and also along with that, our unit economics, the metrics, the steady state occupancy, EBITDA margins, PAT margins, and all that should remain range bound.
Okay. And if you could just give us some idea on what are the kind of demand trends that we are witnessing from GCCs, startups, and enterprise clients in the managed workspace segment?
Yeah. So 55% of our revenue is coming from global capability centers. So they definitely are leading the pack. And after that, we have the IT services companies. And these are like the technology guys with a lot of focus from mid-cap companies, followed by a lot of unicorns, late-stage startups, post-IPO startups, which form the other big chunk. So broadly, our space uptake is divided into these three buckets. And typically, the GCCs are growing very, very fast. And they continue to grow. Also, we are noticing that there is a lot of diversity in the GCC flow that is coming in. GCCs are no longer coming just from North America. They are coming from even Asia, Europe, and they are not confined just to retail or BFSI. We are seeing a lot of GCCs in the area of healthcare, manufacturing, logistics, also getting coming in over there. So overall, it has been quite robust, and the uptake of real estate, if you see last calendar year, has been 82 million square feet. Bangalore has contributed about 30 million square feet out of that. Our industry, the flex industry, has been 23 to 25% of the overall space uptake over there. And even the Q1 calendar year numbers, Jan, Feb, March, have been very, very encouraging. Typically, about 20 million square feet of space has been picked up just in the Jan, Feb, March timeframe as well. So overall, we see very robust uptake. The GCC leading the show, followed by the mid-cap IT services, and then the Indian startups and all.
Right. When you look at the value-added services, the contribution has increased steadily, what we are seeing. Do you see this value-added services becoming a meaningful margin driver over the medium term?
So as you rightly highlighted, VAS value-added services was contributing 12%. Now this year it has been 15%. And we see over the period of 12 to 24 months, this is going to 20%. And because our philosophy from the beginning has been that whatever B2B and B2C services companies require to run their office operations, we should be providing them the entire spectrum. And I think at one level, they are liking it. So for example, somebody has taken 2 offices from us in IndiCube. And if they have 10 offices across India, they are expecting us to also provide services, manage stuff in the other 8 locations. So a lot of growth is coming from not just the IndiCube building, it is going beyond IndiCube as well. And all these services are new additions. So from a margin point of view, if you see where most of the services margins hover between 10 to 15%, which is lower than typically our 18-20% EBITDA margin for our regular office space, managed office space business over there. But we see that over a period of next couple of years, as these services will stabilize, typically we should be able to see healthy margins in this as well.
And lastly, sir, if you could just give us some idea on which cities or micro markets are currently witnessing the strongest traction when it comes to managed office demand.
These are usual suspects, I will say, like, for example, the good performing markets where the occupancy is north of 90%, kind of market, for example, Outer Ring Road in Bangalore, or if you look at locations like Puramangala, HSR over here, or if you look at Gindi in Chennai, OMR Zone 1 over there, or if you talk about Golf Course Road in Gurgaon. Those are the, I will say, the best performing markets. Typically, and because the availability of real estate is quite limited over there, we see that they will continue to do well.
Right, sir.
And we have like about 75-80% of our presence in these micro markets.
Yeah. Right. Well, thank you, sir. Thank you for joining us and giving us the way forward for IndiCube. Well, that was the management, quite optimistic on FY27 growth plans. Well, that's all we have on the show today. Stay tuned and keep watching NDTV Profit.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
हर पल मनाओ केसरी त्योहार विमल बोलो जुबां केसरी.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your world.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the profit pit with all the action in the markets today. Sharad, interesting day of trade. The kind of reactions that we are seeing to earnings, which is absolutely stock specific, is also very strong. And the recovery that has come in, the range though is slightly narrow. What are you picking up so far?
Well, that's right. Good afternoon, Hiral. There is a little bit of divergence at play. Nifty, interestingly, was in a range, but now it's near the day's low level. There seems to be a minor sell-off happening, but remember, there was a gap-up opening. The technical strength was looking decent for the last two trading sessions, but we'll come to that. Nifty Bank, let's see what's happening here. There was a divergence I had mentioned earlier. Let's just pull out the Nifty Bank's intraday chart, and the sell-off has intensified. We are at the day's low level for Nifty Bank. So overall, the technical setup for Nifty Bank is still slightly weak than Nifty, but it's largely range-bound. If you're a medium-term trader, you could talk about. But what are the key factors to watch out for? And remember, important thing is there is a Sensex expiry at play as well. But nevertheless, let's just pull out the other factors also why it's important to track. And interestingly, the key support levels for both Nifty and Nifty Bank, there seems to be a little bit of numbers movement here. Technical setup has improved for the last two trading sessions. So nevertheless, it's still in the red right now.
Also, let's see the other key important reason, and remember there's a Sensex expiry at play also. SMIDs, you talk about it, they are outperforming the benchmark indices. If you could focus on the mid cap and the small cap indices, Nifty support between 23,600 to 700, so it's a very important level to watch out for. I've given a very short range because there's a volatility at play. Nifty Bank's technical setup is weaker, as we had mentioned earlier, as compared to Nifty. And of course, looking at the sectors where the action is happening, there is telecom, capital goods for second straight day, good momentum, and industrials also. So good volume-based buying continues in these sectors. Also, apart from this, the rupee, that has strengthened and yields have cooled off. So this is a positive factor for the markets. Maybe that's the reason why it was showing a good gap up as well. And earnings, that's where the focus is happening. ITC, it's largely flat right now ahead of earnings. Max Health and LIC are also in the green, and their important Q4 earnings still come in today. So despite the volatility, Hiral, in the indices, small cap, mid cap, as well as the Q4 earnings stocks focus is something which we are tracking right now.
Absolutely interesting names that will be reporting numbers in today's day of trade. But on the watch list, Honeywell, profit surges, margins expand, strong numbers there. Samman as well. On the back of the guidance for FY27, that stock is up in trade. Apollo Hospitals, it's the hospital volume business that has aided growth. IGI, the certification revenues have gone up. Jubilant Restaurants also is in focus on the back of a weak Q4. Bosch, Ola, Protein, eGov, Sathvik, EPAC, all of them have been reacting to numbers as well. Grasim, they will be getting 3,970 odd crores from Ultratech. Along with that, you have OMCs which are in focus on the back of the crude price fall. Angel One also, that is in focus. That stock has hit a 52-week high. Aurobindo is in focus ahead of the Q4 numbers and trading at a 52-week high as well. And Siemens also at a 52-week high. So interesting names on our watch list today. But Sharad, over to you to take the rapid fire, with Ajit Mishra.
Well, thanks a lot, Hiral, for that. Good afternoon, Ajit. It's always a pleasure to have you. We'll start our rapid fire segment. And first stock is Honeywell Automation. Just wanted to get your views on it. Any good momentum coming in here?
Yeah, good afternoon, Sharad. Good afternoon, Hiral. So yes, means after this corrective phase from its record high from 58,000 to this 28,000 range, today we are seeing that stock is up and buzzing. Means the volume is almost like has crossed the average volume big time, and the stock has also reclaimed the long-term averages. So possibly a close above 33,000 is going to help the stock to inch further higher towards 38,000 plus zone. So in case if you have any existing position, you can continue to stay put with 32,000 as a stop.
Right, Ajit, Jubilant FoodWorks, a very weak set of numbers, and we are seeing a good sell-off happening in this counter. Is there any kind of a value emerging in this stock, technically speaking, or do you think there's a further fall here? And if there is a further fall, any stop losses to track?
So Sharad, the correction has been almost like 1.5 year long. Means after retesting the previous swing highs close from 780 mark, the stock has been gradually drifting lower, and we are currently trading closer to the previous swing lows. This area from where last time also we witnessed a rebound close to around 400-410 levels. So after this retest, we believe that a possibility of consolidation is high. But upside also seems capped. So broadly, range-bound bias is something which is expected in the near future. So avoid any fresh position. Existing position, your stop should be at 410.
Right, and market seems to not like the numbers from Bosch, and also the commentary was not that good. There was a recent con call today itself earlier in the day. But any important levels to track for Bosch? I know it's a bit expensive company when it comes to retail, but if any levels to track here?
So Bosch has in fact breached its major averages today, and where we close is going to be important. Means 35,600, 800 is zone basically where we have the multiple supports. In case if it fails to hold, then probably we are set for the next leg of a decline towards 33,000, 33,500 levels. So in case having any long position, you may consider reducing your position right away.
Right, and your views for Ola Electric, a weak set of numbers coming in. Any important support levels have been broken here?
Not yet. In fact, we are hovering in this band, tight band 34-38 for almost 2-3 weeks now. So either side break is going to trigger the next move. As of now, it's more of consolidation bias which we are seeing in Ola.
Right. Another stock in focus is Protein eGov. Of course, a trade cannot be made. It's in an upper circuit of 20%. But do you think there is a value buying momentum at play? Because from last year's highs, the stock is still down more than 50%. So just wanted to get your views now on, is there a more up move in this stock? What are the monthly charts suggesting?
So a possible attempt of short-term recovery, but it's not a reversal yet because we are still trading below the long-term averages. So close to around 720.25 will be the next major test for the stock. So as of now, yes, you can continue to stay put for the momentum play with 610 since it's a high beta counter. With that as a stop loss in case if you are comfortable, you can continue to stay put.
Right. Another stock, MedPlus Health. Your views on it? Any levels to track here?
MedPlus, we are retesting the previous swing highs, but volumes are not very encouraging. So I would rather suggest to reduce your position if you have any.
And a very volatile pack, I'm talking about OMCs. Is there any stocks in the OMC pack where you think there is a trade to be made?
OMC, we are definitely seeing a respite or a rebound attempt, but they are not completely out of woods. So I would rather wait and see whether they manage to hold around the current areas or not. Then probably one can consider. In case if you have an existing position, you may continue to stay put with the recent swing lows as a stop. But upside is also capped, so roughly around 3 to 4% kind of a rebound may result in a retest of the long-term averages in most of these OMCs. So around that area, they may consider reducing their position.
Right, 3 stocks are there. They have been doing really well on the positional setup, especially Angel One. We have Aurobindo Pharma and Siemens Energy. 3 stocks in focus. Out of these 3 stocks, is there any recommendation to book profits? They seem to have run up as well, especially Siemens Energy and Angel One. Out of these 3 stocks, any view on that? They have hit 52-week high as well.
Right. In fact, Sharad, the disclosure that we have recommended fresh buying in Angel One to our clients also means it's almost like 1.5 years of consolidation, which is finally ending. So we expect this momentum to further carry. Auro Pharma is also retesting its record highs, but the pharma and healthcare basket, we are still bullish. So we anticipate this overall positive tone to continue. And Siemens also, like after this recovery, we still find a potential of further up move. So all 3 counters are hold, but do maintain trading stop losses on rise.
Interesting. So all 3 counters, it's a hold. So that's the end of the rapid fire round. Thanks, Ajit, for that. But Hiral, what are your Google trending stocks suggesting?
Okay, thank you so much for that, Sharad. In terms of Google Trends, let's pull up, what's actually right there, because a couple of names that have been doing the rounds over the last couple of days. Bharat Forge continues to be there. Tech Mahindra continues to be there. You have Hindalco, HCL Info, Zydus Wellness that has come on the radar right now. Ajit, anything that you like from these names?
So Hindalco definitely, because post Novelis update, we are seeing that stock has been maintaining its positive tone. Today we made a new record high, and overall we are bullish when it comes to the metal pack. So in case if somebody is looking for any fresh position, any dip towards 1070, 1060 area is a good opportunity to go long in Hindalco. 1025 should be your stop area, and since we are at the record highs, the upside is open. But basis this risk reward ratio, close to around 1170, 1180 is something that one can maintain as a target. Then we have Bharat Forge also, wherein we are seeing consistent uptrend. Consolidation is likely in the near future, so accumulation is something which is recommended, not to go all in. In this range of around 1850 to 1900 is something that you can accumulate, with 1800 as a stop and 2000 as a positional target.
Okay, so that's with regards to stocks which are trending on Google. Thank you so much for joining in, Ajit. Always a pleasure to speak to you as well. Now, moving on, Cosmo First delivers a strong Q4, a robust revenue and EBITDA growth. High volumes is what you've seen. Specialty products is something which is improving, and the film margins have improved as well. The stock, however, trading at the day's lowest levels right now, but still trading in the positive 1.5% up move coming in there. Joining us is Pankaj Podar, Group CEO at Cosmo First. Pankaj, welcome to the show. Always a pleasure to speak to you as well. My question coming to you is, the question with the industry that you're in right now, more than the earnings, it's sentiment, its strategy, its impact of West Asia crisis on the raw materials that everyone wants to really talk about. So before we get into nitty-gritties, what is the situation right now?
Yes, so I would say that, we come under the larger basket of plastics when it comes to our film business. And, segment by segment, there are different demand supply situations. We are sitting in an industry which is very food oriented, and therefore the demand continues to remain bullish across the globe. In fact, what it is helping us is that we are able to scale up our exports very handsomely during this period, because Middle East, which is a very large exporter for films, they are not able to export. And on the raw material side, given that some other sectors are not doing so well, so the raw material situation is fairly comfortable for us. While at the same time, in the export market, there is demand, and now what we are also seeing is that the domestic demand is picking up in this month.
Okay, so what is the raw material impact that you're seeing, if you can quantify that for us?
So, the raw material went up very significantly from mid-March month, almost by 50 rupees in one go. So all the petrochemical companies, they increased the pricing. I would say March was the peak, and since then it's been falling gradually. It still remains at a very high level, because prior to this war, our raw material index was close to $950, while it is right now at $1,350. So it is still $400 higher than what it used to be. But then in general, last 3-4 weeks, we are seeing that the raw material prices are gradually coming down, and they should come down. They should normalize. Obviously, they may not normalize fully until the end of the war, or maybe 2-3 months beyond that. But in general, because the demands globally are to somewhat extent impacted for certain sectors, so we are seeing that the overall polymer prices are coming down now.
Right. Pankaj, of course, the pricing trends is there, but there's definitely a lag also when it comes to your raw material costs. Any kind of price hikes you are going to take going ahead? Is there a 1 or 2 quarter lag in it? Just wanted to understand the industry perspective from you.
If you are in industry, the price passes fairly fast unless you have contracts. Cosmo does have contracts with many customers globally. So for such customers, there is either a 1-month lag, or, with some customers, there's a quarterly lag also. But otherwise, in general, the industry passes on the price increases or decreases fairly fast. Domestic pricing went up very significantly in March month, and then they came down also, April and mid-May, till mid-May it remained low. But what we are seeing is that now again in the May month they are going up. However, as Cosmo, we are very export focused. Close to 2/3 of our sales are exports, and where we see a larger opportunity, because globally, there are shortages, especially in the certain regions of the world, more in the western side, where there are shortages because of Middle East crisis. So we have been able to take the advantage of those, and also increase our exports. We normally do around 50-55% exports, and this period we have been able to take it up to 2/3 of our sales.
Pankaj, another question is on your pet sector. There was an initiative which your company had taken around 18 to 20 months ago. And of course, this pet industry is having a lot of tailwinds as well in India. What's the growth and development happening for that arm?
See, for us, polyester, we basically went into this to develop products alongside BOPP, which are very related, with the BOPP as such. Polyester industry, as you rightly pointed out, last 3 years has been very difficult for the industry, especially from the time that we started this business. Having said that, we have been consistently making efforts to increase our specialty business in polyester. We are already now close to 25% of our polyester sales into specialty, and we are very, very confident that we'll be able to take it to 40 to 50% within this year, because a lot of our products have got a lot of confidence from customers, whether these are in label segments or in certain other lamination, other specialty segments that we deal with.
Pankaj, what about, exports as well? Because US tariffs, there were concerns initially. You were looking at renegotiating prices. So what's the, path on that front? And exports as a part of the strategy, where is it fitting in now?
So see, uncertainty is the name of the game. I think for all the CEOs, the biggest challenge is to maintain this, manage this volatility and uncertainty that is going around in the world. So US last year, yes, the duties all of a sudden came 50%, and we had to go and negotiate. The good news is that we did not lose any customer. Most of the customers, we were able to recover majority of the duties. There was certainly an impact. The annualized impact for us was close to 50 to 60 crores. But now the good news is that first the duty got reduced to 10%, and now what we are hearing is that not the Supreme Court, but one level lower, the court has said that even 10% is no more valid. So if at all we go back to 5%, that's a very good news for Cosmo. And the other good thing is that all our customers have appreciated the way we have reacted to the whole situation. Now customers want to even do more business with us. In fact, in last 3 months, we are seeing a very significant surge in our US business overall.
Okay, so, I mean, yes, uncertainty is the key, and everyone is just taking it by the chin to understand what happens next. But thank you so much for joining in. Always a pleasure, Pankaj, to speak to you and get insights as well. So that's the management of Cosmo first as well. But moving on, overall, if you see in terms of where markets go, let's just once quickly pull up the contributors to Nifty 50, because I just want to see what is it that is taking markets lower right now. You have names like RIL, that is one of the top contributors, followed by Bajaj Finance, Infosys, M&M. What's holding up is Agrasem, obviously on the back of earnings. Indigo is also very interesting, but not contributing to that extent. So clearly, there is that push and pull, that tug of war that has continued. Let's get in. Sonam Srivastava, founder and CEO at Right Research. Sonam, welcome to the show. Always a pleasure. Anything that you would want to add with regards to a name like Cosmo first, if you're tracking that? Because it is a company with the reliance that they have on the supply side, a lot of impact from a margin perspective, but obviously there is no clarity going ahead as well. Your views?
Right. See, I think, as the gentleman was saying, that the results sort of have been encouraging, and you can see that price movement on back of that, right? I think, I like the segment that they're in, which is the packaging space. You can see a lot of movement happening in this particular sector. And I think the results have been slightly mixed, but I think it's a positive stock to look at from these levels.
Okay, so that's with regards to Cosmo first. But moving on, amid PM Modi's austerity call and consecutive hike in fuel prices, EV makers are saying that the green segment is seeing a record demand. In fact, Tata Motors PV, JSW MG, all are telling NDTV Profit's Danish Anand that customers are looking at affordable alternatives. Let's go across to Danish for more. Danish, good afternoon. What do you have for us?
Good afternoon. Well, that's correct. JSW MG Motor and Tata Motors passenger vehicles have exclusively told NDTV Profit that, especially from the past few weeks, there is a greater demand for EVs that these companies are seeing. First, talking about Tata Motors, especially, Tata Motors is seeing an increase in the walk-ins, as well as inquiries for electric vehicles that Tata Motors manufactures. Besides that, they're also seeing a high jump in bookings for EVs. On the other hand, if we talk about JSW MG Motor India, they have seen a 23% jump in in bookings for EVs if we compare January to February 2025 and March till April 2026. So they're seeing a great demand for EVs, and one of the factors why there's a great demand is obviously the rising fuel prices that we have seen over the past 2 weeks. Besides that, PM Narendra Modi had also given a suggestion to the public to use EVs, and especially after these two big drivers, we are seeing that they're seeing more and more demand for EVs. Very largely, MG Motor India is of the view that the EV penetration the EV penetration will increase to 8% by the end of this year. So all if we see in the backdrop of the West Asia crisis, electric vehicle companies are seeing greater demand for vehicles.
Okay, so that's with regards to where EV demand goes. Sonam, how are you looking at the EV players? Because the guidance in terms of FY27 for the passenger vehicle space is very strong. Yes, there could be supply chain constraints that everyone is staring at. And now you have the EV push that comes in. If you have to do a 1+1 on the guidance that the company has given, the EV demand that is coming in, what would your top picks be?
So on the EV space, I think the sector definitely has been interesting. Even before the push happened, the Iran war has shown us that diversification from crude is extremely important. And what you can see is a lot of EV ancillaries companies that are involved in making of the components of EVs. I think I like a few of them. And we actually have bought a number of small and medium stocks in that space. And I think that's where you're seeing a lot of movement. On the PV space, I think on the auto segment, we've seen a lot of bullishness on the segment itself, but there's been some consolidation in the recent times. But yeah, I think the auto ancillaries, EV ancillaries, right? EV component industry is something that we like a lot.
Right, so Sonam says EV ancillary is the pick. But another stock in focus is Sammaan Capital. Numbers came, but of course take things with a pinch of salt because a lot of one-offs were there. But it seems like there's a new page turning, in the chapter of Sammaan Capital. And what is that? And to decode that, we are joined in by Shivam. Hi, Shivam.
Hi. So the first major highlight in the Sammaan Capital result was that the legacy book that has been seeing this multiple stress, and also that involved lower quality of loans, that has been fully closed now. And the exceptional items that included in this quarter was that the board of the company has approved a change in the business model, due to which the company has identified 14,953 crores of non-core loans which were included, and the accounting method for this will change. So the company is strategically shifting towards a higher retail asset mix in its loan book. So this has resulted in a loss of around 8,100 odd crores in this quarter. Now the company has also said that there will be no incremental net provisions required for this, and the GNP and NNP of the company stands at 0% each. Also, the company has given a strong guidance for FY27 and 2030. Also, the AUM targeted for FY30 stands at 1,94,000 crores, and the return on asset that is targeted at 4.4% and NIMs at 8.1%.
Thanks a lot, Shivam, for that. Interesting take coming in. But Sonam, just wanted to get your views also. Legacy book is off, new book is on. So you wanted to take your views on Sammaan Capital and its future prospects.
Yeah, I think the earnings were interesting. The one-off definitely had a impact, but despite that, if you remove the one-off component, the earnings were strong, and that's what is reflecting on the share price today. It is seeing almost a 10% rally in the particular stock. So I think I would have like a moderate sort of view on this particular stock, and yeah, I think like you said, there are a lot of positives that are coming in, right?
The best earnings today is Sansera Engineering, a very strong set of numbers coming in. We had pointed out earlier as well. But to decode what has actually happened and the outlook ahead, we are joined in by Puneet. Puneet is tracking this sector diligently. Puneet, what's the buzz for this?
Well, it's a 50% EBITDA growth in a quarter, all organic, and it's a very strong set of numbers for the company. So revenue is up 28%. EBITDA is also up 52% in this quarter, with net profit doubling to 121 crores. The other aspect that, there's been a 71% growth in the non-auto business. So this includes aerospace, semiconductors, as well as defense for the company. And they've given strong guidance as well. So overall order book stood at 1,900 crores for the company at the end of quarter 4. They've also increased the outlook for ADS segment, which is aerospace, defense and semicon. The order book for that is 4,400 crores over the next 5 years. And they've also mentioned specifically that the guidance for the ADS segment is now at 550 to 600 crores versus 409 crores they did in the last year. So it's just stellar numbers across the board and across segments for Sansera this quarter.
That's a pretty interesting take. But Puneet, also one more earnings, EPAC, is durables is in focus. A lot of, commotion in the con call. What is the entire detail about it?
Well, it's a very weak set of numbers for the company. They had expected for FY26 that there will be flat growth, but they've actually reported a 13% decline because quarter 4 was very weak as well. And that's reflected in the numbers. The EBITDA is down 64% for the company, and net profit is just at about 20 lakhs versus 37 crores. So it's been a washout quarter. When you look at this AC business, that's down 25% in quarter 4, and that's leading to the pressure on the company. In the con call, there was was a lot of conversation about the growth looking forward. While they've not given a number, expecting the industry to grow by 12 to 15% yet again, but seems to be a very weak picture. The street's not having it at this point of time.
Thanks a lot, Puneet, for that. Of course, a little bit of problems in the EMS space. Good correction also from their highs. Sonam, I just want to get your views on it. We discussed two stocks, Sammaan Capital as well as EPAC Durables. Out here, just to look at comparing both of them, which is something which you'd like to pick and why?
So they are both pretty, unrelated sort of segments. I think Sammaan Capital definitely has given you a good set of numbers. EPAC, like you said, there's been, revenue decline on the AC segment, and, that's having a sentimental hit, and the EMS pack, definitely the RAC pack has been on a decline. I think, and I think there's a forecast of monsoon coming soon. I think that could also have a negative impact. So I might prefer Sammaan Capital at this point in time.
Right, so preferences for Sammaan Capital, pretty much interesting. Thanks a lot, Sonam, for joining us and giving your views. It's always a pleasure to have you at NDTV Profit. Well, folks, right now we are out of time. That's all, folks, for the show from me, Hiral, and the entire team who have put together trending stocks. Keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Inside.
Benchmarks trade under pressure with Nifty and Sensex hovering close to the day's lowest point. IT, financial services were the top sectoral laggards. Realty, energy remained resilient. Amid a stalemate, repeated threats and deal hopes, US President Trump says he could wait for Iran's response a little longer if Tehran comes back with an agreeable deal, adding that the talks were in the final stages. Meanwhile, global tech major Nvidia reports a record quarterly revenue of $81.6 billion, beating Wall Street estimates, backed by strong AI global demand and robust revenue growth in the data center segment. The Reserve Bank will conduct a $5 billion rupee buy and sell swap auction on May 26 to infuse long-term liquidity in the banking system and boost its foreign exchange stockpile. Meanwhile, India's EV momentum seems to be picking up speed as rising fuel prices drive consumers toward electric mobility. Tata Motors tells your channel that inquiries and bookings have accelerated in recent weeks, while Mahindra & Mahindra as well as JSW MG India echo the same sentiment. And on to Jubilant FoodWorks, that is under pressure, down as much as 8% after brokerage firm HSBC downgraded the counter, while Jefferies sharply cut its price target as well in response to its fourth quarter results, which were quite weak. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But before we do that, let's take a very quick look at the markets, and whether you talk about Sensex or Nifty, you're looking at the day's low really reflecting through just very close to day's low. That's Nifty for you. But even when you talk about Sensex as well, similar levels is something that you're looking at right now. When you talk about the sectoral picture though, that's quite mixed at this moment. So you do have Nifty Bank, Nifty Financial Services, IT, FMCG, media, rural, all of those sectors trading with a downtick. What's holding up quite resilient is perhaps realty, energy, auto, pharma, all of those indices doing a little better than the others right now as we speak. But that said, let's quickly take a look at some of the gainers and losers from within the Nifty 50 pack. And you're looking at something like a Grasim Industries that's in focus right now on the back of Jefferies and Citi also maintaining a buy, and that's after a strong performance, margin-led growth as well in the chemical segment and execution-led growth in paint. So that's Grasim. Top gainer in the Nifty 50 right now, 4.8% uptick coming in. What's also doing quite well for itself is Apollo Hospitals, also up on the back of solid performance right now. So some of those counters, the likes of Interglobe Aviations, Bajaj Auto, Max Healthcare and HDFC Life also buzzing away in trade right now from within the Nifty 50 pack. What's not doing quite well is something like a Bajaj Finance, Quality Wall, Shriram Finance, and even Kotak Bank as well as HUL and Nestle India. Some of those consumption companies also trading with a little bit of a downtick, and even heavyweight Reliance is also adding to a little bit of pressure right now, with that close to 9-10% decline also coming in for something like a Reliance Industries. That said, let's also move on and take a very quick look at the entire commodity pack as well. That's very much in focus. You do have gold that's held steady. Let's quickly take a look at the kind of momentum that we have on that, on the commodities, and then we'll get you some more updates. In the meantime, when you take a look at gold, that's holding steady. In fact, Middle East optimism is something that's cooling. You do have that aggressive rate hike expectation that you're looking at. That's also in focus. Oil volatility, of course, we'll talk about that also in just a bit. But just when you talk about the triggers also coming in for gold prices, you do have the dollar weakness that really seems to be supporting bullion despite geopolitical uncertainty. Treasury yields also retreating a tad bit, aiding non-yielding gold prices as well. And you do have the Hormuz reopening, hopes that are really easing the global inflation concerns, lower rate expectations turning supportive when it comes to bullion. Gold is remaining hostage right now to some of your shifting geopolitical rhetoric. And other than that, you do have bullion also declining despite persistent Middle East tensions. Quickly taking a look at oil before we get you some more insights. Crude remains elevated despite some of those easing war fears, and you do have the hopes of Hormuz reopening that seem to be capping the gains. When you talk about prices right now, you do have US WTI under a little bit of pressure. So somewhere close to $100 a barrel is where it's hovering close to. Now, when you talk about Brent, seems to have strengthened just a bit. But with that in mind, let's also move on and get you the word coming in from Ajay Kedia, who's joining us on the show right now, and is going to be getting us all of those insights. Thank you so much, Mr. Kedia, for taking time out and joining us this afternoon. You know, it's very interesting in terms of the setup that you are looking at when it comes to oil prices. Seem to have strengthened just a little bit. What are the cues that you're looking at?
So, very good afternoon. And as last time I have suggested that we don't expect any much weakness in crude oil prices. No doubt in last couple of days, the talk between we can say US and Iran is been not yet materialized. However, there was multiple statement from Donald Trump that serious talks have been going on, but VIX still above 20, which makes that uncertainty still prevailing. We have seen dollar index has little bit retraced to the level of 99, but currently it's around 99.30, which currently shows that uncertainty still prevail. Spread between WTI and Brent is still above $6, which suggests uncertainty still prevail in the market. We expect unless and until $100 mark doesn't break and hold for Brent, we are expecting again a bounce towards 112 to 115. So I think there will be a jerk nearby, but overall still crude seems to be very strong.
Absolutely, and that makes perfect sense in terms of how you're looking at it. Also, just wanted to try and understand what you think about the prolonged disruption as well. And there's the damage to the oil infra that we've been looking at against that entire backdrop. Do you think that the lower level for Brent prices, or even for WTI for that matter, that seems to have been revised, and you can expect a little bit of strength going forward as well?
So I think the strength, or we can say prices, should continue to hold in the current level only. See, there is a two different story. One is Russia-Ukraine in 2020 was a different scenario where we have seen disturbance was there. We have seen $130 and again prices came back to the level of 60. But Strait of Hormuz is a location which contribute around 20% of global oil supply. If suppose today war and then also the energy infrastructure that has been damaged, that will take time to reinstate everything. So I think it will take at least 3 to 4 months to things should be settled down. So maybe by June we can see prices should be on elevated level, but post June, July, as things can be settled down, we may see prices getting a support at $75 to $80, not below that, what we have seen around 56, 58 or 60 level mark, because damages has been already been done. Demand also, we have seen manufacturing numbers are slightly positive, but overall contraction has been seen in China and other economies. So I think maybe for next 1 month prices would be on elevated, but slowly and steadily it should come down. But there is a high chances that we can see a new high, because the demand from Iran or negotiation point from US are not at all matching each other. So I'm more bullish in short period, maybe 120 plus can be seen for Brent. But yes, by November, December, we can settle down near $75 to $80 for Brent crude oil prices.
No, absolutely, and thank you so much for helping us out with all of those price levels as well. So that should really put into context exactly how you should be looking at prices as well. I just also quickly wanted to try and understand what you think about gold prices as well going forward. Are there any levels that you're really watching out for? And what kind of price movement do you then be expecting at this point in time?
So, Janji, I think gold is slowly and steadily grabbing the bear market, because we have seen 5,600 as a top, then 5,400, 4,900. So technically, it's a lower high pattern. And with the breach of 4,500 level, then that opens the door for 4,100 level mark. Major concern would be the inflation, because recent Fed minutes has clearly shown that with the inflation at 3.8, it won't be possible for a rate cut or rate pause. High possibility of 40% possibility is there for rate hike, and that will be denting the demand. It will be a short period, because we have seen in 2020 to 2008 also, whenever this type of global pandemic or global event comes, initially gold prices drop. So I am expecting a drop to the level of 4,100, 4,150 as of now for gold, unless and until prices doesn't go beyond 4,800 level. So time being, looking to the fundamental, I think even there is a story yesterday going on that Russia central bank has again liquidated some part of gold. So I think panic situation has been there. Selling may increase in coming days for gold.
Absolutely, that's about what has happened and what could really happen in the near term as well. But Mr. Kedia, when you talk about the second half of any year historically, that seems to be spelling out a little bit of strength when it comes to gold prices. Also coincides with a lot of festive buying, a lot of wedding related buying. So against that entire backdrop, what are you then expecting for prices if somebody is looking at fresh buys right now, be it through ETFs or through physical gold market? What should they be doing? Waiting for the dust to settle a little bit?
I think one should wait, because see, for India, things are not so much clear, because with the rising crude oil prices or energy cost, we have already seen rupee has depreciated to the lifetime low and continuously going to on that level. Secondly, the monsoon factor is going to be again negative because our whole good demand is from the rural India. If suppose monsoon stress would be there, then definitely it will impact. So overall, we expect one should wait. High import duty has already been levied. Now we are with a 9% duty hike. It is around 15%. Rupee has depreciated more than 15%. We are costlier by 24% as compared to international market. So I think a level like 1,25,000, 1,30,000 could be the best price or fair price to buy gold for long-term period, whereas silver will be more volatile because industrial demand, what we have seen last year, is been slightly settling down because of energy cost has been quite high. A level like 2,20,000, 2,15,000 could be a fair price on domestic market where one should look for buying for festive demand or for auspicious buying or for regional buying.
No, absolutely. And thank you so much for pointing those levels out as well, Mr. Kedia. But let's also put some of the triggers back on the table when you talk about gold prices. When you talk about 2025, it was quite the record year, and a couple of factors, among others, were very important in that kind of rally that we saw coming in. Best year since 1979 for gold prices. So you do have de-dollarization. That was one very important trend. Other than that, central bank buying as well. And there seemed to be some little bit of indicators also coming in from China in terms of that central bank buying. What do you think about these two factors, or are there any factors that you think are going to be driving gold prices going forward?
So de-dollarization is not a term that could be dissolved in 1 or 2 months because it's a 100 years journey. We have seen pound as a ruler for global market. Then we have seen dollar came. Now it's a time that dollar is losing its strength. But we don't have any other currency that can replace dollar. So time being, yes, gold is the only currency or gold is a commodity that can replace dollar. And that is why we have seen all central banks are going with the gold. But important volatility, what we have seen in last 3 years is purely because of commodity is now as a financial asset. And we have seen family offices, we have seen mutual fund, ETFs coming to the commodity market. And because of that, volatility has been there. And I think this is the important point because financializing of commodity that has attracted many people to attract towards gold. So I think these three things is going to be there. No doubt inflation is with us. Whatever the rate hike expectation continue to be there, that will support gold. And maybe we can see gold prices doubling from here also in next 2 to 3 years period, but fundamentals remain very robust for gold.
No, and that's quite a forecast coming in, Mr. Kedia, in terms of doubling of prices. So it no doubt that, the fundamentals seem to remain intact at this point in time, at least. Thank you so much for joining us with all of those price levels and all of those insights going forward as well. So there you go. Gold prices could double going forward, and that's the forecast coming in. 220 on the domestic front is the kind of level that you should be looking at as well. But let's also take a look at Goa, that is witnessing a pivot in its economic model, with the Chief Minister wanting to work from its shacks as well. The government wants tourists to stay longer and create wealth instead of splurging only on weekends. NDTV Profit caught up with him to try and understand a little more about this. Listen into a slice of this exclusive conversation.
Right, Goa is known for many things. It's beaches, it's tourism, it's nightlife. But one thing it's not known for is having the Chief Minister sit at a shack here and working out of a shack here in Baga Beach. Thank you so much, Mr. Sawant, for taking time out for NDTV Profit. We're here witnessing some sort of a pivot that the Goa government is also making in terms of boosting Goa as a work from home, as a vacation destination. Talk to us about the vision behind this.
As you rightly said, for the vacation destination, our tourism minister and IT minister, both the ministry have come together to start with the Sectoral 2026. This is a new concept to work from the beach. It is not only to the work from the home. Now, already the Prime Minister Narendra Modi ji has appealed to the work from the home. But most of the time, the people has got tied up to work from the home. So they can come to the Goa, they can take the stay homes and everything, and they can start to work from the beach. This is the new concept. Already we are creating the infrastructure which is required for them. So they can at least start their works from the beach. So as I rightly said, beaches is Goa is not only for the sun, sand and sea. Goa is also for the startup. So this is a new concept we have started.
Right. Mr. Sawant, we've also seen other global destinations do the same, right? We've seen this with Bali, in Chiang Mai in Thailand, in Lisbon in Portugal, all of them being promoted as workation destinations. What is Goa doing differently? What is Goa also doing to attract all the talent that is sitting in Bangalore, in Pune, to Goa? What are the policy changes that you are also considering?
You are rightly said, we are promoting the vocation destination through the Shakathon 2026. This is a new concept nowhere in the India. So the shacks is earlier known only for to enjoy the beer, to enjoy the fish, chicken. They can sit and they can enjoy the sunset, sunrise. But through this Shakathon 2026, this is a new concept. Along with the enjoyment in the tourism activity, they can do the work also. So definitely, I think to work in the by sitting in the one room, yes, sitting in the offices, this will be the better. They can do the work by sitting in the beaches. So this we will attracting the global tourists also. They can come and they can work from the beach.
Alright, and there you go. So that's the word coming in from the Goa's CM as well, where he's talking about how sun, sand and sea should also be coupled with startup talent also flocking to the state as well. But with that, let's take a very quick break. On the other side, more news and updates.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. Thank you so much for staying tuned in. Well, it's time now to put the spotlight on what the Commerce Minister Piyush Goyal had to say about the rupee sliding and what more measures the government can really be bringing in at this point in time to help with that. Let's go across and listen in.
With rupee sliding, so what more measures can the government take to, contain the current account deficit widening?
We are monitoring the situation. All the various arms of government are working as a team. Several steps are under consideration. The situation is globally quite challenging. But we have the confidence and the courage of conviction that we'll come out winners even in this challenging time.
Alright, then there you go. So that's the word coming in from Piyush Goyal as well. So there's a bunch of counters that are actually buzzing away in trade. Something like Grasim Industries is in focus. You do have a bunch of these counters that are in focus, and add to that entire list something like a Bosch as well on the back of a steady, fourth quarter as well. In fact, Shivam is standing by with all of those highlights when it comes to this particular counter.
Well, yes, Bosch has released its Q4 results, and if you look at the key highlights, the domestic market that has remained steady in Q4 FY26, and in Q4 FY26, the mobility business has also seen a growth of around 17%, which was driven by the growth in the power solution business. In case of the domestic automotive industry, that is expected to witness the steady growth in FY27, and in two-wheeler segment also, it is expected that the company will register a positive growth. However, the geopolitical uncertainty has impacted the shipments, but the semiconductor issues have been resolved. The management of the company has also have an outlook which is cautiously optimistic regarding the FY27 period. In terms of the financials for Q4, the EBITDA margin of the company stands at around 14%, which has improved from 13.2% on a YY basis. The revenue has seen a growth of around 13%, and the net profit has seen a growth of around 2.7% on a YY basis. Next stock is Sammaan Capital. The company has closed its legacy book, which has been seeing a lot of stress and were having loans which were of low quality, and the company has said that the no incremental net provisions are required for this, and the GNPA and NNPA stands at 0% each, and the strong guidance has been given by the company for FY27 till FY30. Now, if we talk about the exceptional items that were recorded in this quarter, and that was that the board has approved a change in their business model, and that with that the company has identified 14,900 odd crores of non-core loan investment, which does not align with the company's objectives going forward, and the company has been strategically shifting towards the higher retail asset mix in its loan book, and has said that this loan will be resolved by selling to the asset reconstruction companies. In terms of FY 2030 targets, the AUM of the company is target is set at 1,94,000 crores. The return on asset is targeted at 4.4%.
Absolutely, and thank you so much, Shivam, for joining us with that update coming in as far as something like a Sammaan Capital, Bosch as well is concerned. When you talk about Sammaan Capital, you're looking at a gain of close to 9% thereabout, and it's in an otherwise tepid market. Same can be said for an Apollo Hospitals as well. But what's not doing so well right now is a Jubilant FoodWorks on the back of that weak fourth quarter set of numbers, missing estimates with flat same-store growth and a profit decline coming in despite margin expansion. So about an 8% cut coming in on this particular counter. In fact, Mahima is standing by with the earnings fine print, but not just that, the brokerage view as well.
Basically, Jefferies has cut the target price for Jubilant FoodWorks. They have been bullish on this one, but this time what they're saying is that they're cutting the target price from 850 to 600. They're maintaining buy, but what they're saying is that they're still waiting for growth to pick up in terms of where earnings growth stand. Plus, the commentary that's come in for FY27 from the management remains weak in terms of near-term guidance with regards to margin tailwinds, and they're saying that consumer tech platforms are performing better and become preferred ways of investors to play the entire consumption theme. Plus, they've also gone out and said that they will wait further for earnings growth to pick up to, reconsider the rating on Jubilant FoodWorks. And that's the overall view as to why, Jefferies has cut the target price for something like a Jubilant FoodWorks.
Well, absolutely, and thank you so much, Mahima, for getting us that entire roundup. In terms of the brokerage verdict here, that stock is down about 8%. But when you talk about Apollo Hospitals, as I was mentioning, that stock is doing quite well for itself in an otherwise tepid market. And after posting a stellar set of numbers, you do have the particular company also betting big on its diagnostics business, and that's the word coming in from the managing director as well. Let's go across and listen into that bit of commentary.
And we are seeing a comeback of patients from Bangladesh, so they more than compensate for that. Total international patient revenues grew by 10% for this quarter at 870 crores. With regard to the online business, the significant thing while it was 330 crores of revenue, the losses have come down to only 16 crores. So I think you can look at a very profitable business, and it's not about margin, but it's more about asset turns. It's more about return on capital employed and high volume business. And if you look at our diagnostic business, this is, we believe, where the future is, because it's closely linked to healthcare, to clinical work that we do. And we are expanding the diagnostics network. Already there has been 52% growth in the diagnostic space. And we believe we can become among the top 3. Margins in this space are also very...
All right, then there you go. So that's the entire word coming in from Apollo Hospitals as well. That stock is buzzing away in trade, and going forward, they do expect margin expansion as well. That's something that they're really betting on right now, in addition to expansion. But let's also move on and talk to you about not just the stocks that are buzzing away, but what you could be expecting and what you should be keeping on your radar. In fact, sources are telling NDTV Profit that the RBI board is going to be meeting tomorrow to consider dividend payout to centre and is set for record payout for financial year 27. Piyush joining in with all of those highlights. Piyush.
Yeah, that is right. We are, according to our sources, we are hearing that the RBI's board will meet on Friday, tomorrow, to consider approving paying dividend to the centre for FY26. According to economists, this dividend could be in the range of around 2.7 to as high as 3.5 lakh crore rupees. This dividend, economists say, would be helped by the depreciating rupee. The RBI's balance sheet would have actually grown because of the continued rupee depreciation, which gives them enough room, to provide this particular dividend. Profits from money market as well will help RBI pay this dividend. In fact, there is this contingency buffer that RBI had last year set at 7.5%. If the RBI chooses to lower this contingency buffer to say 6.5 or 7%, then it gives them more room to actually help the government with more dividend. If the dividend is as high as 3.5 lakh crore, then the RBI would single-handedly meet the government's dividend target for the current fiscal. Back to you.
No, absolutely, and watching out for that as well. Thank you so much, Piyush, for getting us all of those highlights. But that's all the time that we have on this edition of Lunchtime Trades. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade. So let's see what's on the show today. Firstly, we'll be speaking with the management of NephroCare Health. Now, if you look at the company's Q4 numbers, the revenues did grow, but margins have come down on a YY basis. What led to this and what's the way forward is something that we'll try to decode
with the management on the show today. Apart from that, we'll be also covering 3 small cap stocks that have been buzzing in trade. The first one will be Protean eGov. The company has reported its highest ever quarterly annual revenue. Even if you look at the volumes today in trade, they are nearly 7 times its 20-day average. Then when it comes to EPAC Durable, that stock has been in focus. It's down in trade. In fact, if you look at the company's Q4 numbers, the profit has fallen nearly 100% on a YOY basis. So Punit will try to decode on what led to this 100% fall in the company's net profit in the fourth quarter of FY26. And lastly, we'll be speaking about Sangvi Movers. Again, a strong set of numbers. Company's order book has increased to more than 2 gigawatts. So that is also one of the reasons why the stock has been gaining in trade. So what's the outlook here? We'll try to decode this with the fundamental guest on the show today, that is the small cap buzzers. Now if you look at the market, the Nifty, not much of a movement, is largely flat. It's down just 35 points in trade, but sell on rise is the strategy that we can clearly see. We did open on a higher note in trade. 23,900, 23,850 was the resistance that we had seen, and since then we have been on a downtrend, currently just down 35 points odd in trade. And this is largely led by the banking names, specifically the private bank index. If you look at the Nifty Bank Index, that's down nearly 300 points in trade. 0.6% fall. Day's lowest point is what we are seeing for the Nifty Bank Index. And in bank, if you look at the sectoral indices, it's the private bank which have been the major culprit, which have been pulling not only the Nifty Bank Index down, but also the Nifty Index down. Nifty Private Bank Index down around 0.6, followed by IT, which is also down a similar percentage in trade. On the gaining side, we have defense name which have been gaining, and real estate which is gaining for the third consecutive session. Also, when it comes to the small cap name, despite the weakness that we are seeing in the benchmark, the Nifty small cap index is up more than 100 points in trade, 0.7% up. Let's get in Varsha to understand which are the key stocks that have been buzzing here.
Yes, a lot of stocks actually buzzing on the back of volumes and earnings. Now, considering the earnings season, you have High Tech Corp, buzzing on the back of high volumes of around 4 times of its 30-day average. There you go, the stock is up almost 20% in trade. You also have Jai Bharat. Again, volumes are trading at 36 times, and this is second or third consecutive day we are seeing the stock is up almost 14% in trade. You have Barbecue Nation, of course, buzzing on the back of Q4 numbers, though the numbers didn't come today, but the stock has seen that buzz in the last few days since it came with its Q4 numbers, strong numbers though. You have KDDL again buzzing. Yesterday we did cover this stock on our small cap buzzers. The stock is up almost 7% in trade. You have Wealth First also, buzzing in trade. On the loser side though, let's see what are the stocks which are on the losing trend. You have Team Lease, you have Dr. Agrawal, which are on the losing side. Anu Pharma and SP Apparels are also losing in trade when it comes to small cap. But one stock which is in focus, of course, on the back of Q4 numbers is Nephro Plus. Let's hear it from the management. What are they expecting for the next two years? And for this, we are here joined by Mr. Prashant Goenka, who is Chief Financial Officer at Nephro Plus. Mr. Goenka, welcome at NDTV Profit. Always pleasure to have you. Let me start the conversation with, of course, Q4 margin. If you see, EBITDA margins did decline year on year, despite you've seen a good growth in revenue. What were the key pressures, and what is the EBITDA margin target for FY27?
Yeah. Thank you, Varsha, for having us on the show. Before I answer your question, I just want to quickly highlight, we declared our Q4 result and FY26 result. Revenue grew 32% year on year. EBITDA has grown 38% year on year, and our profit after tax has grown 75% year on year. Our EBITDA margin has also seen a 100 basis point improvement if you compare FY26 to FY25, and PAT margin has gone up by 310 basis point. On a ROCE basis, we have improved our ROCE from 19.9 to 22.8%. Now, coming back to your question about the Q4 EBITDA margin, which has gone down to 20% range, that has been driven by a one-time provision that we have taken on some of our institutional accounts, basis the new ECL methodology that we are adopting. Just to clarify, this is simply an ECL provision and not a write-off, and this is being taken just to take a conservative view on our ECL side of things. If we exclude the one-time ECL provision, the EBITDA margin for Q4 will be 25%, which is slightly higher than our historical EBITDA margins.
Right. And how are you looking the margins to pan out for the next financial year, that is for the current financial year, that is FY27?
Yes, Samit. So I think to answer that question, I think it's important to understand how the dialysis industry work. We are the first dialysis company to be listed in Asia. So I think it's important to get a little bit understanding of the dynamics. In our business, there are three important levers. The first lever is the existing footprint. We are present in 290 cities in India. We are present in 4 countries. We have about 500 clinics across all the 4 countries. And this existing capacity grows at a very predictable rate month on month, quarter on quarter. So that's our first lever, where our existing capacity is growing on the back of increased utilization. The second part of our lever is where we add more capacity in our existing market. We are very similar to an airline industry, where once the capacity is utilized, the only way we can grow is to add additional capacity. To achieve the lever 2, we typically add about 40 to 50 clinics in India and 10 to 11 acquisitions in Philippines. This part of the lever cannot be predicted on a quarterly basis. This lever can be fairly predictable on an annual basis. The third part of a lever is opening a new country or doing a large-scale acquisition. This part of a lever can only be predicted on a 1 or 2 year basis, which is why we have given a prediction that our revenue will grow at a CAGR of 15 to 20% over a period of 3 to 4 years. Now, to answer your question about EBITDA margin, the EBITDA margin, we expect it to be in a healthy range, which is somewhere closer to the current range, depending on how these 3 levers play out. The lever 1, lever 2, and lever 3. We always attempt, from a capital deployment perspective, we are always deploying capital in margin accretive and ROCE accretive businesses. And therefore, the margin should remain in a healthy range. But due to the Iran war, we are also seeing some increasing pressure on our COGS line. So that will also have a marginal effect on our EBITDA margin. So the combination of the 3 levers, which will drive the EBITDA margin up, and the Iran war related supply chain issue, which will drive the EBITDA margin slightly down, we believe the EBITDA margin will remain in a healthy range, but we cannot give a very specific guidance.
Right. Now, you were speaking about, Mr. Goenka, you were speaking about the geographical segments as well. Well, on that note, international revenue contribution rose to 42% for you. What's the target mix, where you want to take that contribution? Just wanted to understand, maybe in FY27 and 28.
Thanks, Varsha. I think that's a great question. If you look at FY25, our international mix was 32%. We have grown from 32% to 42% in a matter of 1 year. Now, there is an interesting dynamic that needs to be understood. We started in India at a $22 price point per dialysis session. This is the lowest price point in the world. When you start your business in the lowest price point in the world, you have no choice but to build a very efficient operating platform. It took us almost 13 years to become EBITDA positive, and 13 years to become PAT positive, and 10 years to become EBITDA positive. But once we achieved the critical mass in 2023, we have been able to scale profitably on margins as well as returns. Now, when we have built this India platform, we are now taking this India platform to other countries like Philippines, where the price point is 5 times higher. We are taking it to Uzbekistan, where the price point is 3 times higher. So this India platform now gives us the right to win in the overseas market because of the lean operating structure we have and the strong quality backbone. So international is a key part of our strategy. It will continue to increase. And because of the fact that the price points are higher in the international market, this percentage will continue to inch upwards. In terms of specific number, we are not currently giving any guidance. It depends on the lever 3. We try to open a new country every 12 to 18 months. And depending on when the investment makes sense from a capital allocation perspective, ROCE perspective, we will open those markets.
So can you share with us the utilization levels and the occupancy trends that we are seeing when it comes to the international market?
So Samit, in dialysis, it's a fixed capacity business. We run 3 sessions every day. The morning sessions, afternoon and evening session. Each session runs about 4 hours. including before and after, it's about 5 hours. The morning and afternoon sessions are preferred by the guest or patients. The evening session, which ends at about 10 p.m., is least preferred by the patient because they prefer to go home for dinner. So the capacity is fully occupied in the morning and afternoon session, but the evening sessions is less occupied. So our current occupancy rate has actually improved from 74 to 75%. And this phenomena, this dynamics in dialysis industry is consistent in any country of the world. So we see similar trends in India of the utilization being around 75%, and we see similar trends in the international markets as well.
Right, and also, sir, you've completed multiple acquisitions. Just wanted to understand, will inorganic growth remain a key driver for you in future as well?
Yes, dialysis, as I said, is a fixed capacity business. We are like the Indigo of the airline industry, where once you utilize the capacity, like I said, we can only do 3 sessions on one bed. Once you utilize the capacity, then the only way to add or grow in our business is to add new capacity. Just like in airline, you can only grow by adding a new flight or a new route. So inorganic contributes almost 80% of our growth. And therefore, it's a key part of our strategy. We typically open 40 to 50 new clinics in India every year. And we do about 10 to 15 acquisitions, center level acquisitions in Philippines. For example, last year we opened 52 centers in India and we did 11 acquisitions in Philippines.
All right. Well, thank you so much, Mr. Goenka, for joining us and having a conversation with us. Thank you so much.
Thank you, Varsha. Thank you so much.
Well, this was Nephro Plus outlining the growth prospects for next 2 to 3 years. But moving on, let's invite the guest for our show, which is Avinash Gorakshakar, founder and head research at Avinash Mentor Research Services. Avinash, you heard the management. They considering, they are the only listed company in India. Just wanted to understand your perspective when it comes to this counter, and of course on the industry as well, considering valuations also.
I think, Varsha, the Q4 numbers have been slightly disappointing, as you rightly mentioned, on the EBITDA front. But I think, if this margin compression is because of a one-time adjustment, then I think we could expect a decent kind of bounce back in Q1 of financial year 26-27. As far as the growth is concerned, I think the management appears to be quite aggressive. We believe 27 could be a much stronger year in terms of new additions to the diagnostic laboratories. And obviously, if margins average around 24 to 25%, the market should definitely be pleasantly surprised. So, from a long-term perspective, we could see that, this kind of, negative surprise which has come on the margins will not come in. But even at these levels, I think, it's better that one takes a slightly buy on dip kind of opportunity. The stock has moved up from 550 odd levels to 590. So I think clearly a little bit of correction, and then I think the risk reward could be better. But yes, longer term prospects appear to be quite good.
And the next stock in focus is Protean eGov. The company has delivered its highest ever quarterly and annual revenue. What led to this? Let's get in part to understand. The stock has also hit an upper circuit of 20% in trade.
Thanks a lot, Somit. So starting with the key highlights, Protean has delivered its all-time highest quarterly and annual revenue performance in FY26. They saw strong growth across their core tax services as well as the new business segments which they have. The new business segments actually nearly doubled, and they now contribute to around 10% of their total revenues, while the core tax services also grew sharply, which was led by the growth in issuance of PAN due to the regulatory changes that we saw recently. If we have a look at the Q4 numbers, then revenue was up 38.7% to reach 308 crores, while EBITDA saw a growth of 55.9% to reach 53 crores, with EBITDA margins also rising really well to reach 16.5% versus just 14.4% in the same quarter last year. Adjusted profit also jumped 53% to reach 31 crores. So really good numbers coming in from the company. If we have a look at the company, if you have a look at the segmental highlights as well, then the tax services revenue also saw a growth of 65% with the CRA services revenues up 3% year on year. And as we saw, the main growth driver was their new business verticals, which nearly doubled, seeing a growth of 95% year on year. The company has retained 100% APY market share and 98% overall CRA market share. They issued over 4.7 crore PAN cards during FY27 with a market share of 59%. So they still hold that majority market share in PAN issuance. Now lastly, about order wins and management commentary, in FY26 they had won a huge order of 1370 crores for Aadhaar Seva Kendra. The management has called FY26 a landmark year with growth in both of their core services as well as the DPI verticals. Now the focus remains on scaling AI, global cloud ecosystems and the DPI opportunities which the company is seeing right now. The management has also highlighted their diversification across their legacy, beyond their legacy tax and pension businesses. So really good numbers coming in by the company. As you have said, the company has hit a upper circuit of 20%, and let's see how FY27 pans out for them.
Thank you, Parth, for that. Avinash, at current valuations, would you advise investors to go ahead and buy Protean eGov?
Yeah, Somit, if you are taking a long-term view, I think this is a very strong business model. And I think, after a very bad quarter earlier, this quarter, I think the company seems to have bounced back. And I think, this business is like an annuity business. Of course, there is a contract time frame attached. But I think going forward in the next financial year, if this momentum is maintained, then I think you could expect a further re-rating, because obviously margins could improve because of the operating leverage and the scale of the opportunity they do. So definitely from a 12 to 15 month time frame, even at the current levels, if somebody were to buy, he could possibly buy it in a staggered manner and obviously try to average out maybe at the current and some lower levels.
Right, understood. Well, time to dive into the F&O market setup and the Q shaping in trade today. Let's bring in Sharad for more details.
Well, thanks a lot for that, Varsha. But if you see, largely, it has been a lackluster day of trade. Initially at 10:45, also the strength or momentum was there in the market. It's almost like that, only nothing much there. Weaker technical setup for Bankex. On the other hand, Interglobe Aviation, Trend, BL doing well in trade. Reliance slipping in trade in the red right now. And a little bit of profit booking coming in the IT space and Bajaj Finance, but nothing major concern right now. Apollo Hospitals, Phoenix Mills, that is where we are seeing an action, a fresh long build-up happening on the earnings specific. Apart from this, let's look at the second important setup, that is the short covering. We have Samman Capital and Amber Enterprises as well. The stock is up 7%. Also looking at the long unwinding names, we are having Jubilant FoodWorks, where the sell-off has maintained itself. There was a big sell-off post its earnings, and PI Industries, after a weak set of numbers, again sustained selling coming in, and largely it's a volume-based selling happening for PI Industries. Also, let's look at the other stocks where there is a good short build-up. This, of course, includes your CDSL and Bosch as well. So these are the stocks which should be on your radar in the F&O space.
Right. Well, thank you so much, Sharad, for all the details. Moving on, EPAC. Let's pull up that counter, EPAC Durable, because stock is down almost 9%, and this is on the back of Q4 FY26 numbers, very weak numbers. Net profit was down almost 99%. But, let's bring in Puneet for more details and let us understand why there was degrowth of 99% in net profit. Puneet, over to you.
Well, most certainly it's all wiped out, and that's largely because of a reversal, and we'll get to that in just a bit. But in terms of numbers, as you rightly said, revenue was down almost 8% in this quarter. EBITDA, though, is down 64%, with the total margins coming in at just around 4% versus 11.2 in the same time last year. Now, generally, quarter 4 is a very strong one. This time around, though, the BE rating change led to a stronger quarter 3, and quarter 4 was expected to be a slightly slower one, but this has been much weaker, especially in terms of profitability. When you look at the segmental sales, that will give you the picture of what's led to the downtick, and it's the AC business, which is almost 60% of the company's revenue, is down almost 25% in this quarter, similar to what we've seen in quarter 3 as well. Small domestic appliances and large domestic appliances is a smaller share, but is up 32%. Components is up 51%, but the AC business being down 25% and majority of the revenue coming from there is the reason for the impact. But when you look at what led to the sharp 99% fall in profits, the main reason was the PLI income. Now, for FY26, the first 9 months, the company had a PLI income of almost 32.4 crore rupees. That got completely reversed in Q4 because the company could not meet its revenue targets under the PLI scheme. So that is the major reason why the profits have been impacted completely in this quarter. You saw that FY26 essentially had no PLI income recognized. FY25 the PLI income was almost 37.5 crores and the profits for the last year was 55 crores. So out of 55 crores profits last year, 37 crores was the PLI income, and hence with the PLI income for FY26 wiped out, so has the profits for this quarter.
Understood. Well, thank you so much, Puneet, for all the details. Avinash, stock is down 9%. You heard Puneet. What will you advise to investors? Should they jump in and buy this stock or should they avoid totally?
No, I think, these numbers are disappointing. So I think it's better that we wait for the management commentary, post the numbers, and we also wait for the Q1 of FY27. I think, this kind of volatility in quarterly numbers is something which is a little, disappointing. Investors don't have a very good handle on how the earnings trajectory, pans out. So I would say that it's a hold from my side. It's that business will definitely continue to grow because they operate in a business where they are a very well-established vendor. But I think Q1 numbers would definitely, be awaited. Once they come back on the normal growth trajectory, I think that would be a time to take a call. So as of now, hold, no fresh buying suggested.
Sangvi Movers is the next counter that remains in focus. A solid set of numbers. The stock is up nearly 10% in trade. What were the factors and what's the outlook? Let's get in Shivam to give us more details.
Well, yes, Sangvi Movers has touched the 6-month intraday high in today's session, and this has been the biggest intraday advance since February 2024. And the stock, in terms of trading volumes also, that stock is up 50 times the average volumes, and all this positive momentum is on the back of strong Q4 numbers. Now, looking at the key points, starting with the order book, the company has a secured order book for FY27 of around 1,053 crores, and in terms of its subsidiary SenGreen, which has a order book of around more than 2 gigawatt this quarter. Now, the order book also reflects the strong progress towards the annual objective of the company, and in terms of asset efficiency, the company has performed strongly with an improvement which is driven by utilization and yield. In terms of total planned capex for FY26-27, the total capex is around 391 crores, out of which 190 crores will be in India and 201 crores will be in Kingdom of Saudi Arabia. Coming to the financials for Q4, the company's net profit has gone up by 27% and revenue has seen a growth of around 31% to 351 crores. The EBITDA has also gone up by around 25% to 134 crores. Looking at the stock's performance for 1 week, the stock has given around 16% of returns, and in 1 month the company stock has given 18% of returns too.
Well, thank you, Shivam, for that. Let's get a view from Avinash on Sangvi Movers. The stock has been on an uptrend, Avinash. Good buy still?
Yeah, I think, Swamit, if you look at the performance, I think very strong numbers both on the top line and profitability. In fact, Sangvi Movers is the largest company, which is into the crane hiring business. And now with the overseas kind of business opportunity, I think, in the next 12 to 18 months, even this business is going to throw a lot of top line growth. Most importantly, the order book is very strong. I think for the next at least 12 to 18 months, they're comfortably placed on the visibility in terms of top line growth. And margins have always been high for this business. So typically, I think, the markets would re-rate this stock. I think from a long-term perspective, it could be a good addition to your portfolio, but take a time frame of, 12 to 18 months.
Right. The next stock that I wanted to check with you, Avinash, is Jai Bharat Maruti. In the last 4 trading sessions, the stock has moved up nearly 38%. Have you looked at the Q4 numbers? How are you looking at this stock after this 38% move?
No, I think, clearly, Jai Bharat Maruti is a very old vendor to Maruti. I believe, they also are operating in the bus segment. Clearly, I think, the product potential is very huge. Clearly, I don't know what's the main reason for the stock to spike up today. But from a longer term perspective, the management has delivered on the numbers, Swamit. And I think, the next 12, 18 months, they do have a reasonably good order book. And if they are able to actually latch on to the growth, what Maruti performs, and obviously deliver on the margins, then I think, clearly even at these levels, there could be a good upside for the stock. So longer term prospects definitely appear to be good.
Right, understood. Well, thank you so much, Avinash, for joining in and having a conversation with us. It was a pleasure to have you on our show. Thank you. Well, viewers, this is all the time that we have on this edition of Small Cap Buzzers. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India Market Open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri, and over the next half an hour or so, we'll try and solve all your stock-related queries. So if you haven't already, do start sending them on the number that's flashing on the top of the screen. You can also call us, speak to us, as well as our guest on those said stock-related queries as well. But before we do all of that, it's a very, very good screen to watch. So let's take a quick check of how the markets are doing, because you've seen gainers, especially like Grasim today on the index Nifty 50. And while you've seen some correction from the day's high, pull up the Nifty 50 heat map and that'll give you that perspective as well. Now, we've lost about a 60 to 70 point uptick that we were maintaining throughout the day. So the last hour of the trading session becomes very, very crucial. You're seeing Grasim, Indigo, Apollo Hospitals, Bajaj Auto and Trent are some of the big gainers for today. In terms of the losers though, you're seeing some impact with a 1% downtick on Tech Mahindra, Bajaj Finance, HUL, Tata Consumers as well as Kotak Mahindra Bank. So those kind of stocks are continuing to be under pressure with a percentage downtick. But when you look at the sectoral heat map, that'll give you also some perspective of the portfolio, and defense, realty, small cap, energy as well as healthcare are continuing to see the majority of the gains as well. So very even Steven as of now, slightly more tilted towards the gains, and in the advanced decline ratio that continues to show you that perspective as well. For the broader markets though, where you're seeing individual movers dominating the news flow, you're seeing 1600 advances and very slowly those lines are getting closer, so you'll watch out for that. And in terms of what we've seen in the BSE 500, all individual stock movers today, there have been plenty on results. Jubilant Foodworks, now Bosch as well is disappointing the street, but Jubilant Foodworks, PI Industries, Bosch, those are the three losers for today. You've seen JK Lakshmi Cement also report results which have not enthused the markets. On the other side though, Honeywell Automation, Samman Capital, very interesting set of results to say the least. Amber Enterprises were one, and for Samman, of course, they've written off a lot in this particular quarter. Grasim as well as RHI Magnesita are some of the other gainers as well. But let's go across and start taking your stock related queries. Let me welcome in our guest, Nirav Ashar, Head Equity Research Analyst at Latin Manharlal Securities, and Jatin Gedia, VP Technical Research at Teji Mandi. Gentlemen, both of you, thanks so much for joining in. Let me go across and take the first query. This one's coming in on Shriram Pistons. Of course, it's SPA Technology now, and he's bought shares at 3575. And saying that, he viewed the Q4 results, largely thought they were okay, but seen some correction post that. Nirav, if you have a view on how the results were and because it's not a cheap stock as of now, should our viewer Murli continue to hold this counter?
Well, I think he should continue to hold the counter from a medium to long-term perspective, because I think the prospects for the automotive component space is improving with the period of time, and we have seen auto sector making a comeback of sorts. So that will be reflected on the auto ancillary segment too going forward.
Got that view, but let's go across and take the next question now. And this one, it's on Samvardhana Motherson. Our viewer Shankar from Bangalore has bought 1,500 shares at 128. So he's in the gains. The stock has been in the green as well on the back of good results. Yesterday, we spoke to the management today as well. If you missed it, do catch it on YouTube, on our channel as well. A lot of conversation on the aerospace and defense side as well. He's planning to add 1,000 more shares here, Jatin. Would you recommend that at the current price point for Samvardhana?
I believe that the structure is positive for Samvardhana Motherson. We are expecting a move towards 145, 147 levels. Pattern-wise, it has broken out from a triangle pattern on the upside. So that is a trend continuation pattern. If he wants to buy 1,000 shares, then I suggest to buy 500. And if there is a dip towards 134, then add more 500.
Got that view, but let's go across and take the first caller for today. This one's dialing in from Mysuru, and Mohan has a stock query for us. Mohan, very good afternoon to you. What's your query?
I just want to know, can I buy Swaraj engines or Swaraj engine at this time for a long-term horizon?
Got it. And do you have any other similar name in your portfolio, whether in the auto space or any others, Mohan, right now?
Auto space, automotives, and Bajaj Auto.
Bajaj Auto, got it. Nirav, Swaraj engines, it's been a very interesting counter as well. How are you viewing between that and Kirloskar for Mohan? Any of those that you like right now?
Well, it's an excellent company, Swaraj Engines. It's always rewarded shareholders very well. The fortunes of this company are linked to that of M&M because it supplies engines to Mahindra and Mahindra. And there's a very strong revenue visibility and a very small equity base, very strong return margins, whether it's return on equity, return on capital employed. And the company has been very generous in terms of its dividend payouts. So I think at this point of time, of course, we have seen that the tractor volumes have picked up significantly, and this is reflected already in the numbers of Swaraj engines. So the advice here would be to shift to some other counter where there is a possibility of gains. I'm not saying that it's a bad company, but already the run-up has happened. So I think he should look maybe towards Bajaj Auto.
Got it. Got that view, Nirav, and thanks so much for the detailed view. Let's go across, take another caller now from Vijayawada. And Bindu has a stock query for us. Bindu, very good afternoon to you. What's your query?
Good afternoon. I hold 100 shares of Transrail at 505.
Okay.
So my view is for short term. Should I hold to it or should I take exit and enter into another counter?
Got it. Jatin, on Transrail, because it's been a sideways kind of a momentum for this counter, what would you recommend for Bindu?
Transrail has been in a downtrend. I think if the view is for a short term, then the trader should hold on currently with a stop loss placed at 488. If there is a pullback towards 525, 530, I suggest to exit.
Got it. The next question, and it's a very interesting one on Samman Capital. We highlighted that during our market check as well, where a lot of that book has been written down in this quarter, hence the big 8,000 crore loss reported. Soumya from Bangalore is holding 100 shares at 142, Nirav. Firstly, Nirav, if you have a view, right, because the results, I don't think a lot of people were expecting this kind of write down in the first quarter itself with this magnitude. Any view that you have for Soumya, what should she do?
Well, typically this is what happens when you have a new investor who comes into the company, and I think in this particular case we do have a new investor, the Abu Dhabi-based investor who has made an entry into the company. And typically when such a scenario happens, there is a possibility of kitchen sinking which takes place in the subsequent quarters. Now, this kind of aggressive kitchen sinking, I think, has happened in the first quarter itself with a clear-cut motive to clean up the books and start on a fresh slate. So from that perspective, I think markets are taking it positive.
Got it. The next caller now from Pune, and Vinayak has a stock query for us. Vinayak, very good afternoon to you. What's your query?
Good afternoon. I have 2,400 shares of Bajaj Finance at 488 rupees. So I would like to ask whether I should hold it. I'm a long-term investor, whether I should continue to hold or rather I would be interested to partially book profit and then go into which stock for the next 2 to 3 years.
Well, firstly, Vinayak, many congratulations on those huge gains, 10 lakh rupees profit that you're sitting on. Did you buy this during the COVID downturn and have you held on for the last 5 to 6 years?
That.
Sorry, Vinayak, we couldn't get that.
In fact, more than that, even before the COVID, I had this.
Oh, well, firstly, Vinayak, many congratulations. I don't know why you want to sell, Vinayak. I think you're doing so well. But Nirav, what would you recommend for Vinayak on Bajaj Finance, bought at 488? Is there a reason to complain?
No reason to complain, and I fully concur with you. I think he should not sell the shares even partially. He should continue to hold with a medium to long term horizon.
Hopefully, Vinayak, that does answer your questions. The next question now coming in. This one is a question between two. So, Abdul Rashad from Kerala has a question for you, Jatin. Wants to enter between Kalyan Jewellers as well as Skipper. Either of those counters that you like for the next 6 months?
Yeah, see, Kalyan Jewellers is firmly in a downtrend. So, from a short-term perspective, I would suggest to avoid that stock. As far as Skipper is concerned, Skipper is consolidating after a sharp run-up. So, I would suggest this trader to buy the stock only above 485, where we have the breakout level of the consolidation. So, above 485, he can consider to buy. On the upside, we are expecting 550 to 570 on the upside.
Got that view, Jatin. But the next one is coming in on e-clerks. And our viewer is holding shares and actually wants to enter this particular counter now, asking if it's a good time to do so. Neerav, would you recommend that, the IT pack going through its fair share of downtake momentum? Any view?
Well, I think he can consider some other companies or the emerging spaces. So I think we would be prompted to have a look at companies like Fractal Analytics or a NetWeb or an Oracle Financial Services. These are some of the companies who could emerge as tomorrow's winners.
Got that view, but let's go across and continue taking stock-related queries. Viewers, you can also call us as well for those said stock queries as well. Next one is coming in, and this one's from Rajiv Sahu on Cosmo First. We've not discussed this stock for a while on the show now. He wants to again enter this particular counter, and if it's a good time to do so, what would you recommend here, Neerav? Any coverage?
I think this is related to plastics and BOPET films. So I think it's advisable to stay away, considering the fact that the fortunes are linked to that of crude oil.
Got it. Well, that is definitely one of the key impacts that we are seeing across sectors, but most certainly on commodity linked as well. So that's Neerav's view. The next question coming in now, this one's on Acuitas Chemicals. Our viewer, Mr. Rao, wants to know if it's a good time to enter this counter. Jatin, would you recommend that?
Sorry, which name?
Acuitas Chemicals. ACUTAAS. Can you pull up this counter as well as Jatin looks at this one? Yeah, Jatin, go ahead.
Yeah, see, it's trading at a lifetime high. The risk here would be placed around 2,900 and thereafter ride the up. So it's firmly in an uptrend. So I suggest if he wants to buy at current levels, then place a stop loss at 2,900. And on the upside, we are expecting 3,150 to 3,200.
Got that view, Jatin. But let's go across, take another caller from Bengaluru. And Subramaniam has a stock query for us. Subramaniam, very good afternoon to you. What's the query?
Very good afternoon to all. I hold 49 shares of Suryodaya Small Finance, IPO allotment at 305. Currently sitting at a loss of around 8K. I want to know what is the long-term view. Should I hold, aggregate, switch?
Got it. Let me go across to Neerav then. Neerav, one of those counters that have been a rank underperformer in terms of results as well, going through its fair share of challenges. Would you advise Subramaniam to just book out, and anything that you would recommend from that space?
Well, I think a lot of patience has been tested, and I think it would be better to exit the counter and maybe look at some good small or medium mid-cap private sector bank.
Got that view, but the next question now, and this one's on SBI Cards. Neerav, let me stick with you. He's bought shares at 620 and asking why does this counter continues to be in a downtake? Neerav, it's been since listing, it's not given any returns, right? Last 5-year returns have been negative, and the earnings are not catching up at any point of time. would you just recommend him to exit since it's very close to his buying price and buy something else?
Well, I think the asset quality issues continue to persist, and I think the best course of action would be to exit the counter and again look at some good private sector bank.
Nihal, that answers your question. The next one also, it's coming in, and this one's on Bosch actually. A viewer holds 10 shares of the company at 36,530, and this is Kishore from Vijayawada. Today, stock's down 5%. I think post the conference call commentary, Nirav, where growth expectation is flattish. But what would you recommend here? I think the management being extremely conservative at this point of time. The results were quite good. Should he continue to hold, wait for a quarter to see what actually happens?
These are portfolio stocks, and they cannot be bought with an intent to trade. So I think he should continue to hold, not only from a single quarter, but from I think at least with a 1 year view minimum.
Got that view, Nirav. But next question coming in from Prashant, and he has a question on TVS Motor. Jatin, what's a good price to enter? We saw a downtick because of I think the momentum being impacted, probably because of the purchase of that Jana Small Finance Bank stake via the listed entity. Do you have a view, Jatin, on the charts? Is this a good entry price?
Yeah, see, I believe that on the weekly charts, post this sharp fall, it has witnessed an equally sharp pullback. So I think tomorrow the candle will be closed on the weekly chart. So by now it's forming a hammer pattern. So I think there is a lot of buying interest at the lower levels. So I suggest that 3,300 would be a very good level to enter into TVS Motors from a short to medium term perspective.
Got it. The next caller who's dialing in now is Shady. Shady, very good afternoon to you. What's your query?
Yeah, good afternoon, Puneet. Before I go to my query, I must say you have a great, collection of suits. I mean, I've been watching your search. I mean, I see, Alex and all of your colleagues as well, but your collection seems more sharp. So,
well, Shady, firstly, I'll thank you for being so kind to me. I have been rotating between quite a few of them, so I think my rotation has been quite on point. But thanks so much for calling in and giving us your kind words. What's your query?
Yeah, so the query is it's on Tata Capital. I got one lot during the IPO. So 46 shares at 326. Fundamentally, I don't see any issue with the company, but the stock price is kind of going down. It's not crashing; it's just going down recently.
Right.
So I just want to understand what's the story. Is it the market sentiment or is it anything else that I'm missing?
Got it. Well, Shady, I think it was one of those counters, right, in terms of valuations that everything just seemed to be priced in at IPO. But I'll let Nirav also take a swing at this one. Nirav, I think it's the first time where I'm seeing it slipping below the 300 mark, and hence probably the question. But how did you view the results? I think the results largely were in line. Any view on the results? Any view on the counter?
Well, I think results were in line with the expectations, but I think the market circumstances at this point of time, we are seeing a lot of NBFCs come under pressure on account of the fact that the 10-year benchmark bond yield has been going up. So there's a lot of skepticism with respect to the margins and the asset quality related issues, etc. So I think valuations on overall have been under pressure, and this is no exception. So I think it will be a slow and a steady road to recovery, hopefully. So you should keep the patience and hold.
Got that view, Nirav. But Nirav, Jatin, as well as our viewers, it's now time for the rapid fire round in this edition of Profit. In this edition of Ask Profit, keep your answers as short as possible. The first question coming in on Sterlite Tech. Nirav, is it a good buy for the next 2 to 3 years, or is the valuations quite high right now?
Valuations are quite high.
Next one's on Cochin Shipyard, bought at 554 by a viewer. Jatin, should he continue to hold his 100 shares?
For Cochin Shipyard, right?
Yes, that's right, Jatin.
See, Cochin Shipyard, I think continue to hold with a 1450 stop loss.
Got it. Well, the next question coming in now, it's on Apollo Microsystems. Again, Suji wants to buy into this counter. Would you recommend that, Nirav, at this point of time?
No, it's run up quite a lot.
anything that you would recommend, Nirav, in the defense space still?
Solar Industries.
Solar Industries, got it. Next one's on PNG. Is it a good time to invest at 9,800? Again, I think a portfolio stock, Nirav, in that sense, MNC culture. Any view on the stock though?
I would prefer a Nestle.
A Nestle, got it. The next question that's coming in, it's on BEL, bought at 456 by Lalita. Should he continue to hold here on the charts? What would you recommend, Jatin?
Yeah, continue to hold with a stop loss at 402.
Magnelic Cloud or Texmaco Rail, which is a better stock to invest at the current price? Nirav, any view?
Texmaco Rail.
Got it. The next one coming in now on Bank of Maharashtra. Is it a good time to look at this counter now, Nirav? Would you recommend that?
Definitely yes, because the numbers have been quite good and there has been good institutional buying happening only.
Canara Bank is the other one. Our viewer wants to buy 500 shares, and this is E. Venkatraman, who's a regular viewer. Nirav, should he buy that for the next 1 to 1.5 years?
Yes, with a long-term perspective, yes.
Sangvi Movers, also another one, Nirav, where the results were quite strong. Our viewer wants to make a fresh entry for the long term.
Yes.
Next one's from Roop Mukherjee from Kolkata on Bajaj Healthcare, bought at 290. What's the view, Jatin, on the stock? Should he continue to hold?
The stock is in a downtrend. I suggest exit.
Also on Wheels India, Jatin, because this one has a joint venture with Bosch, and I think that's why the stock's up today. But a short-term view is what Kunal is asking.
Yeah, today breakout. Continue to hold with a trailing stop loss at 1560. Target would be 1800.
PCBL Chemicals bought at 160. What's a good time, Jatin, to exit this counter is what Priyanka is asking.
Current levels, she can exit.
Next one's coming in on Eternal. Our viewer Sonu has bought shares at 270. Nirav, are you in the camp of continuing this bet for the long term?
Yes.
Next one's from Rimple from Chandigarh, holding 500 shares of Chambal Fertilizers at 480. Wants a 1-year horizon, Nirav?
I think it would be better to shift to something like a Deepak Fertilizer.
Got it. Radhakrishnan from Kochi wants to know a view on First Source Solutions. Can it be accumulated? What would you recommend here, Nirav?
No, avoid.
No, got it. Well, that is the end of the rapid fire in this edition of Ask Profit. Nirav as well as Jatin, thanks so much for giving us your views across a whole bunch of stocks and spaces. Appreciate your inputs. But viewers, out of time on this edition of the show. Thanks so much for watching. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
when the headlines move.
Hello and welcome. You're watching India Market Close on NDTV Profit. I'm Hiral Dadia and with me is Mahima Vachajani. Mahima, interesting day of trade. We've given up gains and that's the disappointing part that I'm seeing in terms of markets. Pretty much flat right now, 23,672, below that 23,700 mark is what you're seeing right now. In fact, you have Bank Nifty as well, which has actually got into the negative terrain, already seeing cuts of around 0.3%. The advanced decline ratio, if you go to see, is in favor of the bulls still. But if you see the intraday chart of the AND side of it, let's just pull up that one on the screens and that will tell you the story there. The way it's actually trying to converge now, it's narrowed here. Your declines have increased and you have advances which have gone down. So that's with regards to where the advanced decline market ratio goes. Before we go ahead, a couple of updates coming in from Iran, where Iran is saying that the US message has reduced gaps to an extent. That's what we've been tracking right now. They're closing gaps and they need US to abandon the war temptation. Apart from that, what they're indicating is that the US message has reduced gaps to an extent. I mean, that's the only line that I read right now.
Yeah.
And no major reaction coming in terms of markets on the back of this as well. But we'll need further updates on the same as well.
It should possibly some positive that we could see, but I think just on the advanced decline ratio, right? We were almost 3:1 ratio. Now we are almost around that 2:1 ratio.
Almost 50,
less than exactly. 2:1 ratio, in fact. And we've broken the important resistance that we've been tracking, right? 23,700 levels is what we've been tracking continuously, and that we've broken. So I think that's the area of concern right now, because once that resistance is broken, we'll have to see as to where this takes support from here on. So that's of course.
Let's just look at the intraday chart of Bank Nifty as well, because that'll give you some bit of cues, and then we'll move on to the heat map there.
Point.
There you go. The kind of profit booking that's come in there, some bit of respite again, but we're still in that negative zone with cuts of 0.3%. Let's look at the heat map of Nifty 50. Overall, yes, more greens versus the reds, but still, I mean, names like ONGC under pressure, and that's because crude has been coming off and that becomes negative for an ONGC. Apart from that, Tata Consumer, HUL, two names that I'm citing in the top 10 which are from the consumption pack. You have financial companies which are under pressure. So you have a Bajaj Finance, Shriram Finance, Bajaj Finserv and a Kotak Mahindra Bank which are trading down and about. Bharti Airtel is another one. Tech Mahindra, Infosys also from the IT pack. What's actually hogging the limelight today, Mahima, is Grasim. Absolutely on the way earnings have panned out, what brokerages are decoding out of it as well. Indigo also on the back of crude coming off is taking some positive cues. Apollo Hospital reacting to numbers. You have Trent, BEL, HDFC Life, Wipro, Adani Ports again on the stake purchase is in focus. Hindalco continues the upward trend. So a very mixed picture is what you're seeing in terms of individual, stocks as well. Let's look at the sectoral heat map to understand more with the broader markets, Mahima.
Yeah, so for sector, defense continues to lead the rally. It's up 1.5%. Realty today, after a couple of days, is seeing some action now in terms of where buying goes, so up almost 1%. Consumer durables is where we're seeing some action up by about 0.5%, but largely pharma, PSU banks, auto is where there is some positivity. Nifty clearly second in a row is seeing now profit booking. FMCG also down by about 0.6%. Private banks is where the major weighing down is coming in when it comes to the Nifty bank, plus the financial services end as well. Quickly, if we can see the mid cap 150 and the small cap 250 as well, because we've come off from the day's high point, but the Nifty mid cap 150 is almost flat, but there's some relief at least where small cap 250 goes. Again, off from the day's high point slightly, but still hovering at least higher by about 0.65%.
And that's, I think, what is keeping the breath also afloat in favor of the advances to some extent. So it's either the large caps or the small caps, which are giving out some bit of buffer. Let's just quickly look at the components in terms of NSE 500 or BSE 500. Honeywell, again, Samman Capital, Metro Brands, all of them reacting to numbers.
Likewise here, PI continues, the industries continues with that downward pressure. Jubilant Food, JK Lakshmi, Bosch, Imami,
all earnings,
all of them reacting
all
to numbers. So it's a very event-specific reaction that
Correct.
you're seeing in terms of trade today. But let's quickly take the viewers through as to what we could expect in the next 1 hour, as well as what's happened tomorrow. Now, sell on rise strategy is what we're seeing in terms of Nifty 50, exactly what's the way it's panning out. And we witnessed a sharp fall after opening. We've actually, opening 200, we opened 200 points higher, and from there is where we've seen that downtick coming in. In terms of resistance, 23,900. Now you're seeing 23,600 as the key support level as well. Now, if 23,600 is broken, that will be a concern. Nifty is remaining below all your key EMAs, and the momentum indicators that we've been tracking are still absolutely negative. 23,800, that is the line in sand that we need to look at, and it's reclaiming that to trigger a short covering rally towards 23,900 to 24,000. Now, the private banks, they are the ones which have continued to drag Nifty Bank and Nifty 50 as well, and that has been the phenomena over the last 2 to 3 trading sessions, where it's the private banking space, the heavyweights there, which are actually putting pressure. Value buying seen in small cap names, and that you saw 0.6% higher there. So that's where all the action is right now. And this is very interesting. Your IT has continued to see profit booking today. The expectation was that after Nvidia earnings, after the commentary that we heard from Nvidia, because of that positivity, you will take Indian IT taking cues from there, but does not seem to be the scenario because of that 2 to 3 day run up that has come in terms of Indian IT. That has not sustained. Real estate index is interesting. 3 consecutive sessions of gains that have come in here. So there is some bit of respite coming in on this front. Bank Nifty continues to outperform. 8 out of the last 10 sessions where Bank Nifty has actually fallen in trade, and 53,200 is acting as a support level. 54,000 is a strong resistance. Buying on dips, that is what you're seeing in terms of Bank Nifty as well, and this is as long as it holds above that 53,000 mark. If a breakdown is happening below 53,000, the target then shifts to 52,500. So these are the levels that we are tracking so far, but let's get in our guests for the day as well. We have Jay Bala joining in. Jay, good afternoon and welcome to the show. This is Hiral on this side. My question to you is, this tug-of war in terms of markets has continued. The anticipation was that the setup in terms of Bank Nifty is seeming much weaker as compared to Nifty 50. And a sell-on-rise kind of a strategy is what we're seeing with the kind of index levels we track right now. How are you looking at it? What are you tracking, and what are you expecting over the next couple of days?
Hi, Hiral. Good to be here. And see, the markets are doing what it's expected of it to do. The April to May rise to about 24,600. That is the first step of the bullish move. The pullback here has been choppy, and despite negative news, the markets aren't pushing below the May low. And it's not very clear in the extreme short term if the May low has completed the final push lower. I was expecting the pullback to be somewhere in the region of 23,300 to 23,100. That clarity will come through if Nifty 50 were to cross 24,480. Once the 24,480 is done, the bottom is in. The next leg up will be a very powerful move, and it's going to surprise a lot of people on the upside. So watch 24,480 as an important resistance. Once that's clear, we are looking at the markets quite bullishly. And yes, the banking sector is slightly lagging behind the Nifty, but I'm sure things are going to turn around there too. So 24,480, once that's turned around, the private sector banks are going to be participating and leading the rally. Last time, up to the March highs, it was the public sector banks that was leading the way up. So watch for private sector banks to pick up.
Jay, hi, good afternoon to you. Considering that every day we're seeing the second half of the market to completely turn as to what was happening in the morning, right? How does one trade right now? What are the stocks that you still think have a lot of action left and there's more steam left? What are the picks for the day that you would give to our viewers?
Yeah, as a slightly higher time frame, I will look at capital goods stocks, and Hiral just spoke about real estate sector. The fact that it's bouncing for 3 days, it's just shaping up as a very important price structure. I had called out that the April low of Nifty Realty was a very important low. It's shaping up to rally to all the way to the September 2024 highs, the all-time highs. So watch out for the realty sector to break out in the next few sessions. And capital goods is something that I'm very bullish from a higher time frame. So in the near term, you can look at stocks within the space, or you can short term is quite widespread. When it comes to bullish candidates, I have Tanla Platforms with a stop loss of 481, possibly reaching past 695 to 700. I'm also bullish on PCBL, Philips Carbon Black, with a stop loss of 262. So both these two stocks also have bullish potential in the medium term, but in the short term also starting to look bullish here.
Okay, all right. So those are the picks. But Jayabala, what about something like a Jubilant FoodWorks? Because, if we take a look at the Q4 numbers, I think peers have done well this time. Westlife, something like a United World did very well. Still today also trading much higher, around 15% odd. Compared to that, Jubilant FoodWorks has not been able to do well in Q4 on a higher base, plus the like-for-like growth was almost flat. Commentary also not looking very bullish. They're cautious when it comes to the first half of FY27, and that's why we're seeing the pressure being continued on that counter as well. But where technicals are concerned, do you think that this is where it finds its support and there could be some up move from here on? What are you expecting?
Yeah, one sector I've been avoiding consciously has been FMCG. I've been avoiding FMCG sector since 2024, 2025. But I still anticipate that sector to be an avoid. And the recent rally that you've seen in the FMCG space could take the FMCG index to about 58,000. So any rally here within the FMCG space is likely to be a counter trend move within the longer term downtrend. So keep that as a trading bet. I don't find the whole sector as attractive. There are outliers like Nestle and Dabur, but as the frontline names, ITC, Britannia, Asian Paints, most of them aren't looking good. So as a sector, it's an avoid and choose your picks here carefully and treat them as trading rally rather than a turnaround candidates for investment.
Okay, all right. And what about something like a PI Industries? Because this is second day where it's seeing constant pressure coming in. Do you now think it's found its bottom?
Yeah, PI Industries is a very interesting stock. It's still got some more downsides to work with, and I wouldn't venture into getting long or bullish around here. It's probably got to do some more downsides. Somewhere closer to about 2,500, 2,400 mark. Once it gets there, it gets a very strong support. So right now the short term is not good, but there's medium term potential once it starts trading near 2,400, 2,500.
Okay, so that's PI Industries. The pressure does continue at the day's lowest levels. But this is an important story. Sources are indicating that RBI is evaluating a multi-pronged measure to arrest the rupee slide. Piyush is here with us to tell us more. Piyush, what are you picking up from your sources? Because we are already talking about an intervention that is expected to happen on the 26th of May. But apart from that, any other measures that you're picking up from your sources?
Absolutely. We are hearing from our sources that RBI is holding internal meetings with all the stakeholders, with their staff, the Forex department, and essentially the focus is on how to curb the depreciation in Indian rupee. We have seen yesterday the rupee hit around 97 level versus US dollar. Today the rupee recovered by around 80 paise to around 96.20 level. However, this continued depreciation in rupee is something which is concerning the regulator right now. So there are multiple options that are on the table. The RBI, as we are aware, just yesterday announced that they will be doing a $5 billion buy-sell swap. And we are expecting, the sources indicate that there could be more such dollar buy-sell swap going ahead, dollar and INR. Further, the very anticipated talks on FCNR deposits, that also is on the table, although nothing has been finalized yet. But this is something that RBI could launch to arrest the fall, though there will be some charge that will be incurred. But the the gains are pretty high. The inflows are expected at around 30-40 billion, more than $40 billion if this deposit scheme is launched. Furthermore, the government-backed sovereign dollar bonds also is being talked about. RBI is further, also likely to nudge PSU banks to raise their borrowings in dollar form. We are aware just 2 weeks back SBI announced that it will raise around $2 billion via foreign currency. So all these measures are being deliberated upon. There is no final say yet, but the RBI overall is working on a strategy to curb the fall in Indian rupee. Back to you.
Right. Thank you, Piyush, for that. You know, these potential introduction of aggressive capital infusion measures will actually have a profound, probably a short-term stabilizing impact as well when you talk about the Indian rupee. However, it will actually trigger, say, a very reallocation kind of an effect between Indian equity, bonds, as well as if you have to talk about the banking system as a whole. And when you're targeting a structural dollar inflow, rather than just spending your foreign exchange reserves, the RBI is actually signaling a transition from, say, a defensive spot market intervention to aggressive capital mobilization. That is what this means when, when Piyush is getting us all the details. So it is going to be interesting to see the kind of impact it could have. Let's just pull up the INR right now and see what's happening in terms of the Indian rupee as we speak, because there was some bit of appreciation that did come in terms of today's session versus the kind of downtick that we saw yesterday. If you can just pull up the, there you go, you are still looking at levels of around 96.38. In terms of trade today. So this is going to be an interesting move by the RBI if it happens. This is a source-based story that Piyush has bought for us. But let's see how everything pans out, because FCNR is something that the street is asking for as well as one of the best measures that could be adopted when it comes to arresting the depreciation that we're seeing right now. But moving on, Grasim, I don't know whether to call it the stock of the day, whether that stock should be in spotlight. Interesting moves at the day's highest levels, strong Q4 performance, and there are lots of segments that were eyed pretty closely, especially when you talk about the paints division, that's Birla Opus. Let me head across to my, colleague who's Mahima, who was sitting here and is now picking that up for us to tell us more. Mahima, you've been tracking this sector pretty closely. Was this something, first, which was expected from a Grasim, and two, what is it that has actually kicked the markets off to this extent on the positive side?
Right, so Hiral, I think the expectation from the paint business was yes to see an outperformance, but I think them saying, coming out and saying that market share gains have happened was something that was not expected. That was the one thing that the street got enthused with. And I think the second factor was the chemical business, which has been a business which has always had an overhang on the Grasim business, has now seen a revival. In fact, if you take a look at the CSF division, that has seen a strong rebound, and the VSF margins have also expanded. Overall, margin-led growth in the chemical segment is something that has also turned out to be very positive this quarter. Plus, paints largely led by execution, and they've said that they aim to become the second largest player when it comes to the paint business. And they're nearing, it's interesting because they're nearing almost Berger Paints revenue. So that's something we'll be watching out for as to how they scale up from here on and how quickly they scale up from here on. The next one, with regards to the market share that they've talked about, they've almost seen a 90 basis points quarter-on-quarter market share again. That's a very important data that the management has given, and that's something that probably the street has liked very much, and that's why we're seeing an uptick of almost 6% in a Nifty 50 stock, right? Now, in terms of key management commentary for, as to how things look like going forward, they've said that they've kind of reiterated the goal of building a 10,000 crore profitable revenue franchisee by FY28. Variable costs are expected to decline through improved procurement efficiencies, and this could improve margins as well going forward. And the company still remains in the investment phase and will continue reinvesting surplus cash flows, is what they've mentioned very specifically. In terms of what to expect going forward, EBITDA, of course, could see some pressure considering how raw material inflation is going to take place, plus volatility because of the Iran Iran war. Grasim plans to invest around 2,880 odd crores through preferential issue in the Aditya Birla Capital as well. So that's also something that we'll be watching out for. Now, brokerages largely have hiked the target price this time for Grasim. Jefferies has gone ahead and hiked the target price to 3,600. They're saying the improving standalone business has driven the strong Q4 beat, and that has driven the FY26 business overall. B2B e-com is expected to turn profitable by FY27 exit. Citi has also hiked the target price to 3,600. They're saying that the stock will be driven by cement and paints, supported by VSF and chemicals. Whole company discount should keep narrowing as paint volumes profitability rise, and also on an elevated dividend from Ultratech. So this is the overall view of what's worked this quarter and what lies ahead of Grasim. So this is the reason as to why we've seen such an uptick in the counter, Hiral.
Thank you so much, Mahima, for that. In fact, let me take this quick question with our guests as well. Overall, if you have to look at the entire paint segment, you had, Asian Paints, which was ruling under pressure with the kind of market share that they lost. But apart from that, you also saw valuations become as cheap for Asian Paints, and that's what actually worked for them. Jay, let me come to you. If you have to look at a Berger, Asian Paints, Grasim, where are you seeing more constructive charts right now?
For Grasim, of course, Grasim's got an excellent breakout on its longer-term time frame, basically the weekly time frame. I wouldn't be surprised if it rallies something to like 4,500 or even higher. So it's got a very interesting breakout, and it's confirming the medium-term picture for me. I'd be a little bit cautious on Asian Paints and Berger, although I'm expecting crude prices to crash. So I don't know if that's going to bring the benefits to Asian Paints and Berger Paints. But the starts there looks less bullish. And as I said earlier, I'm being a little bit neutral to cautious on the FMCG space. I would treat them as trading rallies rather than investment bets. But whereas Grasim looks like a very interesting chart.
Okay, all right. Of course, so that's the technical view, but we have Dhananjay also who's joined us now. Dhananjay, your view on this entire space, because one side we're seeing, as to how crude prices could overall see an impact in the first half as well, although they've taken price hikes, so volumes might be protected. But amongst the paint players, right, any particular one that you're liking? And as to, your commentary on how Birla Opus has scaled so quickly and now almost is ready to take over as being the second largest player in the paint space.
So I think for the broader paint segment, I think the increasing raw material cost is a very important variable to look at this juncture. Companies have been able to are increasing prices in the anticipation of higher raw material costs. I think that is already happening. We think that cumulatively price hikes could be of the order of 15% or there are 14-15%. And I think what companies have done is roughly about 2-3% in April. Also, there has been some hikes that have been there. So I think there is definitely a raw material cost pressure that is imminent in the near term. So that is there, and I think the space has been fairly competitive with Birla Opus being there. There has been rejuggling in the overall market share. Asian Paint also was under a drag earlier on. So I think that's the broader context of the paint market. So near term, it does look to be somewhat on the weakish side. With respect to Grasim, I think it has been a phenomenal journey in terms of the increase in the market share. They have gained about 370 basis points year on year, and that's largely because of the distribution aggression that they have done, the products that they have actually introduced, etc. And I think the promotion activity has been there. So it seemed to have done well.
So Grasim setup, Dhananjay, seeming to be much better technically and fundamentally right now as well. Thank you for that. In fact, stay with us. Now, the government is aiming to maintain surplus supply, and this is amidst that rising power demand that we are seeing. They are in action mode to meet the surplus requirements. My colleague Sesha Sen is here to share with us the government's plan of action. Sesha, what are you picking up from your sources? Good afternoon.
Right. So, senior officials from the Ministry of Power presented the government's action plan to tackle the surging demand for electricity during the summer season before the Parliamentary Standing Committee on Energy. Now, officials told the committee that the electricity demand rose from 256 gigawatt in April to 265 gigawatt in May, and it could even touch 271 and 283 gigawatt in June and July, respectively. Now, under the emergency plan, the Ministry of Power has decided that all power plants across the country will remain operational during June and July. No power plants will be permitted to undergo maintenance during the period. Now, this is expected to yield a surplus power supply of approximately 15,000 megawatt. The committee was also informed that power companies in the country currently hold a coal stock reserve sufficient for 18 days. Now, following disruptions, to natural gas supplies, some power companies have placed order for natural gas also from Nigeria. Now, it has also been decided that hydroelectric power plants will not be operated during the day. Instead, they will be kept operational exclusively during the night. So all this, is expected to help in tackling the surging demand for electricity this current season.
Thank you so much, Resha, for that. We need to understand how is this going to really impact, Indian companies as well. Rupesh Sankhe, Senior Vice President Research at Elara Capital, joins in. Rupesh, good afternoon and welcome to the show. This is Hiral on this side. I'm sure you've heard the story what Sesha has got for us in terms of government's emergency plan, and this is to tackle the surging electricity demand. Now, yes, the plan is in place. What do you make of this?
Yeah, good afternoon. Certainly, if you look at the installed capacity available is 550 gigawatt, and effective capacity available at any point of time is close to 300 gigawatt. So we are 275, 280 gigawatt kind of demand we can handle with a better resource management, like supply side management as well as demand side management. So supply side management, definitely some of the gas-based power plants which are running at very, very low PLF could see some sort of in operation, as well as imported coal power plants which are already under Section 11 can be come for the production, and some sort of demand side management like time of the day kind of mechanism might be there. But 275 gigawatt kind of capacity we can easily handle, because in the last 2 years we have seen close to 90 gigawatt capacity addition has already happened, and that can take care of incremental 25 gigawatt kind of a capacity. So 2 years back the capacity to 55 gigawatts, so 275, 280 we can easily manage. But certainly the companies like Torrent Power or Tata Power or where the company's plant got impacted because of low demand in the last 2 years might see some benefit because of this increase in peak demand, as well as we might see some better exchange volume on the IEX front. So overall positive for the companies who are dependent more on the merchant like Adani Green, NTPC, Zeta Power, Torrent Power, IEX, they certainly will get benefit because of this high incremental peak demand, as well as the Coal India might see some better e-auction realization because of this higher peak demand.
Okay, Rupesh, the other aspect is with regards to the renewable angle of this. Where do you think will solar and wind contribute, because that is the one advantage that we can take. So how do you read that situation?
Definitely, I think few sites like in Rajasthan still solar curtailment is there because transmission line is not got connected. So that will take another 3 to 6 months. But we'll see rapidly deployment of battery storage or solar plus battery kind of tendering happening in the near term. So a lot of push is there to bring battery storage in place so that we can store this excess generation during the high radiation daytime, and we can utilize during on the peak evening demand. So that is there on the card. So a lot of activities will happen. The transmission issues which are there, we'll see a lot of clarity there also. I think the entire ecosystem is gearing to handle this kind of peak demand in the coming years. So I think this is good for the renewable energy which are stuck and may see some light in terms of PPA signing from the DISCOM side.
Thank you, Rupesh, for that interesting angle here with the kind of benefits that could be flowing into power companies as well right now. IEX is another one, Coal India is another one that could be a beneficiary of this emergency move that the government is looking at. We'll come back to our guests shortly, but let me go across to my colleague Somit Sarkar, who's standing by to tell us what is he picking up from all the chatter in the dealing room. Somit, lots of stories that are breaking in terms of what the RBI is expected to do when you come to talk about the Indian rupee. Now you're talking about a power sector story break that Sesha has got for us. What are leaders telling you?
Well, a host of stocks that dealers have also highlighted. Firstly, it's Panama Petrochem. Now, dealers are indicating that a large prominent HNI has been accumulating this counter in trade, and they're also expecting a strong set of Q4 numbers coming in from Panama Petrochem. So keep an eye out for this counter. For JSW Energy, the company did announce yesterday that they have initiated their QIP. What dealers are indicating is that the demand has been very strong for this QIP, and large long-only funds are subscribing to this fundraise. For Ashok Leyland, there are buy flows on the large HNI and PMS desk. Dealers are expecting strong margin beat in the fourth quarter of FY26. For Dalmia Bharat, yesterday the company did announce that they will look to consider fundraise in their next board meet. Now, what dealers are indicating is that this would just be an enabling resolution and there won't be any concrete decision on this fundraise. Even last year, the company had taken shareholders' approval for such a fundraise, but nothing had come out post that. So, not any fundraise decision would come in from Dalmia Bharat side. And lastly, for Varun Beverages, there are buy flows on the institutional desk. Both DI and FIs have been accumulating this counter, and delivery volumes are expected to be on the higher side.
Okay, all right. So, thank you so much for getting us those details. I think Varun Beverages is the one stock that sticks with me. But Jaybala, your view on the charts for this one? What are the support and resistance that you're seeing for Varun Beverages?
Yeah, see, Varun Beverages is starting to look good. If it does take out 540, 535, 535, 540, it probably has a signaling. It's just not just a short-term up move. If it were to cross 540, it will be slightly a medium-term, longer-term turnaround. But post 540, there's one pullback that's due after that. But that might be a bullish opportunity for the stock. So the stock has got support at about 480. And short-term resistance at 535. But cross of 535 would be a very important signal for the stock.
Okay, so that's Varun Beverages. Dhananjay, let me come to you on the banking front. You know, from a technical perspective, everyone's of the opinion that the setup is looking very weak when you talk about banks, Bank Nifty as a whole. And especially it's the private banking space which has been on the back burner versus the PSUs. From the way valuations are panning out, the way Q4 numbers have panned out, getting into FY27 as a year, would you be a buyer? And if so, what would your top picks be?
So I think if you look at the fourth quarter, there were expectations that there will be a revival in earnings for the banking space, given the context that credit growth had actually picked up to almost like 15+% from about 11% odd. So the expectation was that this would translate into better earnings, NII growth, etc., and NIM spread as well. Whereas what you've seen is that it has been a fairly mixed performance. And I think the larger banks have actually seen fairly weak operating performance in terms of the NIMs growth and the NIMs margins as well. So I think there are reasons why various banks are telling why it has been weak. But I think from a forward-looking standpoint, we do expect that the liquidity scenario could tighten. The GSEC yields have actually gone beyond 7, 10 or thereabout. So we are expecting that as inflation moves up, there can be rate hikes later this year. So the cost of fund for banks might actually increase going forward. At this juncture, it doesn't look like banks have the pricing power on the lending side. There hasn't been any major qualitative improvement as far as the lending growth is concerned. So my sense is that for the next 1 year, assuming that inflation goes up to 6-7% from a headline CPI standpoint, we do think that the banking sector might actually underperform. So that is where it is. I think the PSU banks have actually taken a major hit, SBI in particular. And I would say that it will be better to be with banks who can actually manage their ALMs, asset management liabilities better. So I think some of the large private banks can available at cheap valuation can do relatively better.
Okay, so that's the view with regards to where the Nifty bank goes and bank constituents. But now also let's take a look at what's happening with regards to where bond yields go. We have Sharad joining by, who's trying to break down what high bond yields mean for your portfolio and where the tilt should be. Sharad?
Well, yes, the name is bond yield. Interesting. A high bond yield, I'm sure you must be getting worried about it. What happens to my portfolio? Well, I'm here to decode it and you can relax. Well, let's start with it, why this high yield scenario comes in and which assets should be there in focus, especially in equity, banks, insurance, energy, and most importantly, dividend paying stocks. This is where the alpha is made during these times. Also, other asset classes are there, and if you are having mutual funds, there is target maturity funds, dynamic bond funds, and corporate bond funds as well. And also REITs also make it to my list. InvITs are also there. So they do offer some safety here. But let's move on and keep a focus on dividend paying stocks because we are focusing on the equities. Stable income for the investors, defensives are at play. And largely, if you look at it, the utilities, FMCGs, PSUs, and select metals are the plays if you are investing in the dividend paying theme. Also, there are infra trust, REIT, InvITs, and I checked the last 12 months, 9 to 19% of dividend yield is coming in. So that itself is very much rewarding. But which are the stocks? Of course, there is growth angle, but there's a dividend yield angle. And look at this. Largely, we have OMCs, interesting name, Unipaths, makes it to the list, Barmel Lorry, Questcorp, all of them in the last 12 months have given 7+% dividend yield. This also includes JSW Dulux. We have two logistics companies also in the list, Gujarat Pipavav and Gateway District Parks, followed by Coal India and Honda India Power. All of them are giving 5% plus dividend yield. But let's get a little bit deeper into it. OMCs, there is a volatility at play, especially on the pricing and the refining margins. Also, if you look at it, the next stock is Unipaths India. The construction equipment business demand is strong, especially in the second half of calendar 26, to keep that in your watch in your portfolio. Barmel Lorry is largely, you could say, a holding company, and their travel segment has been doing well off recently. Also looking at the other stock is Questcorp. Post-demerger, better valuations have come in despite the wage code impact. And looking at the other company is JSW Paints. Recently it was acquired and now more distribution networks will be added. Gujarat Pipavav, a future dividend yield might be under a pressure because of capex pressure. And looking at Gateway District Parks over here, there is a beneficiary of the dedicated freight corridor. That's what the analysts are bullish on. And also looking at the other few stocks, Coal India, pricing and realizations are expected to remain stronger going ahead. And the last stock, Honda India Power, that's where the demand and costing might be impacted because of geopolitical tensions. So I've given you the entire list of the dividend paying stocks where the dividend yield is strong.
Thank you so much for that. This is an interesting play, that you've given out to all our viewers as well. Thank you, Sharad, for that. Dhananjay, let me come to you. A quick question. A dividend yield play, in terms of the way bond yields are panning out, do you think that's the right way to look at it right now?
So I think as far as the dividend yield is concerned, it has to be companies that benefit from higher commodity prices. Coal India, I think somebody mentioned that's an excellent dividend yield play because you'll have higher energy costs, higher coal prices that translate into better profit, and also it is also a PSU company which actually offers a fairly high dividend yield. So I think that one can look at some of the commodity plays who are stocks that can give better dividend yield. So I think going forward, past history is a track record to really look at. But I think going forward, since the earnings are going to be volatile in a context where the cost of raw material will decrease, we have to be fairly selective and look at sensitivity of rising costs with respect to top line. So I think material space is relatively better for dividend yield.
Okay, all right. So that's of course one perspective, but of course keep in mind that most stocks that have high dividend yields do not give capital appreciation as much, right? So always keep that in mind. But with that, Dhananjay as well as Jaya, thank you so much for taking out the time and of course giving us all your views on the stocks that we discussed on the show. And viewers, it's time to slip into a very short break, but don't go anywhere. We'll bring you top buy today, sell tomorrow calls on the other side of the break.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight.
Welcome back to India Market Close on NDTV Profit. Now, clearly, if we can just pull up Nifty 50 once again on the screens along with Bank Nifty to take a quick check before we are just like, what, 20 minutes away from closure. But, we're very much stagnant from where we started off in terms of the show today. Flattish moves below the 700 mark is what you're seeing already. Bank Nifty as well. 53,500 is what you're tracking. A mild recovery from the day's lowest levels that has come in, but still in the negative. To talk to us further, Vineet Bulinchkar from Ventura Securities and Rajesh Palvia from Axis Securities joins, and welcome to the show, gentlemen. Always a pleasure to speak to you as well. Rajesh, let me come to you. With the way markets have been panning out, we've been talking about this push and pull. You are seeing, selling at higher levels and probably a buy on dips kind of a strategy that has continued over the last couple of days. If you have to look at Nifty and Bank Nifty, where are you seeing strength?
Yeah, good afternoon, Hiral. So buy on dips and sell on rise, both strategies are working in this kind of market since last 5-6 days. We are seeing that, whatever, gains Nifty is trying to maintain during the day is, again, meeting to the supply pressure. 23,800 zone is acting as a steep resistance for any kind of up move which we are experiencing in last couple of days for the Nifty. On the downside, 23,300 is the acting as a major support area. But again, in this volatility, broader market is showing different behavior, and we are witnessing a lot of stock specific, sector specific action in this market. And looking at the overall scenario for the market, we believe that Nifty is poised to give breakout of this supply zone, which is there based on the call concentration of 23,800. And I think once that breakout takes place, we could see a very sharp up move in the market, as it's almost 5 to 6 days in a range itself, and the broader market is showing sign of confidence. So we are waiting for that breakout to add more position. At this juncture, 23,500 is the stop loss on the Nifty spot to hold the long position. Any minor dip should be used as a buying opportunity. But yes, Bank Nifty is still struggling to cross major supply zone, which is placed at around 53,800, 54,000, which is very important and crucial for Bank Nifty to cross. Once Bank Nifty crosses those level, I think then here also in Nifty also we could get more comfort and support for moving further higher. So till Bank Nifty is not crossing this level, I think we may see the range bound activity. But looking at the broader market, we are optimistic, and we feel that there is a possibility of higher side breakout.
Okay, so that's with regards to Nifty and Bank Nifty. Rajesh, any top picks today?
So two stock ideas where we are focusing. First one is from pharma space. Glenmark Pharma is looking attractive. The way stock is holding about to all its near-term, short-term moving averages. We believe that stock has potential to surpass its previous all-time high trajectory also. So one can buy and accumulate Glenmark Pharma for upside target of 2450 to 2470. On the downside, one needs to keep a stop loss towards 2330. The second stock where we are focusing at this juncture is GMR Airport. Stock took support from its 50-day moving average and now negotiating to its 20-day moving average supply zone. I think looking at the buying interest, we believe that this stock can extend gain. 104, 105 we are projecting target. On the downside, 93 needs to keep as a stop loss.
Okay, so that's with regards to top picks coming in there. In fact, GMR Airports is at the day's highest levels, gains of 3% coming in there. Vineet, let me come to you. Interesting names that are moving in trade today. I mean, Grasim has been one of them. We've been talking about it as well. But from the new age companies, Lenskart is one counter where it's a pretty mixed view coming in there. Not here, not there. Stock seeing gains of nearly 3%. Any views on this one?
So, Lenskart has captured the imagination of the markets. And I believe that, if you go into the hinterland, the market share gains are coming in very handsomely for the company. And given these facts, I think that revenue growth spike that we have seen will sustain going ahead. And soon will also have net profit level. Continue to remain positive, and there's a huge TAM unfolding, because they're able to, build leadership. I think they should do well going ahead.
So that's with regards to where Lenskart goes. In fact, Mahima is already waiting to tell us whether the bull case is better or the bear case is better. Bull and bear case scenario coming in for Lenskart. Mahima, over to you.
Right. So, Hiran, I think Q4, we'll give that credit to them. That has been a stellar quarter in terms of how, the growth and margin expansion has been, because Q4 saw almost a 41% growth in terms of the top line. FY26 as a whole has also seen a growth of 32%. But at the same time, we've always talked about this. We talked about this during the IPO as well, that valuations were never cheap and are not going to get cheap, because FY27 estimates are suggesting a PE of 104 times and FY28 at that almost 75 times. So it's not going to get cheaper in the next 2 years as well. But with regards to how the expansion goes, massive margin expansion shows kind of the operating leverage has kicked in. FY26 EBITDA has nearly doubled, with margins expanding almost 370 basis points. But at the same time, execution is a risk, considering how they are going very aggressive when it comes to the store expansion, especially in the tier 2, tier 3 cities. Now, when it comes to the store expansion, of course, it is an opportunity. Definitely, execution is a key, but it is definitely an opportunity because Tier 2 is very underpenetrated when it comes to the organized space when it comes to eyewear, right? But at the same time, aggressive expansion could kind of put pressure on cash flows in the near term and going forward as well, right? Because overall, if you take a look at how capex has doubled in the past couple of years, cash flows have been under pressure and could be under pressure considering the expansion as well. In terms of where international business goes, it's been a star performer for them. Business is becoming a real profit engine for them. Overall, international EBITDA margins also improved sharply, and Japan and Saudi Arabia are performing ahead of what the street was expecting. But at the same time, I think that currency depreciation is a key risk when it comes to the international business, considering that we are seeing INR depreciating. That's something that we need to keep in mind. Lastly, in terms of where the competition goes, their strong competitive moat is through tech and manufacturing. They have backward integration. They are using AI in all of their operations. But at the same time, when you take a look at the return ratios, they're low despite of the growth, and this is because of the cash flow problem. Because if you take a look at the projected ROE and ROCE for FY28, ROE stands at only around 11% and ROCE just at 8%. So, this is one of the important metrics that every investor tracks, and that is something which is also an area of concern here. So, this is the overall perspective of the bull versus bear case. Of course, Q4 FY26 has been strong here, but valuations and return ratios are still a concern and overhang on the company.
Okay, and that's the reason why the bull and bear case absolutely fits well for this one. Rajesh, in terms of new age companies, you can call it for a Lenskart or a Grow, Eternal, Swiggy, Brainbees, all of them have seen very interesting moves. On the charts, do you find anything that's interesting?
So if I go with all these companies, I think most of the companies have shown, descent really, but, the rally has been fizzled out, and most of the stocks now in consolidation or slightly in the bearish trajectory, be it Swiggy, Eternal, or even Lenskart is still enjoying its, breakout level, which we have witnessed on the near-term, short-term chart. So looking at the today's reversal in the Lenskart, I think now stock is negotiating with its 20-day moving average supply zone. So if stock's able to surpass 510, then we could see some more buying interest in this counter. But those who are already on the long side of trade should follow the 480 as a stop loss. If someone look for little longer term, stock from this basket, I think Eternal is looking more promising from this space. Stock is, after this corrective move, stock is trying to make some, base building activity here. 210, 215 is the important level for on the downside, and stock is comfortably holding above these level. So I think Eternal can show good amount of really going forward, but one needs to buy and accumulate, and our horizon is around 280 to 300 for next 6 to 8 months.
All right, so that's the view on a lot of these new age tech companies that Rajesh just gave. But time to take a look at Bosch, because it's under pressure after the management remains cautiously optimistic for FY27 amid geopolitical uncertainties and supply chain risk. Puneet joins us with an entire perspective of what happened post the management con call. Puneet, over to you.
Well, thank you for that. It's definitely a good set of numbers for the company, but the commentary, as you rightly mentioned, driving the stock down today. So revenue up 13%, EBITDA up 20%, and margins at 14% was one of the highest they've done. But when you look at what's actually impacting the stock, there are three key things. The first one being that they've said that while the domestic economy largely remains steady, and that was a key positive reflected in the numbers as well, FY27 outlook currently remains cautiously optimistic is the word that they've used at this point of time, which shows you that, while the current geopolitical scenario is uncertain for H1, Bosch is going on with a cautiously optimistic kind of a scenario and not guiding for a very strong growth, at least for now. They've also said that key priorities will be to enhance the supply chain at this point of time, as well as manage the commodity as well as currency risk, which they have. The second key one, geopolitical risk, because the Middle East conflict continues to be uncertain. The third one was on semiconductor shortage. They had mentioned that while it has been resolved in the near term, overall supply chain continues to be remaining fragile at this point of time, and hence the uncertain outlook. Finally, there is some key triggers that you have to watch over the next year. CAFE 3 norms will come in April 2027. So you will start to see rollouts of models as well where Bosch get benefited. Regulatory requirement for the ADAS business for the two-wheelers will be also something to watch. And finally, the new joint venture announced with Wheels India. Right. Both those stocks, Wheels India's stock is up today as well. Yeah. That will be key because now they're looking at joint ventures for new product developments as well.
Right. Puneet, stay on because EPAC Durable is something that you track very closely, and that's also in focus. Reports a weak set of Q4 numbers and profit has declined 100%. I mean, what does that even mean and why has that happened?
Well, the key aspect that, the AC business has continued to be in a downtick momentum, and hence you've seen that impact on EPAC Durable as well. So one of the key, revenue profile, of course, is visible on, and stocks now gone down to 10%, 10.3% now. Revenue is down 8%, but the EBITDA is down 64% for the company, and hence margins compressing by 670 basis points. Profit had a 99% fall, essentially being wiped out, and the reason for that we'll get to in just a bit. The segmental sales also, you see 25% degrowth or fall essentially in the revenue for AC business. While there have been components that have done well, all the other segments haven't been able to comply because 60% of the revenue comes from the AC business as well. But essentially what has happened is that the company has not hit the revenue target to get the PLI benefit. So the 9-month number for PLI benefit was 32.4 crores. The company had actually had to reverse that in the last quarter, and hence the whole profitability has been wiped out. When you look at the FY25 number, the PLI number was 37.4 crores and the profitability was 55 crores. So largely you see the proportion of the PLI income on the total net income of 55 crores. So with this 32 crore reversal, you've seen a wipeout of the profits in quarter 4 and a fall in the whole year as well.
Okay, Puneet, thank you so much for getting us those details on both Bosch as well as EPAC. Rajesh, I'll take your quick view on EPAC specifically because, we saw a good green candle yesterday and today we're seeing a downtick on the back of how numbers have fared. But, your view technically, do you think that this is the bottom it's found? There could be some bounce back from here on, or there's still negativity which will, continue because volumes are not that strong today as well?
So Mahima, if we look at little, medium term to long term structure is still on the weaker side. The stock is moving in down sloping channel on a weekly as well as on the monthly chart, which is a sign of, sustained downtrend is, in this counter. Even on the monthly chart as well as on the weekly chart, the major supply zone is placed at around 270 to 80 zone, which is very important for stock to, cross these level. Once stock crosses this level, then there will be a change of stance on the long-term chart as well as on the medium-term chart. Even on the near-term chart, stock is still struggling to cross 20-day moving average, which is placed at around 260. Even in the previous day up move, 260 acted as a major supply zone, and again stock corrected. So bottom is still not done. Stock needs to cross 260, 270 trajectory at least to confirm ki yes, bottom is taken place. At this juncture, still risk is there on the downside. If stocks breaks below 225.
Rajesh, I'm going to interrupt over here. We just have ITC numbers which have come in. The profit number is coming at 5,113 odd crores versus an estimate of 4,900 crores. So marginal beat there, almost a 200 crores uptick coming in terms of where the net profit number goes. That's the only number that I have right now, but 5,113 crores. Let's just pull up ITC chart on the screens and see what's happening on that one. If that stock is reacting, yes, a mild spike that has started to come in terms of ITC on the net profit number that is flashing on the bottom of your screens. That's the first cut on NDTV Profit. ITC 5,113 odd crores. Vineet, quick view at least in terms of the profit number. Estimate was 4,900 odd crores on a consensus basis. Revenue has come in at 16,000 51 versus an estimate of 18,000. So that's a major downtick coming in terms of the top line. But on the bottom line front, it seems a beat of around 200 odd crores is what we are seeing. Mahima is just trying to open the release and get all the details as she tracks the space closely. But we need a quick first cut in terms of ITC.
It's a mixed bag. I think they've been able to grow their margins. But fall in revenue is something that we are not expecting. And hence, in my opinion, this remains a mixed bag.
I think, largely if we take a look at how, the EBITDA number could be impacted is because of the excise number. I mean, just look at that. A 1,300 crore for Q4 FY25 versus that of a 5,000 crore on the back of course, the duty hikes which we've seen for the cigarette business, and that largely impacts the EBITDA number. Let's see as to, how those numbers. But overall, I think, Hiral, profit is a beat, which was not expected, honestly. Overall profit being a beat is something that's possibly, making that stock spike as we speak, a % higher. Revenue, this revenue would largely be impacted because of the price hikes that they've taken, and that could impact the volumes, the cigarette volumes.
The EBITDA number
and
is
that's
at 6,426 odd crores is what we're tracking. What was the estimate looking like? Because 6,426.
So 5,900 is what? So it is beaten the estimates.
So I think in terms of the profitability, it's a beat. In terms of operational matrix, also it's a beat. It's only on the revenue front where it is a downer. And that's where the street is reacting in terms of where the overall the stock goes right now. Vineet, overall, if you have to look at ITC from here on, what are the key monitorables? Because apart from the three numbers, I know volumes is one part of the business. Mahima, if you can just tell us, what is it looking like in terms of the cigarette business revenues? Because that also becomes crucial over here. We've seen that excise impact. I don't know if it will come in this quarter or will it be in the first quarter of FY?
So partially in this quarter as well, but cigarette numbers have been slightly better. It was at around that 8,700 crores in Q4 FY25, but that's increased to almost 11,000 crore in this particular quarter. FMCG overall has not done much, just a 300 crore of an uptick is what we're seeing in the FMCG business. Agri business has seen a downtick of around 500 odd crores. Paper business almost in line with what it was doing in terms of Q4 FY25 as well. So cigarette business is where probably there is some uptick, but this is on account of
5,488 odd crores.
On account of price hikes
also.
Not the volumes.
Yeah, so the price, so the volume number will become crucial because after the price hikes that have come in, the question was whether the volumes will dip or not. Vineet, cigarette EBIT at 5,488 odd crores is what you're looking at. In terms of the overall EBITDA for ITC, 6,426 odd crores. And you have the profit number also, which has beat estimates. With these numbers, I know you've given your first cut a mixed bag, taking the top line and bottom line into consideration. But when you're looking at the EBITDA and the EBIT number for the cigarette business, any comments that you have?
I think they've done relatively well on the managing the operating profitability. But the moot question is, how do they manage their business in FMCG? I think it's not done that spectacularly well. And my take is that, the company has been growing, but not consolidating on the, their rollouts that they have done. So existing businesses are remaining stagnant while new businesses that they launch are adding to the revenue. So until and unless, your already rolled out products, if they don't gain traction, I think somewhere the market recognizes that. Also, they're losing market share in cigarettes. So keeping all these things in mind, for me, it's going to be more of a drag on the entire performance.
FMCG is also a drag because the expectation was that the FMCG business will grow at least in early double digits. Around 11 to 12% is what the street was estimating. But unfortunately, that growth has come in only at 5%.
And so, look at the stock chart. From that spike that we saw, it's actually cooled off. Mayuresh Joshi also joining in. Mayuresh, understanding that you have the numbers, the profits have actually beat what the street was estimating. Revenues have been below. Your cigarette EBIT has come in at 5,488 odd crores. Your EBITDA also has beat estimates, but as Mahima was just pointing out that the cigarette EBIT is mainly in terms of the price hikes that have come in, does not seem to be in terms of volume growth. And if you're talking about the FMCG business, I think that growth is also a downer as compared to what the street was estimating. How are you reading into the numbers? Because the stock price is not really giving you a good picture right now. It saw an initial spike and cooled off completely right now.
It was expected that the cigarette EBIT will be higher because of the price hike that they had taken. Not seen the granularity of the numbers, but the other FMCG business, if they are below par, I think that is a cause of concern, because when you're probably looking at some element of an impact in the coming few quarters, both in terms of input cost pressures and some part of the El Nino effect playing out, leading to a possible demand contraction. The other FMCG business, ex-cigarettes, might actually have a poor or a subpar show going forward as well. In terms of the overall numbers, my own sense is that the bottom line is better than what the street was probably estimating, but the revenue and the absolute EBITDA number are a tad bit below par.
Any idea or any estimates as to how volumes would have fared this quarter, considering that there was price hikes, which could put pressure on volumes eventually? So, any rough idea of range in which volumes could be?
It might be mid-single digits, but we'll have to wait and watch out for the same. And again, I think the commentary thereof, because I think their competitors have probably just alluded to a lot of factors related to how cigarettes might play out, even for them in the next few quarters. So my own estimate, mid-single digits is something where the volume growth might happen.
All right. So, I mean, volume growth is the key that we'll be watching out for. Thank you, Mayuresh. Thank you, Rajesh. And thank you, Vineet, for joining in. Always a pleasure to speak to you. And we were pretty close to closing levels. But yes, we are closing pretty much on the flat line. 23,650 is what you're tracking in terms of Nifty 50. Bank Nifty as well. Down tick of around 0.2% coming in there. Flattened line on the mid-cap 100. And if you look at small cap 250 as well, that was where the green shoots were. Let's see if the small cap 250 is also indicating any bit of an uptake, but clearly the pressure has continued. The advanced decline ratio has remained absolutely kind of steady from where we started off the trade in terms of the show today. If we can just quickly pull up the small cap 250 on the screens as well and see what's happened there. But 23,648 is what you're tracking there. There you go. Pretty much there is 0.7% higher in terms of small cap 250 as well. So that's where the buying has been. And if we can just have the heat map in terms of Nifty 50 to understand if any moves came in on that front. Grasim, Indigo, Apollo, I mean more of reds now versus the greens. ITC absolutely on the borderline. FMCG names, some of them under pressure. Tech Mahindra under pressure with Infosys, and you had a Tata Consumer, and you had some of the financials which also came in under pressure today. But Grasim kept the gun shooting. Indigo was up in trade. Apollo Hospitals reacting to numbers. HDFC Life, Max Healthcare. So some of the pharma majors along with the Hindalco and Wipro. In fact, Hindalco will be reporting numbers tomorrow, so that's going to be interesting to watch out for as well. But clearly, again, it's become an even-Stevens market. That tug of war is something which has continued. We're ending at 23,654, below that support level of 23,700 that we've been tracking closely. Let's see what comes out of the interministerial meeting also, which is slated today at 5 p.m. Any announcements there will be important. Power, we've already heard, and you have the RBI interventions that will be keenly watched out for. But completely out of time. With that, it's a wrap on this edition of India Market Close from the team that put the show together, Mahima and myself. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market opening.
Good evening, you're watching Market Express with me, Shreyanshi Singh, and this is the show that gets you a snapshot of everything that has happened thus far in the trading session. But before we do that, let's quickly take a look at the markets. First things first, and the last trade in fact ended another volatile day of trade in the red, with the Nifty closing near the day's low. And even the Sensex also shedding nearly 200 points. Traders remain cautious throughout the course of the session amid global uncertainty, while profit booking in heavyweight sectors, that's something that kept markets locked in a narrow range as well. Moving on then, let's also talk about the sectoral picture at close. You know, you do have IT and FMCG stocks that drag benchmarks lower, while resilience in realty and auto counters really helped limit the downside. And moving on, let's also talk about ITC that reported its numbers just a little while ago. You were not looking at much of a reaction coming in because this was very close to the market closing as well. But you know, when you talk about the operational number, it's a good set that you're looking at that's coming in well ahead of estimates as well, and profit beating expectations in fact. But when you talk about the revenue, that's fallen short, highlighting a little bit of demand pressure there. It also announced a final dividend with the record date also set for later this month, and that's the update that you're looking at. Onto Samvardhana Capital that completed the cleanup of its troubled legacy book with bad loans dropping to zero and no fresh provisioning needed. That gives the lender a much cleaner balance sheet as it enters a new growth phase, and that's something that the street was cheering as well, with that 9% uptick coming in. In fact, the company is also laying out an aggressive expansion plan, even as the March quarter slips into a sharp loss on account of one-time hits as well. And on to EPAC Durable, that reported a weak set of numbers. In terms of the operational quarter, revenues under pressure, margins sharply lower as well. Profit is nearly wiped out, impacted by the reversal of PLI income, which also weighs on the full year performance. The miss on profitability, in fact, remains a key concern despite some support from operating gains. And on to Sansera Engineering, that delivered a strong set of numbers. And look at the street also cheering that, with that 15.4% uptick coming in. So double-digit uptick coming in for this particular counter today. And when you take a look at the earnings fine print, it's clear why the stock was buzzing away in trade. You're looking at robust growth across revenue and profitability, margin improvement. In terms of the margin improvement, that was a quite sharp improvement as well, aided by a better mix. The order book also remains healthy with strong visibility going forward, while international business continues to drive momentum with faster growth. And moving on, let's talk about brokerages that remained positive on something like a Grasim that was also buzzing away in trade, 6.4% uptick coming in on this particular counter. And you do have both Jefferies and Citi maintaining a buy call. They are seeing a strong finish to the year driven by improvement in the core business, with momentum expected from cement and paints. The Holdco discount is also seen narrowing, supported by paints growth as well, and steady dividends coming in when it comes to Ultratech. And onto the brokerage view coming in for something like a Samvardhana Motherson that was also buzzing away in trade. About a 4% uptick coming in here. And when you talk about the brokerage verdict, Jefferies and Morgan Stanley both remain quite positive on the growth outlook, driven by new businesses like electronics and aerospace. However, Citi stays a little bit cautious, flagging cost pressures and concerns on global demand, even as recent results offer a little bit of support. And onto Apollo Hospitals that reported a strong set of numbers in the fourth quarter, with growth across key segments led by higher hospital volumes and better pricing as well. Continues to support performance, while the Healthco business also delivers healthy momentum, keeping the overall growth trajectory intact. When you talk about this particular counter, it was also buzzing away in trade with that 3% uptick coming in. And on to something like a Lenskart that was in focus. Morgan Stanley stays positive on Lenskart after another, strong quarter really coming in. Growth momentum remaining intact as well. And the focus is on sustaining volumes, while margins are seen stabilizing at healthy levels. Expansion into smaller towns and steady store additions continue to support the long-term growth story. Onto MedPlus that reported a strong set of numbers in the fourth quarter as well, 3.7% uptick coming in for this particular counter, and you're looking at steady growth when it comes to both revenue and profit. Margins remain stable, supported by a rising share of private label products, and the continued shift toward higher margin offerings is something that really helps sustain overall performance momentum. And on to Jubilant Foodworks on the flip side that reported a muted set of numbers. Weak same-store growth is something that you were looking at. Pressure across core operations also weighed on this particular counter, down about 7.8% at close. Profit declined despite some margin improvement, while cautious management commentary as well. That was something that kept a little bit of a caution really maintained in this particular counter. Underperformance versus peers is also something that weighed on sentiment. Onto the brokerage verdict coming in here as well. When you talk about Jubilant, now this stock was under a tremendous amount of pressure, but when you talk about the brokerage verdict as well, Jefferies stayed constructive but cut its target price. Morgan Stanley remained neutral, citing margin headwinds, while Macquarie, that's the one that stayed underweight, flagging growth concerns going forward. Demand recovery and cost pressures remain the key monitorables going ahead. Let's also talk about Bosch that delivered a steady set of numbers with healthy growth when it comes to revenue and margin, supported by stable domestic demand. However, shipments take a hit from geopolitical disruptions, even as supply chain issues ease. Management remains cautiously optimistic, with focus turning to resilience, but also cost management and even future growth triggers. Onto Nucleus Software that delivered a solid set of numbers in the fourth quarter, and look at that 8.8% gain coming in. That should tell you a little bit more about the earnings fine print as well. But when you talk about the sharp jump in profit, that was quite the trigger coming in. Revenue growth also remains steady. Margins see a slight improvement, reflecting stable operations. Now, in terms of what else has happened this quarter, the company has also announced a final dividend of 12.5 rupees per share, signaling confidence when it comes to performance, but also cash flows. Let's also talk about Emami on the flip side, that reported a weak set of numbers that weighed on this particular counter as well. Downtick of about 3% on the back of pressure on both revenue and profitability. Margins contract sharply, and even the profit declined on the back of softer demand. The domestic portfolio, when you look at that as well, it remained resilient, but headwinds in the international markets is something that investors were tracking, especially due to geopolitical issues coming in that continue to weigh on the overall performance. Let's also talk about WeWork India, that delivered a strong set of numbers with sharp growth in both revenue and profitability. Demand for flexible workspaces remains robust, supporting higher occupancy but also better realizations. And when you talk about this strong set of numbers, it's really lifting sentiment, with the stock really rallying in trade following the results. Look at that 19% thereabout gain coming in on this particular counter. Let's also move on and get to some more news and updates. The Reserve Bank of India could announce a record surplus transfer to the centre, with estimates pegging the payout between 2.7 to 3.5 lakh crore rupees for financial year 26. The RBI board is scheduled to meet on Friday to consider the dividend proposal. Sources are telling NDTV Profit that gains from forex intervention, investment income, currency printing and a weaker rupee have significantly boosted the central bank's balance sheet, potentially paving the way for another bumper payout to the government. Let's also move on and talk about electricity demand surging amid intense summer conditions as well, and the government has activated an emergency action plan to avoid power shortages during peak months. Power plants, in fact, across the country will remain fully operational through June and July, with no maintenance shutdowns allowed during this period. Officials estimate that the move could generate an additional 15,000 megawatts of surplus power also coming in, and the centre has also assured adequate coal availability, while hydroelectric plants will also be strategically managed to meet peak demand requirements. Let's also move on and talk about EV demand as well. That's in focus. India's electric vehicle momentum is gathering pace as rising petrol and diesel prices push more consumers toward EVs as well. Tata Motors passenger vehicles also told NDTV Profit that it is witnessing strong broad-based growth in inquiries as well as bookings, with demand accelerating further in the recent weeks amid developments in West Asia. When you talk about some of the other companies as well, something like JSW MG Motor India said that customer interest in EVs rose over 23%, and that's just between March to April versus the start of the year. While you do also have M&M that has reiterated its commitment to electrification and cleaner mobility. Moving on, then let's talk about Nvidia, that is signaling confidence that the AI boom still has significant room to run. You do have the CEO who said that the chip giant can sustain blockbuster growth through a broader customer base and next generation products as well, even as competition really intensifies. Nvidia has forecast stronger than expected second quarter revenue, announced an $80 billion share buyback, and sharply increased its dividend as well. Now, the company is also ramping up supply spending amid a global memory chip crunch, while Huang also highlighted the upcoming Vera chip targeting a massive $200 billion market opportunity. Let's also move on and talk about some IPO news then. SpaceX, that has filed publicly for what stands to be the largest ever IPO, revealing billions in losses, and the super voting share plan, which allows Elon Musk to keep the company under his control. According to a filing with the US Securities and Exchange Commission as well, you do have the AI giant that is giving the billionaire the power to outvote anyone else and promising him outsized rewards if he can pull it off. In fact, when you talk about this particular filing, it's showing the goals that Musk would need to hit, which include a human settlement on Mars with at least 1 million inhabitants. Before that can happen, SpaceX is also tasked with the task of making the dream of data centers in space a reality. The question for investors, though, at this point is whether the sum of Musk's aspirations for SpaceX are worth valuing at as much as $2 trillion, viewed in light of financial disclosures that seem minuscule by comparison. Moving on then, let's talk about European space stocks that rallied sharply after Elon Musk's SpaceX filed for a stock market listing, sparking fresh investor excitement across the satellite and aerospace sector. Shares of a bunch of these companies, in fact, all gained an early trade as markets bet that the SpaceX IPO could really drive renewed interest and valuations across global space-related companies. And let's also move on and talk to you about an Australian court that has upheld a fine against Elon Musk's X Corp in a case linked to child safety compliance on social media platforms. The dispute began after Australia's internet regulator sought details on how the company was tackling online child exploitation. Now, X had challenged the request, arguing that it was issued before Twitter merged into X Corp. However, the company has now admitted wrongdoing and will pay a higher penalty along with legal costs, bringing the 3-year legal battle to a close. And let's also talk about Samsung Electronics that has temporarily avoided a major labor disruption after reaching a last-minute tentative wage agreement with its largest workers' union. The strike, which threatened operations at the world's biggest memory chip maker during a booming AI demand cycle, has now been suspended pending a union vote later this month. Now, this dispute centered around bonus distribution, with workers in Samsung's fast-growing AI memory chip division set to receive significantly higher payouts than employees in other business units. And let's also talk about Britain that has secured a major trade agreement with the Gulf Cooperation Council, a deal expected to add nearly $5 billion annually to the UK economy over the long term. The agreement deepens economic ties with some of the key Gulf nations, including Saudi Arabia, the UAE, and Qatar as well. And this is, in fact, coming in at a time when the region continues to grapple with geopolitical tensions and supply disruptions. Following the Iran conflict earlier this year, the pact is also seen as part of Britain's broader push to strengthen strategic trade partnerships beyond Europe. And let's also talk about Britain that has reported a sharp drop in long-term net migration. So that is one factor that you're also looking at as an important update coming in from there, with numbers nearly halving, being half in 2025 to their lowest levels since the post-Brexit immigration system was introduced. According to the Office for National Statistics, net migration fell to 171,000 in the year ending December, down from 331,000 a year earlier. And sharply below the record peak, mind you, seen back in 2023, the decline is coming in as tighter immigration measures introduced by the government begin to significantly curb arrivals into the country. Let's also talk about foreign direct investment into Germany that has fallen for the 8th straight year, hitting its lowest level in nearly 2 decades as well. A survey by professional services firm EY shows investment projects, in fact, declined 10% in 2025, weighed down by high taxes, elevated labor and energy costs, and even persistent bureaucratic hurdles as well. Despite the slowdown, Germany still remains Europe's 3rd most attractive investment destination after France and the United Kingdom. Let's get you some national news now. Delhi NCR is staring at major transport disruptions as commercial vehicle unions launch a 3-day Chakka Jam protest against the hike in environment compensation cess. More than 68 transport unions, in fact, have backed the agitation, which is expected to impact cabs, auto rickshaws, goods carriers, and several public transport services across the region, with truckers, taxi operators, and private bus associations joining hands. Commuters could face significant inconvenience while supply chains and daily logistics also come under pressure. And let's also talk about the resultant impact of the strike that I've just talked about. A 3-day transporter strike across Delhi NCR is threatening to disrupt this supply of fruits, vegetables, milk, and other essentials in the national capital and NCR region. Truck operators have halted services in protest against rising green cess, like I mentioned, bringing nearly 1.6 million good vehicles to a standstill. Traders at Delhi's Azadpur Mandi are saying that the impact is already visible, with sharply lower vehicle arrivals. Supply shortages and price pressures are expected to intensify over the next 2 days if the deadlock continues. Let's also move on and talk about Union Education Minister Dharmendra Pradhan, who's chaired a high-level review meeting with security and intelligence agencies ahead of the NEET UG re-examination. The government has directed strict action against fake telegram channels and anonymous groups accused of spreading misinformation around the medical entrance exam. Officials are saying that the focus is now on ensuring foolproof security, identifying vulnerabilities in advance, and maintaining a fair and transparent examination process. Representatives from Meta, Google, and Telegram also attended discussions on tackling online misinformation linked to competitive exams. Let's also move on and talk about Delhi, that is battling intense summer conditions as the IMD in fact issues a yellow alert for severe heat wave conditions across the national capital that continue to soar, with authorities urging residents to avoid prolonged outdoor exposure during peak afternoon hours. And the extreme heat is also driving a sharp rise when it comes to electricity consumption, with India's peak power demand also hitting a fresh all-time high for the third straight day as air conditioner and cooler usage surges across the country. Let's also get you some international news then. A high-stakes diplomatic window is now open. The US and Iran are racing against time to finalize a peace agreement, with reports also suggesting a deal could be announced within hours. President Trump, in fact, has set a tight 72-hour deadline, warning negotiators to also close the deal quickly or risk escalation. Iran, while signaling openness to diplomacy, has really pushed back strongly, saying that coercion is not going to be forcing surrender at this point in time. With both sides exchanging proposals under pressure, the next few hours or days could really shape the future of this fragile ceasefire. Let's also talk about US President Trump, who said that he may speak directly with Taiwanese leader over a possible arms sale, a move that would mark a major break from decades of US diplomatic tradition. Washington, in fact, has avoided direct leader-level engagement with Taiwan since formally recognizing Beijing in 1979. China strongly opposed the comments, warning that the US warning them against sending what it calls wrong signals to pro-independence forces in Taiwan. The development is coming in amid rising tensions over Taiwan and renewed focus on the island's defense capabilities. Let's move on and talk about Melbourne's Avalon Airport that was partially shut down for several hours after a suspicious package triggered a bomb scare during security screening. In fact, police and bomb disposal teams were called in, leading to delays in domestic flight operations. Authorities later confirmed that the package contained a laser hair removal device in a hot chocolate container. Now, the passenger linked to the package was briefly detained and later released, while airport operations resumed after nearly 4 hours. Let's move on and talk about fresh diplomatic efforts that appear to be underway between Iran and the United States, with reports suggesting Tehran is preparing a response to a proposal sent by Washington. Iranian state media, in fact, is saying that the latest text has narrowed some differences, while Pakistan is emerging as a key intermediary in the indirect talks as well. And Pakistan's interior minister has already held meetings in Tehran, mind you. Army Chief Asim Munir also is expected to visit as back-channel diplomacy is intensifying at this point in time amid ongoing tensions. And with that, it's a wrap on this edition of Market Express. Thank you so much for tuning in.
Investments in specialized investment fund involves relatively higher risk, including potential loss of capital, liquidity risk, and market volatility. Please read all investment strategy related documents carefully before making the investment decision.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and
D-Street despondence continues as benchmarks end flat while Nifty manages to settle above 23,600. Small cap stocks witness stronger buying interest. Is it time to pursue bottom-up approach? Full analysis ahead on the show. Rupee strengthens after hitting multiple record lows, ends at 96.2 against the dollar, but as pressure remains amid rising geopolitical uncertainty, Commerce Minister Piyush Goyal says several steps being taken to prevent more damage. From record dividend payout to launching FCNR deposits, NRI bonds and more INR USD buy-sell swaps, sources indicate RBI-led several multi-pronged measures are underway to save the sliding rupee. US-Iran signal fresh peace talks as US sends new proposal to Iran. Pakistan steps up mediator's role after Pakistan's Minister Mohsin Naqvi met with Iran's Foreign Minister. Pakistan Army Chief Asim Munir is set to reach Iran today for back-channel talks. India's EV momentum is picking up speed as rising fuel prices drive consumers toward electric mobility. Tata Motors tell NDTV Profit inquiries and bookings have accelerated in recent weeks, while Mahindra & Mahindra and JSW MG echo the same momentum. Backing PM Modi's austerity push, CJI Surya Kant asks all high courts to hold online hearings. Most high courts already shift to virtual mode. Supreme Court too goes online on Mondays and Fridays. Delhi NCR transporters begin a 3-day strike against the environmental cess hike. Truckers, taxi and commercial vehicle unions join protest. Drivers also seek hike in auto and taxi fares. PM Modi to chair Council of Ministers meet at 5 p.m. today. Big reform review by ministries, energy, finance, railways to brief Prime Minister Modi to issue key guidance. Hello and welcome viewers, this is Malika Mishra on NDTV Profit and you're watching Profit 360, a show that gets you all the latest updates on markets, national as well as international news. Let's begin the show by checking the markets first. D Street continues to sulk today as benchmarks end the day on a flat note. While Nifty managed to close about 23,600, the Sensex settled near 75,200 odd levels. Broader markets performed a tad bit better, especially the small cap universe, as the small cap 250 index outperformed the benchmark. In fact, let's go across to my colleague Parth Goel for a roundup of all the market action today.
So Nifty has ended on a flat note today, closing just above 23,650. Bajaj Finance and HUL were the top losers in Nifty, both of which were down by over 1.5% today. Grasim was on the other side the top gainer in Nifty, gaining over 6%. Broader market has outperformed the benchmark today, with Nifty Midcap 150 ending in green, up by 0.1%. This was led by Honeywell Automation, which was a top gainer in Nifty Midcap 150, up by over 20%, followed by IRB Infra, which was up over 8% today. Nifty Small Cap 250 also outperformed both of these indices and ended in green, gaining over 0.7%. This was led by Samman Capital and Triveni Turbines, both of which gained over 7.5% today. Now, if we move on to sectors, then sectors ended on a mixed note today, with Nifty Realty being the best performing sector, up by 1%, led by Anantraj and Phoenix Mills, both of which gained by 2.5% today. On the bottom side, we saw Nifty IT being the worst performing sector, down by 0.5%, led by Persistent and Coforge. And lastly, about sectoral trends, we saw Nifty Realty, Nifty PSU Bank, Nifty Energy, Nifty Auto and Nifty Oil and Gas end in green for the third day in a row, while Nifty Metal, Nifty IT have ended in green for the second consecutive day. On the other side, Nifty FMCG has fallen for the fourth day in a row.
Right, thank you so much for that, Parth. FMCG continuing to be the weak spot in the markets. But Indian markets are at an interesting inflection point, with extreme pessimism colliding with improving underlying fundamentals. We see one of the worst phases of relative underperformance, but at the same time, much of the negativity appears to be already priced in. And history suggests that even if indices remain range-bound, stock-specific opportunities can still generate significant alpha. My colleague Neeraj Shah, who is also executive editor for markets at NDTV Profit, joins in to explain how markets may shape in the coming months. Listen in.
Here's some key data points for people to mull over about when they're thinking about what could happen next to the equity markets. And I've borrowed some from a note from Morgan Stanley and some from our own research. So what can indices bottom out? I think India's share of global profits currently exceeds the global index weight by the highest margin. So if you take the share of global profits to the global index weightages and do a ratio, I think it's probably the highest that it has ever been in terms of the margin, which effectively shows that the valuation has gotten skewed on the downside relative to history. The trailing 12 months relative performance is the worst in history. This is as per a Morgan Stanley note by Rhythm and colleagues. So interesting to see that how from versus history, I think we are on some key footings. And the foreign positioning, of course, is known as at multi-year lows. Now, can this actually go down further? It sure could. Various FIs have come and spoken about they would still want to pursue the AI trade. But be that as it may, we do know that from here, the quantum of selling that could happen is hopefully going to be much lower than what it was maybe 12 months ago. Now, all eyes are on the government to pick up crucial reforms before the 2027 UP elections. I think there's a clean slate of 7 or 8 months that the central government has to enact some reforms without worrying about the overhang of state elections and what the response of that could be. So I think this is something that people are looking forward to. Some reforms coming in, tough as it they may be, but if they actually help investor sentiment around what the government is doing on reforms architecture, I think that could really, really help. That is one. And the other point is that even if the indices were to flatline, what could it do to markets and portfolios? So can the Nifty flatline while portfolios gain? I think I took a look at what the period of 2000 to 2013 meant for the US index, or the US stocks and the Japanese index. Now, the S&P 500 from 2000 to early 2013 traded near 1400 levels in 2000 and hovered around the same levels in 2012 to early 2013. But there were enough stocks which during this 13-year period did really well. In US, Apple rose by nearly 70 times. Amazon saw triple-digit returns as well. Monster Beverage multiplied multiple times as well. So and of course I'm picking and choosing here, but what I'm effectively trying to say is if the index flatline, it didn't matter if you were able to choose the right stocks for a long period of time. I'm nowhere insinuating that the Nifty will flatline for 13 years, but history is shown, even in FTSE 100, for example, 2002 2013, it peaked near 7,000 in the end of 1999, and I think stayed around these levels for up to 2012 or 2013. And even in this case, which is the UK index, Reckitt Beckensur, Primark, etc., delivered strong returns. Rio Tinto outpaced the index as well. So there are enough. Japanese index in the early years also has some measures like this or responses like this, if you will, or data like this. So the index may well flatline, but we may have enough stocks which could deliver returns. Shreyas Devalkar joins in right now, and I would love to ask him this. Shreyas, does it petrify you or worry you that we may be in a period or have been in a period?
Well, after hitting multiple record lows in past sessions, rupee staged a comeback in early trading today. The rupee strengthened 0.6% to close at 96.2 against the dollar. This breather comes right after the RBI unveiled a $5 billion rupee swap auction to infuse long-term liquidity in the banking system. However, the domestic unit remains under pressure and has declined over 5% this year already. Now, this is extremely concerning for the economy because we end up paying more for all our imports at a time when fuel prices have catapulted above $100 a barrel. On your screen, you can see Brent up 1.06% and US WTI up about 1.02%. In fact, speaking on the sidelines of the AmCham, American Chamber of Commerce Annual Leadership Summit in New Delhi, Commerce Minister Piyush Goyal told media persons that the government is evaluating a range of measures to prevent any sharper deterioration in the currency. Listen in.
With rupee sliding, so what more measures can the government take to, contain the current account deficit widening?
We are monitoring the situation. All the various arms of government are working as a team. Several steps are under consideration. The situation is globally quite challenging, but we have the confidence and the courage of conviction that we'll come out winners even in this challenging time.
And amidst the weakness in the rupee, India could be headed for another massive payout from the Reserve Bank of India. Sources tell NDTV Profit that the RBI board is set to meet on Friday to consider its dividend payout to the centre for FY26. The payout is likely to be between 2.7 lakh crore and 3.5 lakh crore, potentially a record transfer to the government. Sources say a nearly 10% fall in the rupee against the US dollar during FY26 helped expand the rupee's balance sheet. The central bank also reportedly made gains through forex market interventions, investments, and currency printing operations. Because the RBI holds massive foreign exchange reserves, mostly in dollars, and dollar-denominated assets like US bonds. So if the rupee falls, those same dollar assets become worth more when converted into rupees. But we've also heard viewers from our sources that the Reserve Bank of India is evaluating multiple options to help arrest the recent slide in the rupee. Sources tell NDTV Profit that the RBI is deliberating on the possible launch of FCNR deposits, that's foreign currency non-resident deposits, which could encourage overseas Indians to park more foreign currency with Indian banks. The RBI is also evaluating the issuance of NRI bonds, another tool used in the past to attract dollar inflows from Indians living abroad. My colleague Piyush Shukla now joins us with more details on the measures being considered.
Absolutely. We are hearing from our sources that RBI is holding internal meetings with all the stakeholders, with their staff, the forex department, and essentially the focus is on how to curb the depreciation in Indian rupee. We have seen yesterday the rupee hit around 97 level versus US dollar. Today the rupee recovered by around 80 paise to around 96.20 level. However, this continued depreciation depreciation in rupee is something which is concerning the regulator right now. So there are multiple options that are on the table. The RBI, as we are aware, just yesterday announced that they will be doing a $5 billion buy-sell swap, and we are expecting the sources indicate that there could be more such dollar buy-sell swap going ahead, dollar and INR. Further, the very anticipated talks on FCNR deposits, that also is on the table, although nothing has been finalized yet, but this is something that RBI could launch to arrest the fall, though there will be some charge that will be incurred, but the gains are pretty high. The inflows are expected at around 30-40 billion, more than $40 billion if this deposit scheme is launched. Furthermore, the government backed sovereign dollar bonds also is being talked about. RBI is further also likely to nudge PSU banks to raise their borrowings in dollar form. We are aware just 2 weeks back SBI announced that it will raise around $2 billion via foreign currency. So all these measures are being deliberated upon. There is no final say yet, but the RBI overall is working on a strategy to curb the fall in Indian rupee. Back to you.
Thanks so much for that, Piyush. And viewers, let's now take a look at some developments in the Iran war. Negotiations over Iran have taken center stage, with Pakistan stepping in as a key channel. Pakistan's Interior Minister Syed Mohsin Naqvi met with Iran's Foreign Minister Abbas Araghchi, signaling back-channel diplomacy as Tehran and Washington continue indirect discussions. And Pakistan's Army Chief Asim Munir is also set to land in Iran today. The US in the interim has sent a fresh proposal, with Iran expected to respond soon. But divisions are widening among allies. Reports suggest a heated exchange between Donald Trump and Benjamin Netanyahu. While Trump is pushing for a breakthrough deal, Netanyahu is set to favor sustained strikes to weaken Iran's military. The diverging strategies are fast emerging as a serious flashpoint in an already volatile West Asia crisis. But oil prices remain volatile amid peace deal uncertainty. You see Brent crude futures, as I was mentioning before, is hovering anywhere around $104 to $105 a barrel, and both benchmarks had dropped about 5.6% yesterday to their lowest in more than a week after Trump said talks with Iran were in the final stages. Listen into what Donald Trump had to say about Netanyahu.
What have you said to Prime Minister Netanyahu about Iran and how long to hold off on strike?
He's fine. He'll do whatever I want him to do. He's very, very good man. He'll do whatever I want him to do, and he's a great guy. To me, he's a great guy. Don't forget, he was a wartime prime minister, and he's not treated right in Israel, in my opinion. I'm right now at 99% in Israel. I could run for prime minister, so maybe after I do this, I'll go to Israel, run for prime minister. I had a poll this morning. I'm 99%, so that's good. But no, he's a wartime prime minister, and I just don't think they treat him well.
Switching tracks to India, amid PM Modi's austerity call and consecutive hikes in fuel prices, EV makers say that the green segment is seeing a record demand. In fact, the management of Tata Motors PV and JSW MG Motor India told our colleague Danish Anand that customers are looking at affordable alternatives now. Let's go across to Danish Anand for more details.
Correct. JSW MG Motor and Tata Motors passenger vehicles have exclusively told NDTV Profit that, especially from the past few weeks, there is a greater demand for EVs that these companies are seeing. First, talking about Tata Motors, especially, Tata Motors is seeing an increase in the walk-ins as well as inquiries for electric vehicles that Tata Motors manufactures. Besides that, they're also seeing a high jump in bookings for EVs. On the other hand, if we talk about JSW MG Motor India, they have seen a 23% jump in bookings for EVs if we compare January to February 2025 and March till April 2026. So they're seeing a great demand for EVs, and one of the factors why there's a great demand is obviously the rising fuel prices that we have seen over the past 2 weeks. Besides that, PM Narendra Modi had also given a suggestion to the public to use EVs, and especially after these two big drivers, we are seeing that they're seeing more and more demand for EVs. Very largely, MG Motor India is of the view that the EV penetration the EV penetration will increase to 8% by the end of this year. So all in all, if we see in the backdrop of the West Asia crisis, electric vehicle companies are seeing greater demand for vehicles.
India Inc. has sounded a major warning over what it calls the 3Fs challenge: fuel, fertilizer and food. Industry body Confederation of Indian Industry says the West Asia crisis is putting pressure on energy prices, fertilizer costs and food inflation, and also the rupee. CII has urged the government to treat the three sectors as one linked economic challenge, warning that India's heavy import dependence on crude oil, phosphates and urea makes the economy vulnerable to global shocks. The industry body has recommended a series of measures, including a faster ethanol blending roadmap, LNG-based freight transport, direct benefit transfers for fertilizer subsidies, and stronger food supply management to contain inflationary pressures. But in the interim, let's take a look at an important earnings announced. ITC has reported an operationally strong fourth quarter, with margins coming in well above street estimates and profit also beating expectations. However, revenue growth remained muted and missed estimates, indicating some pressure on demand. The company has also announced a final dividend with the record date scheduled later this month. Let's go across to my colleague Mahima to get a deeper sense on the numbers.
All right, so overall, if you take a look at the ITC numbers, it's a mixed bag because revenue did miss estimates, and this is largely on account of the excise duty increase that came in. And if you take a look at the excise numbers also, you know, they're up almost 4 times as compared to where they were in Q4 FY25. So revenue, missed in terms of where the estimates were at that 16,000 crore versus that of an estimate of 18,000 odd crore. But in terms of where, the net profit stands, it was a complete beat at that 5,000 crore mark versus an estimate of 4,900 odd crore. Margins stood at 40% versus that of an estimate of 33.2%. And this is the EBITDA beat, and the margin beat is largely led by the price hikes that the company has taken in order to offset the excise duty hike. EBITDA also stood at around 6,400 odd crores versus that of an estimate of 5,990 odd crores. In terms of the segment-wise performance overall, the cigarette business revenue saw an uptick of almost 27%. Again, this is on the back of price hikes and not volume growth. Volume growth, we spoke to an analyst and he suggested that it could be in the mid-single digit number, but we'd have to wait and watch out for that volume percentage number. Overall, EBIT saw a growth of 7% for the cigarette business. Agri-business revenue, however, did see a downtick of 16%. FMCG business, which was expected to grow around, in early double digits, just saw a growth of around 5%. And agri-business EBIT was down by about 30% odd. So this is the overall view of what's happened with ITC this quarter.
Thanks so much for that, Mahima. And in a move aimed at supporting Prime Minister Narendra Modi's austerity push, Chief Justice of India, Surya Kant, has said that all high courts across the country have been asked to conduct online hearings, with most of them already implementing the system. The remark came during a hearing where a lawyer urged that all Delhi courts shift to virtual mode for 3 months in the national interest. The CJI said district courts come under the administrative control of high courts, but also added that he has requested them to consider online hearings there as well. The Supreme Court has already decided to hear cases virtually on Mondays and Fridays, while also encouraging carpooling among judges to help reduce avoidable expenditure amid the West Asia crisis. In the interim, Goa is looking beyond its image as just a weekend tourism destination, with the state now pushing a work from Goa model to attract startups, entrepreneurs and long stay visitors. The aim is to build a stronger round-the-year economy and create more wealth locally. NDTV Profit, in fact, spoke exclusively to Goa's Chief Minister Pramod Sawant to understand the vision. Let's listen into that conversation.
Right, Goa is known for many things. It's beaches, it's tourism, it's nightlife. But one thing it's not known for is having the Chief Minister sit at a shack here and working out of a shack here in Baga Beach. Thank you so much, Mr. Sawant, for taking time out for NDTV Profit. We're here witnessing some sort of a pivot that the Goa government is also making in terms of boosting Goa as a work from home, as a vacation destination. Talk to us about the vision behind this.
As you rightly said, for the vacation destination, our tourism minister and IT minister, both the ministry have come together to start with the Sectoral 2026. This is a new concept to work from the beach. It is not only to the work from the home. Now, already the Prime Minister Narendra Modi ji has appealed to the work from the home. But most of the time, the people has got tied up to work from the home. So they can come to the Goa, they can take the stay homes and everything, and they can start to work from the beach. This is the new concept. Already we are creating the infrastructure which is required for them. So they can at least start their works from the beach. So as I rightly said, beaches is Goa is not only for the sun, sand and sea. Goa is also for the startup. So this is a new concept we have started.
Viewers, as it becomes hotter, our power consumption is also going to increase. And therefore, the government has rolled out an emergency plan to tackle this surge in power demand. We have learned that the power demand may hit 283 gigawatts in the month of July. And therefore, the government is coming up with some measures like no maintenance allowed during June and July in the summer peak season. My colleague Sesa now joins us to share the measures that the government has exactly taken. Sesa.
The government has come up with an emergency action plan to meet rising electricity demand during the summer season, and senior officials from the Ministry of Power briefed the Parliamentary Standing Committee on Energy on the same. Now, what we are given to understand is that officials have informed the committee that power demand has hit a record high of 265 gigawatt this week, and demand is further projected to rise 283 gigawatt in July. Sources said under the plan, the government has decided that all thermal power plants will remain operational during the season, which means that no maintenance shutdowns will be allowed. Officials also said that this particular move is expected to boost supply by 15,000 megawatt in order to manage the expected spike in demand.
Viewers, Delhi NCR is witnessing a major transport disruption as truckers, taxi operators and commercial vehicle unions begin a 3-day strike against the Delhi government's environment compensation cess hike. The protest is led by the All India Motor Transport Congress and will continue till May 23rd. Unions have called the policies of the Delhi government and air quality panel unjust for the transport sector. Commercial vehicle drivers groups have also demanded a hike in taxi and auto fares, citing sharp rises in CNG, petrol and diesel prices. Meanwhile, some auto rickshaw unions have also distanced themselves from the strike, even as transport bodies warn of widespread disruption across Delhi NCR. Amid closely watched negotiations around the proposed India-US trade deal, Commerce Minister Piyush Goyal has indicated that the chief negotiator for the agreement may visit India next month. The Commerce Minister said the negotiator is not part of the current visit, but also added that plans are underway for him to travel to India as both sides continue to push forward on the trade pact. Meanwhile, US Ambassador to India Sergio Gore has expressed confidence that the deal could be finalized in the coming weeks or months, saying both countries need candid and constructive engagement on export controls and technology flows. Listen into the exact remarks of the Commerce Minister and US Ambassador to India.
I think he's not coming with him, but there is some plan for them to come next month.
To all of you who have asked, what is taking so long? It has been a year and a half since we started these negotiations on the trade deal. To put in perspective, the European Union took almost 19 years. And so we are confident that over the next few weeks, over the next few months, this trade deal will get finalized. It will bring the stability and the opportunity for both of our sides. We need candid and constructive engagement on export controls and technology flows, grounded in trust. And we need strong intellectual property protection to encourage innovation and investments.
And viewers, there's some crucial update on the Pulwama attack. Hamza, believed to be one of the key masterminds behind the Pulwama terror attack, has been killed. He was shot dead by unidentified gunmen in Pakistan-occupied Kashmir. According to sources, Hamza was attacked by unknown gunmen outside Ames College in POK's Muzaffarabad. He sustained multiple gunshot wounds and later succumbed to his injuries. Indian security agencies had long listed him as most wanted. In 2022, the Ministry of Home Affairs has officially designated him. In fact, in 2022, the Ministry of Home Affairs had officially designated him as a terrorist. According to the ministry, he played an active role in spreading terror across Pulwama and South Kashmir, recruiting youth into terrorist organizations and raising funds to support terrorism. That's all the time we had on this edition of Profit 360. Stay tuned to NDTV Profit. This was Malika Mishra. Thanks so much for watching.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Reports with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get.
क्या सर्च इंजन के चक्कर में पड़े हो दोनों? अब कोई कंफ्यूजन नहीं. कॉल 9300 300 300.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, and it's a very interesting show where I get you companies which are buzzing on earnings, hidden gems, and also a lot of retail interest, and I get you these interesting companies for you. And today also there's a very interesting company, but before that, try to guess it. The first hint, it's a certification services company for natural and lab grown diamonds.
The company's promoter is Blackstone Group. Interesting, right? Company has come earlier in KYC also. That's another hint I'd like to give you. And they've delivered a strong March quarter. Interestingly, from January lows itself, the stock itself is up 25% as well. Talking about gem and jewelry, but the company is a certification company. So the company in focus today in KYC is going to be International Gemological Institute. This is the company which we are talking about. The company has come out with a good set of numbers. But what are the key questions we will try to ask? Of course, on the earnings and the outlook going ahead. Let's put out the key questions, for this company. The first one is definitely going to be on the growth expectations for FY27. Is there any change in the margins, change in the sales outlook, volumes? That's what we'll talk about. Also the LGD, which is nothing but lab grown diamond. How's the volume looking like? Is there any changes happening in this certifications for this segment? PM Modi recently urged to buy less gold, but will this impact the studded jewelry volumes? That's also a key question a lot of investors have been putting up. The Middle East conflict, what happens on the impact on business? Remember, the company has offices in Abu Dhabi and Dubai as well. Apart from this, the AGL acquisition, that's where a bullish commentary is coming in, especially on the diversification part. That's something we'll be watching out for. And also the diamond prices, they have fallen almost 50%. Does that impact the demand, and is there a second order impact on the company? Also, apart from this, the 3-year sales CAGR is of 25%. Will this growth momentum continue, or because of a higher base, there might be a little bit of moderation going ahead? And of course, we'll be asking the certification gap. Is it widening between LGDs and the natural diamond segment or not? So these are the key questions. And to put that in perspective, we'll have the global CFO of the company, Ishwar Iyer, with us. But before that, let's try to learn about the company. What does this company always do? Or you could say, what does the company's main operations are? Of course, the certification and accreditation of diamonds, colored gemstones and jewelry is something their core business. And to get more things in perspective, of course, they do the grading reports for the diamonds and this colored stone origin reports as well. They have an education setup also, and 55 to 90% market share they are having across their key categories. And interestingly, apart from this, the backing is something which the street is quite bullish on. The promoters is Blackstone, and of course backed by some really large institutions globally as well. Also, let's look at the other details about the company. They have transitioned. If you're tracking this company, now it's April to March. Earlier it was on a calendar year basis, so that's an important point to mark. And the global network of 36 labs and 21 schools of gemology across 10 countries. That's what we are going to talk about. And also the revenue mix, let's just have a look how things are panning out. Largely lab grown is 60%. That's the majority I'm talking about. After that, there is some kind of a breakup. Of course, the natural diamonds, that's around 15%. The remaining goes for the jewelry and the gemstone segment. This is where their certification they do of these key products. But March quarter highlights, it was something very strong. The total certifications went up 16% on a year-on-year basis. And also, if I give you more details, let's just pull up other key triggers, and there was a strong growth momentum on the certification of their key business segments as well. Also, the bullish commentary is coming on the AGL acquisition, and that's coming from the management. So we'll try to understand what are the incremental benefits actually there. The average realization prices, they did go up by 4% on a year-on-year basis, coming in at 987 rupees per share. The reason is the increased mix of natural and lab-grown loose stones, and that is why the average selling price, which is called ASP, has gone up. Largely, let's see the industry, how things are panned up, and this is a very important takeaway. 4 times there's a production growth coming in the last 3 to 4 years. Also, looking at the industry size for the India is almost $0.6 to $0.7 billion. For the global, look at that, that's $10 to $13 billion. But how the CAGR growth is looking like, that's around 13 to 15% for India, and for global, it is around 6 to 8%. So if you are understanding the industry, do take a note or take a screenshot of this data. What works for the company? Of course, strong operational and financial parameters are there. High ROCE company, Blackstone as a promoter group, things are looking really strong here. And also one positive point is it's a debt-free company. So largely these are the key positive pointers coming in, but
what is there, where is the lack happening, where is the concern? There is a lack of analyst coverage in this stock. Secondly, IPO, post its IPO, it was in the year end of 2024. After that, there hasn't been any major institutional buying post the IPO, and it's almost 1.5 years now. The benefits of the recent AGL acquisition will take time. It's not that it's going to happen next quarter, it's going to take some time, and that is what a little bit of concern or caution would be there if I am analyzing this company. But to analyze this company more in KYC, I'll be getting you those 8 parameters where we judge a company. And interestingly, there includes income statement, balance sheet, cash flow. These are the official, financial ratios to track. Return ratios, I'll get you both the ROCs and ROEs. And don't worry, Street Cred also will try to understand from the IPO price, has the company made any money or not. Shareholding, of course, we spoke about valuations. The company doesn't have a peer, so we'll be judging their peak and the current valuations, and of course the outlook on the industry going ahead. So 8 parameters for the KYC in this show. The first one, let's start with, that's the income statement, and largely the 3-year CAGR, revenue, EBITDA, PAT, all of them growing 30% plus. So a good, healthy, income statement growth in the long-term basis. But the Q4 numbers is something which I was very bullish on, and that is where we are seeing a good momentum happening. If you could just show the Q4 numbers, and this definitely beats whatever the expectations was there in the street. A year-on-year basis, there is a good growth coming, and they're sustaining it. The question is, will they sustain going ahead or not? Let's pull up the margins also to see what has happened. Remember, most of the data is calendar year, and now they are changing the reporting period, and there is a good up move in the margins also at 64% in first quarter calendar year 26, or let's just put it March quarter to simplify it for your analysis. So net income statement is a strong thumbs up. Let's look at balance sheet. Remember I mentioned that the company is debt-free company, so that's a good sign. A healthy balance is also there of 464 crore rupees, and if you have a promoter like Blackstone, you can expect that the balance sheet and the working capital will be maintained very professionally, and that's what we are seeing. So balance sheet is also a strong thumbs up. So we spoke about income statement, we spoke about balance sheet, all of them are ticking. But cash flows, let's see what's happening. And remember, the company has come earlier in KYC also, and I'll give you the entire history of it, but you need to be stay tuned with KYC right now. A little bit of variance here in the net cash flows. Of course, some adjustments are there when it comes to the investing in the financing segment, but largely from the cash flow operations, it is a decent growth, and the conversion is also pretty decent. So let's keep it neutral and give this a neutral rating when it comes to the cash flow segment. Let's talk about the return ratios. And remember, this return ratios numbers of the last 2 years we have gotten, it's roughly from 48% is the ROC, and now it's at 45%. There's an adjustment also. Let's pull up the ROE numbers to show you. And remember, this is a very high return ratio business. Same thing story happens here as well. Remember, there was an adjustment also which the company has taken in place, and because of that, this return ratio minor hit has come in. If you compare that, this is the reason for it, the ROE adjustment for a fresh equity issue. It was there in the month of December 2024. But nevertheless, ROE, ROC strong is dhande ka, and we know that by now. Also, let's talk about the shareholding, what has happened. The promoter shareholding, of course, we spoke about it. Blackstone is the group here. But my concern is, we had good names in the IPO, but after that, have the good names added positions? No, it hasn't, and it's been almost 1.5 years. It's largely same. Actually, FIs have reduced a little bit. It's coming in at 9%, and DI's holding has been flat. No major move for the public also. So largely the institutions are holding most of the stock. So it's a neutral rating right now when it comes to the shareholding. But the question remains is, has the stock made money for retail or for the investors? That's the key question. And remember, from January lows, I had mentioned the stock is up 25%. But the concern is from here, from its lifetime high levels, especially during its IPO time, the stock was, trading at a pretty stronger rate. It's down 43%. It hasn't recovered yet. And also from the IPO price also, there is a fall. It's down 12% from 1 year basis. Also, the stock is down 7%. So concern is there when it comes to the overall performance, because that money hasn't been made yet. Because of that, I'm going to give this a thumbs down. Let's talk about valuations, how things pan out. And largely the peak valuations were 41 times, especially during the euphoria of the IPO. But after that, correction has happened and it's at 30 times right now if you compare that with the 12-month trailing P. So largely valuations seem neutral right now. I can't say very attractive because there's just only one company. What's the sectoral valuation? We need to give it more time. It's just been 1.5 years. So I'm going to give this a neutral rating as well. But outlook, let's see what's happening here. And outlook seems to be turning more bullish. I just read the recent management commentary, the bullish commentary coming on American Gemological Labs. That is something which we need to talk about. LGD, the lab grown diamond, is definitely at inflection, and now the industry is moving towards volume. Zyada volume aayega, zyada certifications karenge to simplify it for you, and also a good visibility comes for the revenue. Now, are they using AI to increase their operational efficiencies? That's what we'll try to understand, and if yes, will the margin outlook go up? And the volume growth, pricing stability and operating leverage already exists. So company is reiterating that statement. So net, the outlook remains pretty strong. And of course, Indian government recently standardized a terminology for this lab grown diamond. So more you see, more quantification happens, more regulations come in, so more certifications also come in. So it's a strong thumbs up when it comes to the outlook. Let's see what's the final rating in the KYC segment for International Gemological Institute, and largely income statement, balance sheet have been really strong. Cash flow is decent. The concern is definitely not here. The concern comes in the street cred because the returns haven't come in for the investors, and at the end of the day, everybody wants returns. Also, let's look at the valuations. Largely, we could say neutral, but the outlook is something which the management is quite bullish on. So let's give in the entire KYC ratings for the company, and right now is going to be 5.5 out of 8. It's largely in line to positive from the average numbers which I generally give, but there is an interesting take. There's a history of this company coming in KYC for the third straight time they have come. So let's give you the entire picture. First time they came in March 2025. It was around 5.5 out of 8, first time from the IPO. After that, early this year they came, a minor dip, but now they have regained it back in the May 2026 in today's KYC as well. So this is the entire KYC report card for IGI as well. But to understand more, we'll be joined in by the management. He's Ishwar Iyer. He's the global CFO of this company, and interestingly, he has been at this helm from October 2023 onwards. Now we are joined in by Ishwar Iyer. He's the global CFO at International Gemological Institute. Ishwar, it's always a pleasure to have you in NDTV Profit. And of course, first foremost, a good set of numbers coming in Q4. Of course, Q3 also last time we spoke was strong as well. And the question is, does this momentum continue in FY27 as well? Because there is a hint of uncertainty all throughout the globe. So how do you take that?
Yeah, thanks. It's a pleasure to be on the show. Thank you for having us here. Yeah, we've had a extremely strong, actually 4 quarters, 4-5 quarters post the listing. Yes, there are uncertainties that we all are grappling with. We've given a full year guidance again at around 15% of revenue growth and 20% EBITDA growth. So, and as the year starts, it's been a strong first, quarter 4 for us now.
So right now you have, and right now you have changed, shifted, right. So will there be any accounting adjustments also in the coming, or
no, there is no accounting adjustments. It's just that versus the classical 12-month reporting report out, I think we have now going with a 15-month report. And just to ensure that there is adequate comparatives, etc., our investor deck is also capturing a corresponding 15-month comparison versus for the previous period as well.
Exactly. So as an analyst, it got a bit like, because too much on me, like 15 months and 12 months. But anyways, the certification segment, the volume growth, you spoke about the numbers, it's fine, but the certification, is there some kind of a tailwind happening here? Because you mentioned in your presentation that now LGD becomes a volume play. What does that mean?
See, I think just to give a context on how the LGD is evolved, the US market has been the first adopter of lab-grown diamonds. All of the manufacturing sits in India, and that's the reason most of the certification also happens here in India. So it's basically a made in India product with a made in India certification body as well. And because of the affordability that it works with, I think there is a lot of scope for the Indian consumer also to come into play. And that is what we are also looking at, because while it's today in the US, most of whatever gets manufactured here goes to the US. In due course of time, I guess the Indian consumers will also come into the fray. And that's the trend that we're also seeing over the last 4-5 quarters, because if you were to look at our lab-grown jewelry certification business, it's pretty small now, but it's growing at a healthy 25-30% range in the last 3-4 quarters. This quarter was around 29%,
right.
I guess.
And
yeah.
the margins front also, Ishwar, I was just looking at it. There's a good contribution coming from the studded segment also. Do you think this trend continues? And if yes, what kind of margins we are looking at?
See, over the last 4-5 quarters, I think our margins has been pretty consistent. Plus, I think it's been always plus 1 or 2. But I think importantly from the company standpoint, there are significant investments that we are making. There is, I don't know whether you've been able to notice it, we co-sponsored the Ladies World Cup last year.
Okay.
We are also now partnering with Gujarat Titans for the IPL.
Anything on the FIFA World Cup?
Not yet. We'll have to think through that. But I think we are also making significant brand investments, because the need for a third-party independent certification body is far more important today than the past.
So Ishwar, that means if you're doing a significant brand investment, so your expenses would be coming in. So a little bit of margin pressure would be there if you want more visibility.
We hope that with the volume throughput that's coming in, and just to address your first question as well, I think significant capacity additions are also happening in this segment, because as I mentioned, probably the Indian consumer also comes into play. There's a lot of retail activity also going on in terms of number of outlets that are getting open to sell lab-grown jewelry. So there is a lot of interplay at the moment which is happening. And with our operating leverage that we have, some of this volume throughput also enables us to therefore getting good cash flows from
And literally you do not have a major competitor in India, and you have most of the market share also. You're having a lion's share of it. I just wanted to understand, there's a lot of Middle East issues, West Asia issues coming in. You also have offices in Dubai and Abu Dhabi. Is there an impact there happening?
See, I think at the early onset of the war, obviously we are concerns. I don't think the business is that important.
So nothing coming on the numbers in first quarter?
Nothing that's come on the numbers, but I think we are very cognizant to ensure that our people are protected there. So business obviously takes a backseat when you have such issues there. So I think our paramount important aspect that we wanted to start with when the war started was to ensure that the people there is safe. But they've been able to manage the transition pretty well. I don't think there is too many issues.
So
we have an office only in Dubai,
is fine. Okay.
We have an office only in Dubai. It's been okay. I don't think there has been anything to worry about at the moment.
Right. And there's a lot of bullishness coming in your commentary for the AGL, the American Global Institute. We spoke about it. And this time we can see that the conviction coming in. If this conviction comes in, by when can this conviction come in your numbers? The benefits, when did that number start accruing, and why this acquisition is important?
Yeah, I think to address your last question first, this is a strategic investment that the company has done, because our services is restricted to diamonds. We wanted to enter gemstones, and AGL is a leading brand as far as gemstone certification is concerned. So that is the thought process behind doing this acquisition. But the important thing to also, for everybody, the audience also to know is, you can't scale it up overnight, because this is high competence, highly skilled work that happens. And this is a 10-11 man organization based in New York. So you have to build that sort of structures and infrastructure to do this grading elsewhere. See, what happens is with that, the skill set that they have, and the geographical presence that IGI has, there is a good marriage that happens. Now, how do you translate that into getting new offices in, because we have Jaipur is a very large market for gemstones in India. Thailand is pretty big, Dubai is pretty big, China is also getting very big. Now, how do you build that competence across the other offices in terms of recruiting skilled labor?
So it is still a work in progress.
Yeah, it's absolutely a work in progress. The integrations have happened. We have also talked about 2 months of revenue that seeped into our numbers this year. It's given us an incremental 2% revenue growth as well. But I think the
real chunk will come.
Absolutely, the real job starts now for us in terms of building that capability across our offices.
So we can expect 2-3 quarters.
I think
after
absolutely 2-3 quarters. I think let everything settle down at the moment. I think there's a lot of work that's gone in terms of integrating financial processes.
So it's going to take time, but nevertheless, on a full year basis, the benefits will start coming in. And the diamond prices, that's a concern. The prices have fallen, and I'm talking about the last 2-3 years. The stock, you could say the price is down 50%. So does that impact the volumes or the purchasing decision?
I think while the prices corrected sometime in 2024, but we have seen a lot of stability since then, because beyond a certain base price fall, the profitability and the commercials of the growers also get impacted. So we have seen that sort of stability at least on lab-grown wholesale prices. But you must understand that the retail prices are significantly, they are holding firm, because they're like 5-6 times at price at what it's
the diamond prices.
Because there's a brand play brand at play.
But we have been seeing also so much retail
and investments coming
जैसे
in.
एक डायमंड का दुकान है तो उसके बाजू में लैब ग्रोन डायमंड की एक छोटी दुकान आ रही है, and that's what we have seen the trend happening across all the high streets which I have visited. I have seen that. But there's a gap widening. Is there a certifications gap widening between LGDs and natural diamonds right now?
No, I think, see, the 4 C's are what determine the commercial value of the diamond, be it natural or lab grown. So without the 4 C's, it's impossible to do a trade between the various players in the value chain.
And just for information, what are the 4 C's for the people who are tuning in for first time?
So this is cut, color, clarity, and the carat weight.
Cut, color, clarity, and carat weight. So these 4 things are there. You should remember that.
These 4 C's determine the commercial value of a diamond. It's akin to a 18 carat or 24 carat or a 9 carat gold. So this 4 C's is what determines the value of the diamond, and that is very critical. So regardless of whether it's natural diamond or lab grown, IGI provides 4 C's for both. So
right, that's pretty much interesting.
Yeah.
And the last question I need to ask is the market share, because you already have, there's a range there. I couldn't find it in the investor presentation. Last time we spoke, it was between 55 to 90% on your key categories. Any gain which has come in any category?
You see, I think for us, an important prerogative has been to get into natural diamond space because
that's roughly 65% of your revenue.
I think since India we have probably that level, but globally we must be around 20-25%. So I think the largest market obviously is the US. So that is an important aspect for us to drive, and that's something that we're trying to work on. The natural diamond business also grown 18% over the 15-month period, and there was some 10% this quarter.
Right, that's a pretty interesting take coming in. But yes, this time from the last time we spoke in KYC, and from now there is a stark improvement, in the company's vision as well. So very interesting story. It's always a pleasure to talk with you, Ishwar.
Same here.
And that's the interesting story of International Gemological Institute. And stay tuned to KYC and NDTV Profit for these interesting stories.
India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open. Your favorite market show just got better. On NDTV Profit, for your profit.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Watching Your Money Matters here at NDTV Profit. I am Mahima Vachrajani, and this is a show that solves all your money problems and helps you grow your money. And that's why today we thought of taking up two very, very interesting topics. The first one that we are going to talk about is how you can invest in global markets via the Gift City. What is Gift City? How you can go ahead and invest? What is the minimum requirement of amount? What are the tax implications, etc. is what we are going to discuss in the first part of the show. And the second part of the show, we are going to talk about how you as a retail investor can actually invest in unlisted space, not just stocks, but unlisted businesses. How can you be a part of their growth? So these are the two very interesting topics that we're going to take up in today's show. But let's start with how can you go ahead and invest in, via Gift City in the international or global markets. And to take this conversation ahead, we're joined by Jay Kothari, who's the head international business at DSP Asset Managers, joining us now. Jay, thank you so much, first of all, for taking out the time. I'll start with a very basic question, for a lot of people to kind of understand as to what exactly is Gift City and how does it allow Indians to kind of invest globally?
Sure, Mahima. First of all, thank you very much for this opportunity and for having me on the show. In terms of the Gift City, it's, very simply put, GIFT first, it's the Gujarat International Financial Tech City. So that's the kind of, the extended version of what GIFT usually kind of people mention. And it is India's answer to what, Mauritius was or Singapore is, or whether it's Ireland. So when it was an intention for having a global financial hub right here in India, and it's kind of based in Gujarat, in Gandhinagar. So the initial kind of thought was getting the offshore onshore. That is, the fund managers who used to manage global capital from, say, Singapore or Mauritius or, rest of the world, bringing back to India or getting those kind of the brain drain, which usually happens, to get them back to India and kind of manage capital from India. And there is an extension to the GIFT City as well. So it was not only about managing global capital into India, but also our own money, that is your money, my money, all the retail investors or other investors in India who want to invest even globally through the GIFT City, they can kind of invest. And I think a very important kind of aspect, which is probably not known to many, is that GIFT is also a unified regulator. So just the way we have, SEBI, RBI, PFRDA, IRDA, the IFSCA kind of subsumes all the regulators into one. So, even from a regulatory standpoint, it is a very kind of strong structure. And it's nothing, just the way you invest into a mutual fund, you can invest in the GIFT City.
Perfect. So then the question, right, is that how can a retail investor, go ahead and invest via GIFT City? What is the exact procedure?
Sure. So again, most of my answers are thankfully going to be very similar to what I would answer in a mutual fund format. So it's the same thing you do in a mutual fund format. So let's assume you are an independent or an individual investor. Either you are